coming week, send the appointment letters, select the auditors, send them the consent letters. As usual, RBI this year has come out with one master directive, which is, very positive step. They have combined all the circulars which were issued in last 4 or 5 years. Last master circular was somewhere in 2015. So we, all of us, need to refresh ourselves with this new directives which have come. Also, last 2 years have been, the entire economy is suffering because of this COVID-19 pandemic. And so also the advances, the banking business. And we as an auditor needs to be very, very careful, very, very thorough with the guidelines, relaxations which are issued by Reserve Bank of India from time to time. And these type of seminar are very much necessary to keep ourselves upgraded, whether as a speaker, whether as an attendee, whether as a coordinator, so that we get to know a lot of things and we update ourselves for the bank branch seminars or the bank branch statutory audits. Friends, this is the new term. This is the first physical program. We attempted this physical program thinking that let's see that what is the overall response. However, we find that more than physical, there are online attendees in this program of bank branch. Today, we are going to do the publication of the bank branch audit handbook, which is every year compiled by the Western India Regional Council. Chairman CA Murtuza Kachwala has been traveling. So on behalf of entire WIRC team, first I request CA Shweta Jain, Secretary of Western India Regional Council, to welcome all of us and give her words of wisdom. Shweta ma'am, please.
Thank you. A very good morning to all of you. My colleague in the council, treasurer, and chairman of Banking and Finance Committee, CA Piyush Chandak, CA Ketan Sayya, Vikasa chairman, our speaker, Giriraj Soni, and all my participants. I'm extremely delighted to see you all so early in the morning, physically here, and people are attending, so many people are attending virtually also. So on behalf of Western India Regional Council, it is my great pleasure to welcome you all on the seminar on bank branch audit. Friends, at the outset, let me congratulate and compliment to Piyush Chandak and Ketan Sayya for designing a very thoughtful, result-oriented program, start with audit planning to expectations from the auditor of the banks. So since bank audit seasons are going to start, so be ready with all your backpacks and perform well. Friends, stakeholders keep tremendous trust on us. So it is our duty to live up to their expectations and work in the best interest of public at large. Since we have to finish our audit in a very short period, so preliminary preparations, proper planning and proper time management is really important. Also, quality is at most important. So we have been hearing now and then about deteriorating image of chartered accountant, and bank have reduced the number of audit branches. Last year, it was 90% advances were audited. And this year, instruction has been given for the 80% of advances to be audited. So maybe this time 20% approx branches will be less audited. So number of vacancies, this would take a big hit for chartered accountants. So as the deadline to finish work is 15 to 20 days, we need to ensure maintain the quality of our work. Our speakers are capable enough to justify the subject, and I'm sure with the very vast knowledge which they have, you all will be benefited. Going forward, WRC is geared up for the work to leave no stone unturned to all level to push the boundaries forwards to everyone. For that, we have a very dynamic team and visionary leader, Chairman CA Murtuza Kachwala. In his absentia, let me take the privilege to highlight his vision for this year and the theme lead and 5 goals which we have set out for ourselves for this year. So this year, WRC has very thoughtfully designed the theme lead for 22-23 year. And this is not just a colorful symbol or an abbreviation of leap towards excellence, achievement, and development, but a well-perceived program with various aspects that will ensure benefit of every chartered accountant in the region. It is a combination of 5 goals. The first goal is technical upgradation of small, medium chartered accountants with newer area of practice. The second goal is bringing efficiency and effectiveness in work of chartered accountants. The third goal, becoming a bridge between the various sections of the membership. And the fourth goal, making CA course more attractive. And the fifth and important goal is improving the image, overall image of chartered accountants, which is need of the hour, I can say. So we need a support from all of you in achieving these 5 goals. Let me also take the privilege to share about some initiatives in line with the chairman's vision we have started to create opportunities for those chartered accountant who is in need and the firms and corporates who required resources. So at WRC, we have already launched a 15 days program for all-round development of our women members, from resume preparation to GD to communication skill and various sessions with industry experts. Importantly, this program was include a campus placement drive. This was organized with the intention to bring back those women who have taken a career break into the main league or mainstream and help them to become a strong professional and financially independent. So I also like to share with all of you that we are working with flexi working hours and work from home facilities also to just untap of our female members' potential who cannot move out due to family obligations. We have lined up so many programs in coming days. Some of them is global scenario post-Russia and Ukraine on this coming Tuesday. Then we are starting a technology drive series, which will be organized every month, 5 days in a month from this Monday. The first series, the topic is Excel and Tableau Fusion. Then we have an in-day series for 4 days. Then we have a program on capital market up and down, and one event on cryptocurrency, investability, legality, and taxability in India, which is again need of the hour. On last week of this month, we are lined up this program next week and the last week. So second and most important initiative, which we are trying to start at WIRC is Easy Connect with ICI. It will be twice in a month, say every Thursday, 4 to 5 p.m. in the evening. This will be on the virtual mode where Chairman WRC, myself, and officials of ICI and WRC related to members and students activities, they all will be there online, and wherein members can ask their queries, they can put up their grievances which they must have been facing. So we will try to resolve it immediately as much as possible. And then if it is some pending, we'll try to resolve in next couple of days. So friends, your wholehearted participation is utmost importance, because it is you all who make us what we are. So we look forward to the fresh ideas and energy to bring to the RCA fraternity. At WRC, we all are there to support all of you. So without hesitation, please call us, please write us. With this, I want to thank all of you for joining in this beautiful morning. Happy learning. Thank you so much.
Thank you so much, Secretary Shweta Jain. I think great initiative of, coming forward to the members and asking them all their problems and trying to sort out them at one go online. A great thought process and very, very much needed work, which is required for members and the student. BFSI and Pension Committee has been always a vibrant committee, and we have a lot of program like this in BFSI and Pension Committee. Now we have our dynamic chairman, CA Piyush Chandak. I'll request Piyush Chandak to address all of you.
Thank you, Ketan bhai. First of all, I welcome all of you, all the dignitaries on the dais, off the dais, all the participants who are physically present here, and all the participants who are attending it virtually to this seminar. And I would like to thank the chairman WIRC for entrusting with me this Banking, Financial Services and Pension Committee for this year. The committee is going to publish a compilation of papers, which is the first book publication of WIRC for this year. And this book touches upon almost all the important aspects of bank branch audit. I believe it will be helpful for all of you, all the readers and all the bank branch auditors, that they will be getting all the important information in this short book. And I will also request to go through the detailed guidance note published by ICAI for the detailed queries. I take this opportunity to thank all the contributors, coordinators, and the team of our waiting, all the RCMs who have helped me to vet this book, and all the staff of WIRC to come out with this publication within the short span of time. Coming towards our today's seminar. This seminar is designed in such a way that you will be getting insight on all the aspects of bank branch audit, including practical aspects in the panel discussion. About one or two announcements. Our banking committee will be constituting a help desk during our bank branch audits to help all the auditors to solve their queries, and the details will be announced soon. And about the bank audit, I would like to take your attention to the code of ethics laid down by ICAI, wherein fundamental principles are laid down, and namely those are integrity, objectivity, and most importantly, professional competence and due care, confidentiality, and professional behavior. And wherein what nowadays we are expected from Winston Churchill, it says, it is no use saying we are doing the best. You have to got to succeed in doing what is necessary. And this is our duty. So I'll request all of you to please be patient and be very careful while doing our function. Thank you. Thank you for the interaction. Thank you very much.
Thank you, Treasurer and Chairman of the committee, Piyush Chandak. Piyush has been working very hard on this compilation, which we are going to publish today. So my compliments to the Piyush and entire team of the writers. There are almost around 20 plus chartered accountants who have, spent their valuable time in making of this book and in this publication. At the cost of even 2 minutes, I'll just read out their name. It is CA Gautam Shah, CA Vinit Jain, CA Vipul Choksi, past chairman, CA Shrenik Gandhi, Miloni Gandhi, CA Srinivas Joshi, past chairman again, CA Nayan Kothari, CA Sunil Sharma, CA Abhay Kamath, CA Dhananjay Gokhale, CA Arvind Nagda, CA Diti Shah, CA Ramesh Shetty, CA Kuntal Shah, CA Sonali Chandak, she is here. We welcome you, ma'am. CA Tushar Jain, CA Rahul Gupta, CA Abhijit Sanzgiri, CA Mehul Shah, CA Premal Gandhi, CA Vaibhav Singhvi, CA Pankaj Tiwari is also a speaker for the day. CA Hufeza Unawala, CA Gopal Dakkan. These many people have contributed, and from the WRC BFSI Pension Committee, we acknowledge their valuable contribution for spending their valuable time. Now it's a time to release this publication. So I'll request all the dignitaries on the dais to come forward. Secretary CA Shweta Jain, Treasurer CA Piyush Chandak, our worthy speaker CA Giriraj Soni, and CA Sonali is also here. I'll also request her to join over on the dais. Please come here. Thank you so much. Now we move on to the first technical topic, audit planning and certification. So as and when we start thinking of bank audit, we have to do a very good planning, and well planning is half done. So if you are able to plan for the bank audit, I think your half of the audit is done if you do the good planning. And we have worthy, knowledgeable, experienced speakers, CA Giriraj Soni. Sir, I welcome you to the WRC's this program on bank branch audit. I request CA Sonali Chandak to introduce today's speaker.
Good morning, all of you. I personally know the Giriraj Soni sir, and I remember Soni sir and his partner Niranjan Joshi sir always said, what is the right time to start bank audit planning? And the right time is at the end of one audit. When you complete the one audit, you should start the audit planning. But sir, sorry, we are late today. We should take the session on audit planning after completion of this audit in the month of April. CA Giriraj Soni sir is FCA DISA CISA, working with SADA and Parikh LLP, Chartered Accountant firm at Ville Parle, Mumbai. He is in practice for more than 18 years, and his experience in concurrent and statutory audit banks, including central statutory audit, information system audit of banks and stockbrokers, internal audit, management consulting on control review and IT related operations. He is speaker at ICAI for bank and computer related topics. Further, he is a faculty for certificate course on concurrent audit of banks. He is also a part of core group of members of IT committee and convener at BCA study circle at Bombay Chartered Accountant Society. I request Giriraj Soni sir to take the charge. Thank you.
Before Giriraj starts with the formal talk, as a mark of our token of our appreciation and love towards Giriraj, I'll request Secretary and Treasurer, both them to honor the speaker with the memento. Giriraj, please, you can start.
Good morning, friends. आवाज ही नहीं आ रहा है किसी को. This is the first session, not after lunch session. So we should be charged of who. Have you seen all the movies? How's the Josh? Yes. So that should be the first thing when we are doing the audit. And the subject which is given to me is again dry subject. So I have to put some Josh in that subject. So if you are all charged up, then I will also be charged up. So the planning topic is basically when you see planning, do you think that planning should come by your inner thoughts, or you should pen down something? I feel that planning is a very general phenomena. The thing which we are interested, we are doing the planning. For example, जैसे आपके घर में शादी है, आप start planning from the day. कब? 1 महीना, 2 महीना, 4 महीना. अभी nowadays रेलवे टिकट जल्दी बुक होती है तो 4 महीने पहले प्लानिंग करनी पड़ती है. So this is a general phenomena which I feel that planning should be in your mind every time whenever you are doing the audit, not only for a specific audit, but for everything we are doing planning. So similarly, we should look into the bank audit planning, and it should be based on your experience, based on your whatever experience we share, and based on the guidance note which is available. So a lot of the things which I will cover in my presentation. But before I start the presentation, I just wanted to mention that these are the pointers which I may highlight. But ultimately, that should not be taken as a black and white thing which you should follow. You should apply your own mind, because planning is, I feel, is very dynamic. It is not like that related to one bank, one branch. Every branch has got certain unique features, because when we are doing the audit, when we are doing the central audit, we see a lot of reports from the various auditors, from various SBAs, statutory branch auditors. And then we come to know which auditor has done planning, which auditor has not done the planning. Okay, so my point is that you should start planning, and it should be very dynamic, looking at the nature and type of assignment and nature and type of the branch. Okay, so with this remark, I start the planning session. Now this is said, failing to plan is planning to fail. If you're not planning properly, then obviously, as I told you, that whatever results which is expected from the audit, who are their reviewer? For example, if I say from bank branch audit, who is your expected, you can say the reviewer. If I say your reviewer will be statutory central auditor. Statutory central auditor will be your first reviewer. The second will be bank people, and third will be RBI. Okay, so there are a lot of people who are involved. So obviously, if something fails, obviously then ऊपर से नीचे सब जगह पे everyone is drilled down. So that's why we are saying failing to plan is planning to fail. Now, what are the various compliances when we are looking for the planning? We have to see a lot of compliances, and then some of the compliances required regarding that RBI compliance, ICI guidelines that we need to take. Now, RBI compliances, I wanted to know that whatever most of the people, you might be aware about the RBI guidelines, because that are freely available and that are in the public domain. But I wanted to highlight whatever the recent changes. Because if you see the last year, when I see the COVID period, after that COVID period, there are a lot of guidelines, there are a lot of changes, and frequently there are a lot of circulars, specifically related to MSME, related to COVID, related to restructuring. So all those recent guidelines, at least you should be aware about what are the recent guidelines. Then compliance with bank internal guidelines. Every bank is issuing their closing circulars. So based on the closing circular, you should plan your audit very well, because there are specific guidelines with reference to that particular bank. What are the typical issues in that bank, how the closing is done at that bank, and then what the auditors need to certify. Compliance with terms of appointment. Basically, You have to read very carefully what are the terms of appointment. If something is there which you don't want to accept, then obviously you can say subject to. But otherwise, you need to be thorough what are the terms of appointment. Compliance with obviously accounting standards and AAS auditing standards. The important part is that we need to complete our audit in time. Because generally, for example, if you see the branch auditors, they are generally given 5 days, 6 days. There are internal guidelines. Every bank has to close their own set of financials. Based on that, reverse calculation is done. And accordingly, very limited time is available to us. So that is why the planning, especially in relation to bank audit, is very, very important. Now, apart from audit, we need to also do some certification. LFAR is very, very important part. LFAR separate session will be there, and otherwise also there are a lot of changes in LFAR. So specifically look into what are the aspects which we need to cover when we are completing the LFAR part. Tax audit report I want to highlight in some of the cases, some of the banks, they have started that tax audit report is not forming part of your statutory audit. So be clear about that, because some of the banks, they are not including tax audit report as a part of your normal statutory branch audit. This is done centrally by some other auditors. So that thing you need to check very clearly whether it is a part of your audit or it is not a part of your audit. Then Ghosh and Jilani committee reports you have to certify, and then other certification work we have to do, whatever has been specified as per the bank guideline. Now something which we can do at the office level. So as I told you that planning start well in advance. So some of the, you might have got appointment letter, or some might not have received any appointment letter, but you are certain, you are definite that you are going to get some or other branch. So your planning should start from the date when you receive, when you are in that particular period, when you have received the appointment or about to receive the appointment. So what are the preliminary work we can do at the office level? So generally, if you see from my point of view, what planning I can share my experience, what we are doing is, as soon as we get the appointment letter, or we are generally already central statutory auditors. So we have, definitely we have to cover the quarter. So we have an internal team. For example, we have segregated banking team where we have highlighted that these are the people. So based on that team, what we do at office, we generally, likewise this session we are taking over here. Similarly, we take one session with our team and we explain them what is the expectation, how we have to do audit. So every person has got in your team different capabilities. Some chartered accountant may be there, some senior banker may be there, some article student may be there. So it will be a mixed type of a team when you are planning the audit. So we take a session with all the team members, and obviously the new person will require more training and the experienced person will require less training, but training has to be there. It can be a virtual session. I feel that one session has to be there, either physically or virtually. If it is, because nowadays most of the professionals are also working in some of the cases work from home scenario. So in that case, you can take virtual session, but a training session is must with all your team members. Whatever we are discussing today, similar things, for example, the ICA has come out with the referencer part, that book. So at least you can ask team, at least you read that particular book. This book, I have gone through that book in the earlier period, and it really helps to refresh ourselves. So that is, you can give all the team members one book. At least before we take the session, you come out, you read this book, and then we'll have a session. So something of that kind, that type should start when you are at your office. Evaluation of general internal control system in the banking industry. So internal control is, again, I feel that is a very dynamic area. I got some subsequent slide we will see, because when you are talking about internal control banking per se is important, because we know general industry control at other industry, but as far as the banking industry is concerned, you need to see certain specific internal controls. Then you have to prepare audit program, because ultimately it will help you in the peer review also, and to carry out your audit activities correctly in a planned manner. The important thing is the substantial testing and its execution. Because substantive text testing is, I feel that in case of a statutory branch audit, we need to evaluate the area where we can do the substantive testing, because in every area I cannot go into deep and I cannot dive and I cannot check all the things. So for substantive testing require a greater planning. So substantive checking, how you can idea it before we start the branch audit is basically if you have done audit in previous part or recent part. For example, if you are doing some concurrent audit and you have got certain issues, so that practical issues you note down and then you start substantive checking. Or if there are certain recent guidelines, so based on that recent guideline, if you come across, okay, this is the thing which might have certain impact. So based on that, you should put a substantive checking. For example, recently there was a guideline in June 2020, September 20, internal guidelines by RBI, and they have instructed all the banks that daily marking of NPA should start. And that was supposed to start from 1st June 2021. So most of the bank have started. But this daily marking of NPA, you can plan in your substantive checking, okay, whether this has been done or not. So I'm just giving one example. So likewise, when you are reviewing the guidelines, when you are reviewing something and it clicks in your mind, okay, this is the area, this is the material area for which I need substantive testing, just for my understanding, for example, whether the terms and condition or whether the regulatory requirement has been complied with or not. So for those areas, you need to plan in for a substantive testing. Then obviously, when you are at the branch or when we are at the office, not at the branch, then we can prepare the draft report based on the guidance note which has been given to us. Then there are various regulations. Audit under Banking Companies Act, Acquisition and Transfer Act 1970. You need to check appointment letter received from the bank before start of the work. Then accepted letter had to be sent to the bank. Other letter declaration, every bank has got their own format. So based on that format, you need to execute whatever the initial document once you receive the appointment letter that you need to do. Intimation to the previous auditors. This is the requirement that you get NOC from the earlier auditors. And you can mention in the NOC that please, whatever NOC has to be given, that is to be reverted within 7 days. That clause you can put in your NOC so that at least if somehow the other auditors is not being able to receive or not being able to respond within the time, at least your basic conditions are complied with. Then obtaining basic branch information. Once you receive the appointment letter, then it is very important that you know your branch. Generally, we say KYC, but when I'm talking on the bank audit, I say KYB. So you should know your branch, which branch you are auditing, what are the total advances, what are the total deposits, what are the concentration of the deposit, whether it is a retail branch or whether it is a corporate branch or whether it is a service branch. So something of that sort, you should have that basic information about the branch. Then obviously you can issue audit engagement letter. The format has been prescribed. You should prepare the audit engagement letter and get it signed once you visit the branch. Then it is ideal that you can send, because generally we are taking MR, management representation letter, for whatever work we are doing. So MR generally, whatever format has been given in the guidance note, and it depends on the type of the branches. As I told you, some of the points may not be applicable to all the branches. So better you prepare a draft and you send across to the branch manager or the concerned person at the branch so that it gets verified. Because otherwise what happens, जब audit complete हो गया उसके बाद हम MR लेने जाते हैं. So at that time हमारे पास भी time नहीं रहता, उसके पास भी नहीं रहेगा. So it's better that whatever MR which you are supposed to execute, at least get a draft vetted by the branch people. So whatever changes they want to do, at least they can confirm the changes. Sometimes you may not accept those changes. So this may be the scenario. So it is always a good practice that you can send MR in advance. Then whatever the format which are there, because if you see the banking, accounting and the banking format, so that format is entirely different. So you familiarize yourself with the format, third schedule of the Banking Regulation Act. Why the format is important is because most of the time we have seen that there are certain type of adjustment from one group to another group. Say example, credit balances in CC. So that credit balances in CC has to be separately marked out. So likewise, there are typical items when we see in normal course of audit, when we see that we are doing regrouping in general cases. So similarly in bank also, there are certain items, I may not say all items, but there are certain items which needs regrouping. And for regrouping, you should have idea of the schedule. Okay, within the schedule, how many items are there, usme kisme kaun sa GL aata hai. So likewise, you just see, because recently there are certain disclosure related changes in which regrouping has been done. So there was some RBI circular on disclosure. So you just go through that disclosure circular and try to identify if there are some changes which are intergroup related changes, inter-GL changes, for example, as per the requirement of the third schedule. So this we already discussed, RBI circulars and bank closing circulars that needs to be verified. So what should be the level of commitment? So commitment is even a fool can accomplish a task if it is were after his or her heart. But the intelligent ones are those who can convert every work into one that suits their heart. So when I see typically, for example, in case of bank, so most of the people are reluctant to do the bank audits. Why? They see the typical, there are monotonous type of work, especially not in statutory branch, but when I see the concurrent audit, there is a tendency that people say there's a similar kind of activity, bank audit mein kya hai? So that's why the earlier slide were there to just to have a motivation that whatever work we are doing, we have to convert each and every work into our requirement. So these are some of the auditing standard which I found that it should be kept into mind when we are doing the planning. So one is about SA 200 conduct of the audit. It talks about integrity, objectivity, professional competence and due care, confidentiality and professional behavior. Now the important part which I would like to about that one of the principle is professional competence. Professional competence talk about that when you are accepting the bank audit, then you should be capable of doing that particular bank audit. Okay, so this means that you should have some prior experience of doing any kind of bank audit related work. Okay, this is my level of understanding, which I want to convey to you, that you should at least have done some or other kind of audit in the banking industry, then only you should accept the assignment. Otherwise, you should not accept. Second is about professional behavior. So there in the past also we have seen a lot of complaints or a lot of issues because we as a central statutory auditor, we come to know or we communicate with various state statutory branch auditor and also the bank people. So we know both the side. Auditor kaisa hai or bank wala kaisa hai. So the thing is that I don't want to highlight at this particular forum, but what is professional behavior that you should keep into mind, and because other people aisa nahi hai, such to chupta nahi hai. So whatever way you want to do, you have to be very clear. You have to behave professionally. If there are some issues related to NPA, most of the time there are dispute related to NPA. So if there are dispute related to NPA, make it clear, make your own documentation. And if you want to leave, you leave it. Otherwise, don't leave it. So that's up to you. So that call or that whatever conclusion you draw, I'm not talking about any one particular NPA point of view, but any decision, any conclusion during your audit, if you want to draw it, then do it professional way. Then SA 230, audit documentation. Audit documentation talks about whatever conclusion you have drawn. Because in the statutory branch audit, we have to draw certain conclusion that whatever the balances which are reflected, they are correct and there are no anomaly. So if you are forming some opinion, if some, for example, some account is NPA or something has to be changed. So whatever conclusion you are drawn, that conclusion has to be documented. And it has to be planned and performed as per the standard on auditing. So basic documentation, which I feel that whatever conclusion, whatever issues we are raising at the branch level, so that issues and how they are resolved, at least that thing should be documented. Audit evidence. Audit evidence is very much useful to draw a reasonable conclusion to form opinion. So this is again, materiality is SA 320 talks about materiality. So when we are talking about the materiality, it is very important that you design the materiality level at the start of the audit. So how you can decide the materiality level? By reviewing the branch. We have already seen that KYB. You should know what is your branch. You should know profile of your branch. What is the profitability? What is the advances level? What are the deposits? So based on that, you can design the materiality level, because auditors need to comment on material misstatement. There should not, what is our audit, basic audit risk is material misstatement. So that should not be there. So for that, setting of materiality is very important. You define you in your audit documentation, you convey to your team, because most of the time practically कई बार हमको भी लगता है कि if some article has seen some observation, then he comes out with that observation and we discuss on that observation without thinking whether the observation is material or not. So that's why it should be communicated. Not only you should know about the materiality, but you should communicate to your team also that this is the materiality level, and it can be depending on the individual area. For example, advances, you can say separate materiality level. For income part, you can say separate materiality level. Most of the banks, if you see the closing circular, they have also given that in one bank, we know that they are saying that no MOC should be passed for less than 1 lakh. So this is their internal materiality level. So MOC, you all must be fair, knowing what is MOC, memorandum of changes. So subsequently also we'll see MOC. So the point is that materiality you should set at each and every level, and that should be communicated to your team very well in advance. Then SA 315 talks about entirety in its environment. So I already discussed that when we are doing the bank audit, so you should know what is your bank. Before knowing the branch, you should know what is the bank, what are the controls, what are the key management, and how the controls are operating in that particular bank. Because when you are seeing branch is only just one small unit of a bank. So you should know what is the regulatory environment, what are the internal environment, how the various functions are carried out at the branch level. And one of the things which you can know about the environment is about MIS. So whatever information system, what is the management information system? Because every bank or every branch has certain internal set of rules, how they communicate the information from branch level to regional level, from regional level to zonal level, from zonal level to central office level. So there is an information flow from where the information is flowing, what are the information they are sharing to the top management. So some of the time nowadays CBS is there. So although a lot of information is taken from the system itself, but still there are certain other issues, certain reporting which needs to be done at branch level. So you can understand when you are discussing with the branch people, what is your MIS and what is your reporting structure. So why this documentation are important is for peer review and for quality audit review. Because definitely if you are doing the branch audit, it will come under the preview of the peer review. So you should adequately do the documentation and preserve it for subsequent review. So these are the basic requirement what you should know, have the knowledge of the economy, because when we are banking industry is directly a reflection of the economy. Whatever changes are there in the economy, they will obviously reflected in the banking sector. For example, recently there is a war between Russia and Ukraine. So what is the impact of that war? That SWIFT system is there. So they have disconnected them from the SWIFT system. So SWIFT is directly connected with your banking system. So whatever inflows and outflow which are coming, so that are obviously getting affected. So this is how you should understand if there are certain changes in the economy level, what impact it could have at a bank level. Then banking industry also you should have what are the recent development or going to have, or what are the recent development which has happened in the banking industry. For example, recently in the budget, it has announced that RBI is going to come out with digital rupee. Then again, something has been discussed about the blockchain. So how this technology, how this development are going to affect the banking industry. So that you should have independent analysis when you are doing the branch audit. Then government policies, what are the different government policies which are impacting the banking industries? Then specific rules, regulations which are applicable to the bank per se. So what are the rules? What are the accounting policies? Generally, we all have we are reading annual reports. So you should at least know what are the important changes, important regulations, which are applicable at bank level. For example, recently some of the banks have changed their policy of recovery in NPA. So whenever there are any recovery in NPA, how it should be apportioned, whether it should first be transferred to interest or it should be apportioned to principal. So this is one of the changes which I am discussing. Likewise, there can be changes in the particular bank. So best way is you can go to the annual report and you should know what are the changes. Then what are the products which are handled by the bank? Now banking is, again, as I told you, is a very dynamic field. In dynamic in the sense they keep on changing whatever the changes which comes in the environment. So based on the need of the customer, based on the need of the economy, they keep on innovating, they keep on introducing new products. So recently, I'm just giving an example. In case of Union Bank, they have introduced one MSME credit card. So this is just a one product which I'm saying. Likewise, there can be various new product. Now the point here is when you are doing the planning, the normal product is okay. But when any new product is introduced, any new line of activity has been introduced in the bank, then obviously there are a lot of changes which needs to be done not only at organization level, but at the system level. So ultimately the system CBS or other application will be there in which those changes will be reflected. So any product changes, for example, in case of deposit, there are a lot of new products which keeps on coming. For example, abhi with Dhanteras aa gaya, to Dhanteras ka special product nikal diya. So this may be very lasting for, for example, 3-4 months. So there is a short-term product. So how they design that product, whether that parameters and everything has been fed into the system and whether that is working properly or not. So this is something which you can plan in your audit if there are any recent product changes in the system. Complexity involved. So there are, if the process is complex, then obviously you need to devote some time to understand what are the changes in that particular or how the product behaves. Because most of the time I found that practically everything is, if you go to the branch, sir, everything sab to system mein ho raha hai, we don't know. So simply clearing hota hai, wo bhi unko nahi pata kaise clearing hota hai. So you should know something basic ki bhai ye activities ho rahi hai, kaise ho rahi hai, how the things are moving. So at the branch level, there are a lot of people may not be aware, but definitely I have seen that every bank, they are having a good internal system of issuing internal circulars. So for each and every activity, they keep on issuing internal circular. It may be from different department. For advances, to advances ka alag se circular aayega. IT ka rahega, to IT there will be different circular. So likewise, there are various type of circular which are continuously issued by the respective department. So if you want to know certain thing, you can go to their intranet and then you can ask, I need this circular, I need this circular. So some of the branch manager we have seen they are very good. If you ask for any information, they will definitely provide you on the spot. So some of the branch manager are really very good. But if they are not good, then obviously you can ask them, I need this circular, or you can discuss to central auditors, or you can discuss to the central office level. Okay, so my point is that if we are not getting the information, then we should flag it that we are not getting the information. Then we have already seen auditing standards. FEDI guidelines, yeah, some of the, if you're doing the audit of the Forex branches, then you should know about what are the FEDI guidelines and how the transactions are routed. For example, in case of LC, in case of BG, what is the exchange rate, what are the tenure, all these have been defined in FEDI guidelines. So you should have some basic idea about the FEDI guidelines when you are doing the audit, especially in case of branches. Now your planning should also include something about time and manpower planning. How much time I'm going to devote, how much time my team is going to devote. Now this thing should be keep handy when you are doing the audit for yourself and for your staff also. What is your audit program? So if you see the guidance known on bank audit, detailed audit program, sample audit program has been given. But then you should, as I discussed, that it is not necessary that whatever areas which are mentioned in the draft format will be applicable to your branch. So you should be clear which point is applicable, which point is not applicable. Accordingly, you should change your audit program, because most of the time I found that documentation where people are just copy pasting the audit program. Okay, ठीक है, ये आपने documentation के लिए कर लिया, that is a different issue. But you should take it in another way around, that you should prepare your audit program based on what are the things which you are going to do. So audit program बाद में नहीं बनना चाहिए, audit program पहले बनना चाहिए. That is what I want to say. So it should not be for the mere sake of documentation. It should be prepared in advance. Then recently IFC has been made applicable. So IFC, internal financial control review, that has to be done. But IFC is done at a bank level by some other auditors. But some of the point, because if you see the banking industry scenario, so some of the points, or say most of the point controls are at centralized level. So controls may not be there at branch level. But what banks have done, they have, especially in our bank, what we have done, we have designed one sample checklist for the branch auditors. Although it is not mandatory if you see the signing point of view, but it is forming part of the closing set. So the branch auditor has to comment whatever the internal controls which are there at the branch level. Advances, deposits, there will be different type of control. So based on that control, you need to comment and you need to verify. So if that is a part of your mandate, then be clear about that also. You need to go through the IFC checklist, which has been provided by your bank. Then you should, when you are planning, then you should cover all the aspect, liabilities, assets, income, expenditure, and off balance sheet item also. So these are the, it is not that you focus on only particular advances, because when we are talking about many of the friends, they are saying advances कर लिया मतलब bank audit हो गया. अरे ऐसा नहीं है. Apart from advances also, there are various aspects which we need to sign. Okay, so cover all the aspects, not only advances. However, special focus has to be given on advances, IRAC norms. Because most of the time when RBI people are reviewing your document, they are commenting on the divergence. So for that sake, you need to give special focus on advances. So that's why I told you that your audit program is important. How much time you are giving to advances? Okay, so if you are defined in advance, that will be good, so that all areas can be covered along with the advances. Then finally, I feel that when you are doing the planning, there should be adequate provision for review of the information. For example, most of the time what happens, किसी एक ने काम कर लिया, but वो काम करने से ही हम audit report बना देते हैं. That should not be the case. There should be a maker checker concept. When we are talking about review, it's a maker checker. If someone has done some observation, then there has to be some review. Obviously, you cannot do review of each and everything, but then you can set the criteria when you are planning, when you are doing the documentation, what needs to be reviewed and who is going to do the review. For example, अगर review of junior से कराएंगे, तो that will not have any important. For example, in our case, what we have a mechanism that some of the other senior partner or some other partner is doing the review before closure of the audit. So that review has to be done by default. आपको review होना चाहिए, because review will give certain additional input कि ये चीज होनी चाहिए, ये चीज नहीं होनी चाहिए. It gives a different perspective. So already discussed, identify the thrust area, set maturity levels, lay down overall time schedule. Training to audit staff, I already discussed. Special skills if required, that is for bank audit, I think that special skill is required about CBS. So if you are doing audit in a system environment, then at least you should have some basic knowledge about that CBS. Now, how you can do that? Because practically हमने CBS तो देखा नहीं है. So what I prefer when you receive any appointment letter is a practical suggestion that wherever you are doing the audit, so when you receive the appointment letter, you can ask your junior team, or you can ask identify 3 or 4 different people who you think that they are computer savvy, tech savvy, and then you can send them well in advance. And as I told you, then in the guidance note, there is a detailed write-up on CBS. So there are various commands. So your team can go into the system and they can check whether the commands which has been given in the book, they are actually running in that system or not. Because every CBS has got certain or other functionality. So it is advisable that you send your team well in advance and then ask them to check whether the CBS command which is there, whether they are working or not, and whether the reports which is generated, they are correct or not. So this will be really helpful when you are actually doing the audit. So before start of the audit, before you can say 31st March, you can plan that activity when you are visiting at the branch. So at least you have some basic idea about CBS. Then you identify what are the weak areas identified during the audit. So as I discussed in the beginning, substantive testing. So for substantive testing, you need to identify what are the weak areas. So that you can identify either looking at the previous year documentation or based on your experience. If you see this is the weak area, so you can have some more focus. Also, during your planning, you should plan in advance about physical verification of cash and other securities. So generally, statutory auditor is not expected to verify, because whatever we have seen, because generally concurrent auditors, they are doing physical cash verification at the end of the year, 31st March. But obviously it will be a good comfort to you if you can plan, include in your plan about physical verification of cash at year end, because you have to certify the closing figures. So you can also plan in your activity that whether you want to carry out physical verification, and if you want to carry out, up to what extent, whether you want to do only cash or other security item also. Then need to focus about the frauds which have been happened in the branch, and then sundry asset and suspense account. This I found that is the gray area, or I say not focus area when we are doing the audit, because many of time I have seen certain branches where we as a statutory auditor, when we go for review, we find that there are a lot of items pending in sundry and suspense. So sundry suspense, one of the reason which I feel is that lack of knowledge about the banking industry. So or a professional, most of the professional, they don't know what is to be seen in sundry and suspense. So you be clear about, if you are knowing, it's a good thing, but if you are not knowing, then at least have that curiosity in your mind कि suspense में क्या suspense है. Okay, so suspense में why? Because generally we have been taught when we are doing articles, if तो हमको पहले बताया जाता था, first day जाना है, trial balance उठाना है, any item suspense में है तो check करना है. Because earlier कुछ भी नहीं मिला तो suspense में डाल देने का. But banking में it is not like that. Banking में suspense are and sundries are used for different purpose. They are temporary accounts. So you should see though that any entries which are outstanding, what is the nature of that entry, how long it is outstanding, and whether it requires any attention. Because some of the frauds which has been discovered, that is only carried out through suspense and sundry account. So you should be clear about the suspense and sundries. Give some more time in understanding what are the items which are there in sundry and suspense. Then as far as sampling is concerned, I generally believe that this is the ideal scenario which you can plan when you are doing the audit. So there are different type of advances, fund-based and non-fund-based advances. So cash credit, you can say 25% to 40% of the sanction value and 25 to 40% of the renewals. So sanction means these are new sanction, renewal means they are already there and they are renewed. So both type of CC should be covered when you are selecting the sample. OD, it can be 50% or 100% against security, 5% to 10%, because generally when I see OD is secured, backed by security. So that's why a less sample size in OD will be good. Clean OD without security, that you can increase the sample size. Term loan, it can be 20 to 30% of sanction. Import, export, 15 to 25% of the sanction value. Most of the time when we are checking the advances, so advances, if you select any party, if you say top 20 borrowers or top 10 borrowers. So when you are seeing that particular borrower, so obviously that borrower may have overlap credit facility. For example, borrower may be having CC, borrowing may be term loan, he may also be enjoying BG. So that obviously by default will be included in your sample size. But apart from that, because generally we have seen that we select top 20 borrowers, but what about the rest? So top 20 में, for example, OD किसी ने दिया ही नहीं है, तो क्या होगा? So that should also be seen when you are combining your sample size. LC, BG, LOC, these are the again sample size. These are the just based on our experience we have noted down, but you can also include less or you can increase your sample size based on your own experience. So guideline says 10% of total advances branches or 10 crores, whichever is lower, which has been mentioned, also mentioned in LFAR. So those things you can check. Now take up one idea, make that idea your life. Think of it, dream of it, live on that idea, and let the brain, muscles, nerves, every part of your body be full of that idea. And just leave every other idea alone. This is the way to success. And this is the way great spiritual giants are produced. Others are mere talking machines. Okay, so a point here is just for our motivation that when we are doing audit, then we should think only for bank branch audit only. We should not think anything else. Okay, so this is how the success comes. And it is practically happened. Then when we are doing the audit, so there are a lot of ideas which keeps on coming. अभी मैं बोल रहा हूँ तो शायद इतने आइडियाज नहीं आएंगे, बट प्रैक्टिकली if I see the advances file, मुझे सारी चीजें याद आ जाएगी, ये करना है, वो करना है. So your mind should be focused when you are doing the bank audit, because we have first of all very limited time, and then within that very limited period of time we have to cover so many things. So you have to do it with your commitment, with the complete focus. So groundwork before starting the branch audit, we have seen what needs to be done. And when we are at the branch level, when we are doing actually the transactions, when we are doing the audit, so then how we should proceed. So when we are going to the branch, we should have first feel of the branch by going through the various reports which are available at the branch level. So the very first report we ask is about the concurrent audit report. So you should see first whether the concurrent audit report is there and whether the latest report is there or not. Because most of the time when we are visiting, so generally in the first week of April, so that time March report may not be finalized. So you should ideally see the February report. And if it is not there, February to latest kya hai, December ka hai, so that you need to check, and then you need to form your opinion. You need to discuss whether there are any observation which requires your attention. Now, when looking at the audit, because current mein to aapka compliance nahi milega, but what about the previous audit report? Generally, we see only audit report, but we don't ask for the compliances. So every bank has got their internal system where your audit reports are closed. Concurrent audit reports are closed. So you ask them how the report has been closed, what are the compliances? Because just example, if they say in one of the June audit reports, some auditor has mentioned that DPN note has not been signed. Okay. Then subsequently the branch has complied, they've done the rectification. So when we are doing the audit, so आप plainly report देखेंगे तो there may be so many observations. तो कौन सा देखना है, कौन सा नहीं देखना है. So you ask for the compliances. Compliances में whatever pending observations is there, that only will be reflected. So better way is, do you ask for the compliances of the concurrent audit report which are not closed. Obviously latest report will not be closed, and that will be most relevant because most of the renewals are happening in February and March. Okay, so February and March report will be your most relevant report. Then LFAR report, last year LFAR report, you should check what are the points which has been mentioned by the earlier auditors and what are the compliances. Specifically in LFAR, there is a special column for the auditor's comment. Okay, so you read that whether any comment has been given by the auditors. And obviously, as I told you, compliances you have to check. Inspection report, if there are any inspection, there have been internal auditor. Normally, RBI inspection will not be at the branch level, it will be at head office level. But obviously, top 20 branches are there, then the RBI people may visit there. And some of the para or some of the information, some of the advances where divergence or something has happened, they have might be related to particular branch. So that thing you need to check when you are discussing at the branch level, whether any advances are there which has been reported or which has been commented by RBI. Then internal audit reports, if the branch, generally some of the bank has got a practice that they are carrying out some internal audit by the internal team of the bank. So whether any internal audit has been carried out, if it has been carried out, what are the compliances, what are the points for that particular internal audit report. Apart from internal audit report, there are certain special audit report. So periodically, the bank inspection department or the banking, as per the requirement of the bank, they are carrying out certain special audit. So for any particular area. So if there are any, because we have done some specific special audit related to one housing loan segment. So likewise, there can be specific audit for any specialized area. So that if that audit is there, then you should ask for that report also. System audit report, obviously not applicable at branch level, but if specific, as I told you, as a special assignment, if it has been carried out, then you can ask for that report. Stock audit report, obviously in case of large advances, you need to check. Then any instruction for a special audit from the vigilance department, then you need to check for that. Revenue audit report, you can look into that revenue audit report. And we are looking at the revenue audit report, then obviously you have to check the compliance. As I told you that if something is mentioned, it has to be recovered in your revenue audit report. So when you are doing the audit, you need to check whether it has been actually recovered or khali compliance ke liye likh diya recovered, because revenue will have impact in your financials. So whatever revenue leakages which have been identified by the revenue auditors, that needs to be taken into account. So then review the year-end closing instruction. I already told you that there are specific guideline closing circulars given by the bank. So you need to follow that closing instruction very carefully, because what happens most of the time, there are certain or other information which has been mentioned. These are the things which needs to mention, but uske alawa bhi aapko kuch aur sign karna hai. So that closing circular will be your Bible. You should refer that closing circular of the bank. We already discussed that you need to review internal control, review RBI circulars. Now this is the virtual scenario. Because last year we have done a lot of audit in virtual mode. So just a virtual scenario, how the life was there in the virtual world. So this girl is sitting at her desktop upper stairs and saying, "Dear mom and dad, how you have been? I am fine. I miss you. If my hard drive ever crashes, I will come downstairs to visit you sometimes. Please send email me some food." Now this was their response to the online communication. "How you have been? Your mother and I am fine. We miss you. Please sign off your computer and come downstairs for something to eat." So the point is that in the last year, we have done the audit in almost virtual mode when we are asking something and they are giving something else. Maybe this session is also going on virtual mode. I am saying something, many people are listening. I don't know what is their expectation. So avoid virtual scenario. Point is that when we are doing the branch audit, branch manager or hum paas mein baithte hain. So why we are afraid? If any issue is there, you should go or ask him to come over with you, so that whatever issues are there, that get resolved. Otherwise, we send some email, फिर उसका response आएगा, फिर कब होगा, क्या होगा. So if you want to solve the thing, discuss with them and close the issues. Evaluation of internal control system is very important when we are discussing about the planning. But most of the time when I am discussing with all the people, and then I find that because there is a general tendency, internal control तो इतना big है branches में. So हम internal control क्या review करेंगे? What specific areas, what are the specific internal control needs to be reviewed? So based on my experience, I suggest that whatever material items, example, in case of a bank, especially in case of a branch, what is more material, what is important? If I see the revenue side, it is interest income on advances. Okay, this is the one area. So interest income कैसे generate हो रहा है? What are the controls? For example, interest calculation कैसे होता है in the bank? Rate of interest, product, correct? Multiplied by that, then you get some figure. So there is a product report which is available. So the two parameters are there. One is rate of interest. So how the rate? What are the controls related to rate of interest? That is what you need to check. Rate of interest कौन feed कर रहा है? Whether it is feed at the branch level या central office level. अच्छा, सेंट्रल ऑफिस लेवल कर रहा है तो फिर ब्रांच में उसका मेकर चेकर है, या अगर चेंज हो गया तो क्या होगा? सो लाइकवाइज यू नीड टू चेक व्हाट आर द इंटरनल कंट्रोल रिलेटेड टू योर मटेरियल आइटम्स, बिकॉज वन ऑफ द बैंक वी हैव सीन दैट their loan master data was entered at a centralized location. So branch people were entering the data and the centralized branch was only checking the data. So there was a adequate maker checker concept for feeding the master data in the system. So similar kind of checks you can see what are the internal controls which are very, very important, or you can say material items. What are the internal control related to those material items? Then areas where deficiency have been noticed in the earlier audit report. So we have discussed in the previous slide what are the various reports we need to check or we need to review. So when you are reviewing the report, then you have certain ideas. Okay, ये report में ये issue आ रहा है. Then what are the internal control? For example, अगर एक ही type के revenue leakage बार-बार आ रहे हैं, so what are the issues? So it means definitely there are some or other internal control related issues. So those things you need to focus and you should plan when you are doing the audit. Now this is the slide which I just wanted to have a focus because when we are doing the audit, so nowadays if you see back end, the CBS is there. So CBS is not the only system. So when we are discussing in the previous slide, we discussed about internal control. So internal control में CBS के अलावा what are the different applications or the different software which are interacting with the CBS. So this is just a gist of the software, which I am not discussing in detail, but just wanted to highlight that CBS के अलावा भी बहुत सारी चीजें हैं which are interacting with your system, and what are the internal controls that we need to just have an idea. So if I see CBS के अलावा there are treasury software. So treasury is a separate application. It may or may not be a part of CBS. Then GST, all of you know, this is a very complex system. So banks are also using certain different software from where either the data is received or the data is sent. Then these are payment settlement system. Generally, recently RBI has given a separate guideline that when you are doing the audit, then these all payment settlement, or earlier we are calling that as a service branch. So service branch are also there as a part of your audit which are selected by the bank. So if it is a service branch, then what needs to be checked? So these are the various payment settlement system. You can say ATM, NEFT, RTGS, UPI, IMPS, automated clearinghouse. So these are various types of channels, I can say, through which the information or the data is coming into your system. So just you should have what are the controls कि वहां से आ रहा है नहीं आ रहा है, because if you see the controls, every branch has got different type of clearing account or different type of control GLs. So those control GLs you can look into that particular branch when you are doing the audit. So what are the control GLs for clearing ATM transaction, for clearing IMPS transaction? So that control account ideally should be nil. और ज्यादा से ज्यादा एक अगर क्लियरिंग अकाउंट है तो 1 और डे का बैलेंस रहेगा, 1-2 दिन का. So this type of thing you can check when you are looking at the internal control. Again, CTS is again a separate system. FAMS, fixed asset management software, it is not a part of CBS. Then ALM, asset liability management, AML, anti-money laundering. Some of the banks are also using loan application system, which are used for creating the documentation or preparing the sanction and all this. So these kind of things, softwares are interacting with the CBS. So just to give a overall thought that we should evaluate the internal control, looking at the system also. Now, when you're doing the audit, analyze and evaluate the errors in the sample selected. As I told you that when we are doing the audit, there might be certain areas where we may find certain more focus is required for substantive testing. So that thing you can decide when you're doing the actual branch audit. Then get the rectification report or MOC pass. So this is very important. Most of the time, as I told you, that materiality level. So MOC is to be given at a materiality level. For example, more than 1 lakh का आपको MOC देना है. But if during your audit period you come across certain observation कि ये 1 lakh से नीचे, example 50,000 का आपको कोई observation मिला. So what you are going to do? Either you will drop the observation या क्या करोगे? So most of the time we had a practice. We generally ask the branch people, at least आज के दिन में तो rectify करो उसको. So instead of passing MOC, you get it rectified. For example, किसी का processing charges नहीं लिया 75,000, ठीक है? But it is not coming into my material threshold. But since you have identified, you suggest branch at least आज की date में तो recover करो. So if it is MOC not to be passed, then at least get it rectified at the branch level. Work as per the audit program, because audit program help us to complete the audit as per the schedule in the time. Now this is just a format of MOC in respect of income, number increase and decrease. So income, expenditure, asset, liability, NPA, all these are the format, various heads in which you have to pass the MOC. So most of the time I found that this MOC part is not clear to branch people and also to the auditors. Okay, so that's why there are a lot of corrections which are happening at the centralized level. So you should go through very clearly what is the impact of that MOC. For example, if I want to increase the NPA, so how NPA increase will have impact on which head. So if you are increasing NPA, you have to show it properly. Similarly, for example, if you are passing rectification entry, so it may have, as we know, debit credit. For example, processing charges not recovered. So processing charges will have impact on income part as well as on दूसरा impact कहाँ आएगा? Debit credit, debit advances. So advances को debit करेंगे. Generally we as a that is where the confusion is there. Debit, we accountant understand debit credit, but if you see this MOC part, it talks about increase or decrease. Okay, so this thing has to be clear because earlier in one of the bank we had an issue where earlier they in the MOC format they have mentioned debit and credit, and subsequently they come to know okay नहीं debit credit तो खाली auditors को ही पता है, बाकी किसी को पता ही नहीं. So you have to be very clear whether it help, which impact it will have. Now these are the statutory audit. If you see, if I see my essay, auditing standards, these are reporting standards, 700, 701, 705, 706, 720. So these are the various format which you should know. I will not discuss much upon that, but when you are giving the report, then you should look into those reporting standard also. Every duty is holy and devotion to duty is the highest form of worship of the God. When you are doing any work, do not think of anything beyond, do it as worship, as the highest worship, and devote your whole life to it for the full timing. So for the timing, when you are doing the branch audit, at least devote full time. दूसरा कोई काम करना है तो आगे पीछे कर लो, but bank audit के time only bank audit. Now we go to the second part, certification. So audit report is a reasonable assurance, but while we are doing the certification is an absolute assurance. Now, what are the different types of certificate? So there are closing set. If you see the closing set or closing instruction from the bank, they will give you what are the branch written which needs to be signed by the auditors. Obviously, audit report is your deliverable, is certificate. Then MOC, LFAR, tax audit report I already discussed, may or may not be the part of your audit. Now, these are the various types of other certificate. So these are generalized certificate. I'm not saying every bank will have same type of certificate, but these are a generalized list. But every bank has got their different set of certificate. So when you are seeing the closing circular, what you need to do is when you are creating an audit program, so आपको closing circular देखना है और उसमें जो certificate आ रहे हैं, for example, there are 12 certificate, 15, 20 certificate, list down all those certificate. So at least you are not missed. नहीं तो क्या होता है, most of the time practically it has been happened कि हमारा LFAR क्लोज हो जाता है, बाकी सब रिटर्न भी हो जाते हैं, बट सर्टिफिकेट कुछ ना कुछ रह जाता है और बोले सर ये भी रह गया, ये भी रह गया, ये साइन कर दो, ये साइन कर दो. एंड व्हेन इट कम्स टू द लास्ट मोमेंट, सपोज स्पेशली आप आउट स्टेशन ऑडिट पे है, आपका टिकट एंड एवरीथिंग, योर ट्रेवल शेड्यूल इज फिक्स, लास्ट में लाके देता है. एक बार, कई बार तो ऐसा हुआ, वन टाइम हमारा सब कुछ हो गया, देन ही केम विद अस, बोला सर साइन करना रह गया. मैंने कहा गाड़ी में आ जाओ और क्या करेगा. सो ही केम विद अस व्हेन वी आर गोइंग टू कैच द फ्लाइट, वहां पे जाके साइन किया. So these are practical challenges. That's why I'm saying ये अब certification part, you make a list in your audit documentation कि ये सारे certificate होने चाहिए. So at least उसको नहीं पता था, at least we know कि हाँ ये certificate है. Then these are the various things which we need to also note down. There is a guidance note. The guidance note is very comprehensive. It should be used as a ready reference, sir. Whenever you are doing the audit, at least carry that guidance note. कोई point आपको नहीं समझ रहा है तो immediately you look at into guidance note and you can get it clarified. Otherwise क्या होता है, nowadays आपको virtually मिल जाएगा, but virtually में आप खोलना, नेट इंटरनेट मिले नहीं मिले, I always prefer that you could have a hard copy preferably. Then checklist for advances, especially for if you are doing the audit program we have discussed, but I'm especially talking about checklist for advances. So you should have your own checklist कि advances में आपको क्या क्या 4, 5 चीजें, 10 चीजें check करनी है, because you cannot check entire thing when you are doing the branch audit. Closing provisions, entry, whatever the closing entries are there that you need to check it. For example, there are certain adjustments, example, provision entries. So do you need to check those provisional entries? And if you see the closing circular of the bank, they will give an idea कि इसमें आपको provision लेना है, इसमें नहीं लेना है. So those type of provisions or prepaid entries, you need to check it. Sundry suspense review, already discussed it. Certification requirement, I already discussed. Urine generation, one urine is sufficient. So be clear about that कि you have to generate urine when you are closing. So पहले तो आप नहीं बना सकते, आपको उसी दिन बनाना पड़ेगा. When you are finally closing, ऐसा नहीं हो कि audit close करने के बाद urine generate करो. Preferably is suggested that when you are signing, you should sign with urine. Then it is very important. Then we have discussed about certification. So certification may, since it's a absolute assurance, you need to have working papers with you. So most of the time क्या होता है certificate में there is a one certificate, but उसके जो backup papers हैं, all those backup papers generally are not kept. तो Excel file देते हैं but वो कहीं पे रह जाता है. So you need to prepare it or preserve it very well, especially in case of certification. Okay, so and if the data is given in Excel, then you should check whether the formulas or whether there is a manual entry in the Excel. So this I found that many times were missing. So most of the time we found that mistakes in certification. क्योंकि वो last moment पे तो बनाते हैं वो, and there is no maker checker. Certificate में there is no maker checker. So you need to be very clear when you are doing the when you are verifying the certification. Basel requirement, there are certain certificates which are related to Basel. I am not going to discuss in detail, but I just wanted to say that you should also be aware about the Basel guideline. कि risk rating, risk weight जो दे रहे हैं वो कौन से basis पे दे रहे हैं, कौन से area में किस type का risk weight आना चाहिए. So these are the basic requirement when you are signing. Then you should know what is the capital adequacy requirement. SMA and daily marking. SMA is again a very important when you are checking the branch advances. So what are the SMA account? SMA, there are three categories, 1, 2, 3. So whatever SMA categories are there, generally whenever I suggest that whenever you are doing the first visit to the branch, for example, जैसे आपका appointment letter आ गया, immediately when you are visiting the branch, उनको बोलो आज की डेट का क्या SMA है वो हमको रिपोर्ट करो. Because bank internally they are doing reporting to that respective head offices. So वो एक SMA का list आप check कर सकते हैं, and then you see, for example, if I visited on 15th March, so 15th March में what are the SMA and what is the position when we are signing, for example, on 31st March, what was the position in that particular account. So that will give you a handy insight, especially in related to advances. SCA interaction with your central auditor is really very useful. Whenever you have any doubt, you trouble your central auditors because they are ultimately going to use your report. If you are unable to form some opinion, you take their view also. And even on routine matters also, if you find that certain issue needs to be clarified, better you discuss with your central auditors. Now this is the last slide. So act, वो काम तो करना ही है. So get up and put your shoulders to the wheel. How long is this life for? As you have come to this world, leave some mark behind. Otherwise, where is the difference between you and trees and stones? They too come into existence, decay and die. So the last point here I want to mention is that हम बातें तो बड़ी-बड़ी कर लेंगे लेकिन काम नहीं करेंगे तो कैसे होगा? So ultimately, you have to act. So thank you very much. And if you have certain questions, I can definitely answer those questions. There are no questions. So thank you.
Thank you, Giriraj. I think a wonderful session. Very good opening betting by Giriraj in this 2020. Pre-audit, what we have to do, post-audit, what we have to do, the looking at the other software. See, the entire fraud which happened in PNB was because of that separate software where the foreign transactions were getting posted. So these type of practical hint, the person who is actually work can do. So, sir, it is बड़ी बड़ी बातें नहीं, आप बड़े बड़े काम करते हो, हमें पता है, इसीलिए आप यहाँ हो. and you are, one of the worthy speakers sought everywhere across all the branches. So may I now request CA Sanjay Savla to propose a very well-deserved vote of thanks. Sanjay bhai, please.
गुड मॉर्निंग फ्रेंड्स। आज सुबह जब हम सब लोग आए तो जोश सबका स्लो था। फिर सर ने पूछा हाउस द जोश, तो आपका क्या रिप्लाई था? हाय। सर का सेशन सुनने के बाद वैसे भी जोश हाई हो गया है। ही एक्सप्लेन्ड अस दैट प्लानिंग इज वेरी इंपॉर्टेंट एंड दिस थिंग्स वी नीड टू नो। Failing to plan is planning to fail. Sir, we assure you that we'll plan the audit in best way, and the members here will also do the audit in the best possible way. Friends, please join me with a round of applause.
I think there are online queries. I will take up those queries maybe in the last panel discussion. But if there is any specific question. So Giriraj, I think one specific question. Can we request for the access to the branches? Though this year, the pandemic is not there, but, people are habituated to work from home. So can we request to the branches for giving us, online access, and we can do the audit as we have done in last year? Maybe, we carry out a lot of checking from our office only, and then for, documentation checking, we can go to the branches. Is that something, what is your view on this? I'll get the. I think one more question is appointment letter issuance has started or not. Appointment letter issuance will start in the coming week. As I said in the opening remark, on the Friday or Thursday, the list of the eligible auditor is sent to all the banks. Giriraj, please, your view.
As far as the virtual access is concerned, because most of the bank which earlier were given access, they are still continued. So better will be you coordinate with the central office of the bank. And if they are providing virtual access, then you may get it, because I know some of the banks, they are providing the virtual access. So if that is the scenario, then you can continue. Otherwise, you will not be able to get access. But that will be bank specific. You need to take approval from the bank only.
Thank you. Any other questions, online or offline? So once again, we are thankful to Giriraj ji for sparing his valuable time and, addressing all the participants out here in Khimji Kumarji Auditorium, as well as those who are attending online. I request CA Sandeep Willingji to join on the dais, and CA Ashok Chaudhary also to come on the dais for the second session. लैपटॉप चेंज करना Friends, second technical session we have on long form audit report. And once again, we have very eminent experienced speaker, CS Sandeep Welling, who will be taking us through the long form audit report. Long form audit report was updated, revised in the previous financial year. And this is going to be the second year where we'll be implementing this long form audit report. Before sir starts, I'll request CA Ashok Chaudhary ji to introduce our today's second session speaker, CA Sandeep Welling.
Thank you, Ketan bhai. Good morning, friends. It's honor for me to introduce CA Sandeep G. Welling. He is by qualification MCOM, FCA and DISA. He is a partner of Kirtane and Pandit LLP, Chartered Accountants. He heads BFSI service sector for the firm and in charge of Mumbai office. He has over 30 years experience in assurance practice. He has also experience in assisting banks for risk management, IFC implementation in major PSBs and private banks, restructuring and turnaround strategies of banks, and forensic investigations of banks or specific transactions, instructions of RBI. He has also experience of borrowers restructure and feasibility exercise on behalf of the banks. He is an eminent speaker at various conferences, seminars, national as well as international, particularly for banking sector. Mr. Sandeep has been a member of various ICAI committees and expert panels that deal with various regulators relating to business law, especially with RBI for past 12 years, sorry. He is on ICAI AASB board that issues pronouncements on all audit related guidance to the members of the institute. He can be reached, Mr. Sandeep Welling can maybe reached at sandeep.welling@kirtanepandit.com. Thank you. Thank you for giving me opportunity to speak for him. Thank you.
Thank you, Ashok ji. In fact, Sandeep has been a very good friend. We have been, traveling together a lot, very, very modest person, down to earth. At least I have, kept learning continuously a lot of things from his wisdom. And I'm sure with his experience and vast knowledge on the topic, next session will be equally good. Before I request Sandeep to take this session, I'll take a privilege of honoring him with the memento. Sandeep, please take, it's all yours.
Good morning, everyone. It was really a different kind of a moment for me to receive memento from Ketan. We have, like he said, we have traveled together. We have been co-speakers on so many various seminars. We have shared rooms at various locations, and very happy to see you on the other side. So this is my first interaction with you like this. So I'm happy to be here. Hello. Yeah. Before am I audible? No. Yeah. Before I get started on the presentation, I would like to make some points which are pertinent for the purpose of our audit and the regulator perspective from and expectations from the auditors. See, we are happy that LFAR is now, even in seminar, is taking prominence, because I have always seen in my erstwhile days, LFAR has been the last priority for us. As a chartered accountant, all of us are very obsessed about the subject matter. You know, we go deeper into the subject matter, advances, and the accounting aspects. We go so deeper, and we have been, in my opinion, keeping the presentation part. You know, the thing which are being seen by outside world, we have always been keeping in the back room. And finally, we used to take the previous year paper, do the needful, and move ahead. This is where, in spite of we doing the best of the jobs, in fact, we'll see all these years, public sector banks have been really, from the audit world perspective, have really been doing well. But it is always seen that, oh, these audit reports are not so and so. This report, no. This is only because what is seen to the outside world, we keep little last priority, or we take last year's and try to copy, paste the current year's comments and move ahead. First of all, like Ketan said, and all of us know, that the LFAR is changed. So obviously, and the changes are so drastic that hereafter, at any given point of time, we cannot simply take what was written last year and replicate at this year audit. This is because there is a lot of information that LFAR requires us to produce. There is a lot of affirmative confirmation that you will see in the LFAR that we need to give. And at any given point of time, unless we have done that job, or unless we are sure, besides the opinion that we give in the main audit report, there are so many different indirect opinions and affirmations we keep giving in the LFAR. And that is why LFAR is now, in my opinion, assuming a lot of importance. And while we as chartered accountants look at the subject matter first, in my opinion, we should also have a team simultaneously working on LFAR right from the first day, because the kind of sampling you need, the kind of confirmations that you are giving will be drawn through the questions which are written in the LFAR. So it not only becomes an audit report, but it also becomes a sort of a checklist for us to actually effectively conduct our audit at the branch level. Number two, besides the audit requirements and the institute requirements with regard to documentation, etc., regulators, all of us are aware that are becoming very active with regard to the audit quality. There have been, never in the life I have seen Reserve Bank of India commenting on some of the audit reports based on the audit standards. Oh, I don't see auditors have been adhering to this particular audit standard, etc., etc. I'll show you some comments. So everybody is becoming very aware. So institute also has been carrying out the audit standard seminars. In my opinion, we should also look at those aspects very carefully, because when I say I have audited, it basically means that I have adhered to the audit standards. It doesn't just mean that I know my subject. It means that I have adhered to the audit standards, and therefore, please, hereafter, any assignment that we conduct as audit, please ensure that audit standards. This is not an audit standard seminar, so I'll leave that discussion at this level, and we'll move forward as far as LFAR is concerned. You will see this slide probably with every speaker, because this is the base for all our bank audits. First of all, master circulars. Now, closing circulars are quite detailed one. They give you instructions line by line item, and therefore most of the queries, 99% of the queries get resolved on the operational side through the closing circulars. And the guidance note, I must tell you, Institute really has been genuinely working very hard all these years to ensure that our members, they are well informed. Even the master circulars and that I talk about, this year's guidance note has been covering up to 31st January circulars which are there. So, you will find a lot of information in the guidance note itself. And on the top of it, Institute also comes up with the expert panel wherein you get answers within 24 hours. So yes, Institute has been really trying to help support our members, because in the remote locations, the kind of vicinity we have may not, some of the members who are in the remote locations may not have that kind of easy information availability, and therefore these aspects really play great for them. This is some of the excerpts I've taken from the RBI seminars, which they have, all of us know they invite CSAs and they meet every quarter and they keep on bombarding on what the expectations and what. So these are some of the excerpts that I've taken out. Okay. These first two slides is not me, but I have taken it from the RBI presentation itself. The role of statutory auditors in identification of NPAs. Expectations from statutory auditors to display a greater degree of skepticism and independence in assessing the asset classification, especially. Of course, this year there is a slight change, which next line will explain. But they have been using this word called extra or a greater degree of skepticism. See, we have our standards says, and we by nature, when we are on the audit, we exercise our skepticism. What is this greater skepticism that they are talking about? I've covered few things, few of those things in my presentation, but would just like to give you a brief in the sense, see, many times it is observed that we go by the letter of the circular, and therefore it so happens that we may miss the larger point. Many times we face such a stiff argument from the management showing us the regulation. However, we very well know that this is just an argument, technical argument, whereas what we perceive when we are auditing is actually the truth. So how do you define that to ensure that your perception or your interpretations are actually, and this is where RBI has seen the divergence. This is exactly where we know it, we perceive it and we interpret it well, but we get caught into some of the technical lines. It of course does not mean we should. I've also seen some cases where people go very far off and too on the other extreme. So we are not bloodhounds as well. So we need to keep this equilibrium very carefully. We will be discussing few such aspects during my presentation in the subsequent slides. This year, again, we may be aware that Reserve Bank of India last year came up with the guideline that all banks are expected to automize their NPA identification, the classification. So within IRAC, income recognition and asset classification, okay, the entire thing is now been automated and taken over by the computer systems. Yes, we have conducted some audits in some of the banks where Reserve Bank of India had asked all the banks to ensure that whether their system is effective. And they are working. So there are some issues still with some of the banks where the non-fund transaction, capturing of non-fund transaction is becoming difficult. Solidarity credits coming to the in the last minute. Say check bouncing, credit debit. Now, these are some of the challenges which system will face. Okay, I think Giriraj would have been a better person to answer these questions. But I'm just raising a question, and that's not being my topic. I will restrict at that. You can speak to other speakers on that, because we'll be dealing, diverting the topic. So these are some of the aspects, yes, are something that we need to take care of. But 98% of this NPA or asset classification is being taken over. Now, my question is, last 15 years I have observed, all of us have been asking more than 90% or rather 100% of the questions on NPA, whether this should be classified or whether it should. Now that it's been taken over by system, what are we going to do? What are we going to do? And that is where this greater skepticism also comes into being. Okay, we'll take it as it comes. Here is one more comment, as I mentioned earlier. Non-compliance of SA 505, external confirmations. Non-compliance of 530, when a particular divergence take place. Now, when they ask for the documents from the auditor, auditors are not able to give the justifiable documentation to suggest that they were diligent enough in conducting the audit. And therefore, by inference, the regulator concludes that the audit was not conducted properly. It may not be the truth, but we are not able to justify it through documentation. And therefore, documentation is getting a bigger prominence in our audit. And not only documentation, like I said in the beginning, audit standards are getting much higher significance. And we need to be very careful about it. This is something which is an IMF paper that says that regulators should have the access to the working paper. It's a suggestion, but institute has been very strong in saying, no, it's my prerogative, it's my documentation. But if things go wrong in a larger way, well, regulators are free to leave the well. So be careful that it should not so happen, and the confidence that institute has posed on us should, we should stand up to that. Let me come to the LFAR part now. In my presentation, since I've been given 1 hour or so, I have not covered everything because that 30% of the items were there earlier and would continue to be there, like cash counting, etc., So those aspects I have not covered. Let me come straight to the topic of where it affects us when we are presenting our LFAR. The most important aspect in the new LFAR is regulator is expecting us to document the advances, your samples. You are expected to give list of the accounts you have chosen for the purpose of your audit. Now, by simply doing this, we are assuming a much greater responsibility, because if any unforeseen situation that takes place with regard to those accounts, you cannot escape by saying that, oh, it was a mess. No, it was a negligence, because you have chosen it for the purpose of your audit and you have not been able to identify this problem. So That is where again I'm stressing more on that greater skepticism only because of these items, these aspects. So remember this. So and there could be a normal way of sampling, but there are several hints that you get in the LFAR questionnaire for you to choose the sample. In some cases, certain questions need to take care of the entire population in the branch, and in certain cases, your answers can be restricted to the items or the accounts you have chosen. So we'll go next. Have you come across a quick mortality in accounts? Quick mortality is basically any account that gets into a substandard within 12 months of its sanction. Now you will know, and see, all of us have been experiencing bank audit for a long time. So quite a few things are anyway known to us. The tactics are known to us, the management that plays. It's only on the record now. So I'm trying to highlight. We have dealt with this situation earlier, but now we need to deal it in a little slightly different manner because we are now pinpointedly giving a positive affirmation to the regulator. And that's where our responsibility enhances. So if you see any account which is even in the SMA category, you may exercise your greater skepticism in finding out whether it is being saved for the purpose of only not getting into the quick mortality. So over here, your population would be, any account which has gone in SMA category in the first year. And we are expected to list such. Next, whether, and therefore, when I said in the beginning, this is not a last minute job. It's a job that needs to be started on the first day of your audit. Because you will take longer time to conclude this. Having understood that the majority of the NPA, IRAC norms are being taken care of by the system. Now, whether borrower accounts in the applicable interest rate is correctly fed into the system. In respect of accounts you have chosen, you may go through that. Actually, further, we all know that from last year again, ICFR guidelines are directed by Reserve Bank of India to all the banks. All the public sector banks. Some banks are choosing certain branches, top branches, for the purpose of ICFR. Majority of the branches give only management certificate. But if you happen to actually conduct an audit of a branch where the ICFR is also certification has to be given, this aspect will anyway be taken care of, because it's part of the checklist. But if not, at least in respect of those where you have chosen, you can still choose to see, because many times we have observed, see, one of the large bank, we have in one of the large bank, the sanction terms are sent by a letter, and while feeding, many times the mistake takes place. So some of the banks have created a system whereby these sanction notes are also generated through system. Especially I know, like PNB, I know, because we have done some job for them. So State Bank of India has done that. So it's in such cases, this check is easier or no mistakes would be found. But in many other public sector banks, we will continue to have this problem. So ensure that the correct, because it's a specific question, and since you will be saying no, you are giving a positive affirmation. So any positive affirmation needs a diligent on, diligency in terms of our check. Have you come across frequent renewal? This is again a standard, so I will not elaborate more on that, or it's more on the advanced side. So somebody in the speaking on advances will cover this. Whether correct and valid credit rating if available. Now all of us are aware that 5 crores and above, for the purpose of CRAR calculation, you need to have the credit rating. Now to there is also a requirement for certain cases above 50 crores, I think, you need 2 credit ratings, 2 different credit ratings. After the ILFS debacle, now they are saying 2 credit ratings for larger accounts. So that, if both are completely different, take the lower one. So, yes, sometimes you may have it, but it's an outdated one. Don't accept. Don't empathize with, because one more thing I have observed while dealing at the branch level and while dealing at the top level. 100% of the bank top management, any bank for that matter, they have been very strict and passionate about the right reporting. They don't mind a problem being told to them, but they don't like surprises. Whereas at the lower level, branch level, he has a different challenge. And therefore, not in the interest of the bank, but in the interest of his branch or his immediate bosses surrounding, they try to suppress. So it's not a bank policy to do so. Even if sometimes zonal manager says he's worried about his zone. But if you talk to top management, they are very clear about, so they don't like surprises. And therefore, in my opinion, if you come across such observations, be candid to the top management. We don't have to worry about the problems that the branch manager will face. That's not our problem. Again, please don't take me in an extreme way, because I have also seen some of our members getting too extreme, and at the central level, then we have to reverse their decisions. So don't get to that level also, so that you should have your reasonings correctly on why you have done so. So that's about the credit rating. Ensure if it is not there, make it not unrated. Simple. Sometimes I have seen, if the rating is really bad, they don't show you, because they are better off showing unrated, because unrated attracts 100%, whereas the lower rating attracts 150 weight. So sometimes they don't show you, and therefore mention that it's not available. So tomorrow it should not so happen that the rating was available and you have not seen it. Everything is about positive affirmation now in this LFAR. Please forgive me for using this again and again, because I'm trying to, make bang on our minds that this is something different and we need to take care in the right spirit, because regulators are getting stringent. Now, in the cases examined by you, here it's specific to the cases you have chosen. Credit facilities having sanctioned beyond delegated power, or any such cases promptly. So again, it has been the routine aspect that we have been looking at. I won't elaborate more on this aspect. Whether the advances have been disbursed without complying with the terms and conditions. Here. So I'm just trying to give you the nuances. I'm not trying to enter into the subject matter. What happens over here? The systems are available. There is no doubt about it. Manager will keep telling you it's all system based. In one case, while conducting ICFR testing just last week, okay, we realize that the disbursement dates are prior to the documentation date. Now it's obvious that the documentation was not completed prior to disbursement. And if such an account happens to be one that you have chosen and you write a different answer, and if that account gets into some problem tomorrow, apna nasib kharab hai to kya karenge? You are signing something affirmatively and the results are different. So this is where we need to be careful, and therefore in the cases that you have chosen, ensure that you have done this. So I'm trying to give you the repercussions as to what could happen if the answer to this is okay, jaldi mein abhi, it's 10 o'clock in the night, we need to conclude it today. So you say yes, nahi hai na, kuch nahi hai. We may face problem. Okay, so documentation wise, be careful. Did the bank provide you loans to did the bank provide loans to companies for buyback of shares? Now, my suggestion here, if you look at, I would say take a representation, because frankly speaking, when this clause was also put, I was part of the discussion with Reserve Bank of India on behalf of Institute as a panel member. And this was the question where we felt that, frankly speaking, auditors cannot know if LAP is given and that amount is used for the purpose of buyback of shares. I won't know. So, to be abundant caution, take a representation later. In one of the lecture, someone asked me a question that my bank has given the appointment. They have clear instruction that no representation letter in the appointment letter. No representation letter will be given. It will be given only to CSA. You mention that we have not been given representation, and we have not come across. However, the completeness will be taken care of at the central level. If they don't give you, frankly speaking, at a branch level, this issue will not be there. I know. But now that they have put this clause, we also need to be safeguarding ourselves. That's all. If you say yes, nothing is going to matter, because it would be obviously be a centralized matter. But still, if you are given audit, if you are signing, and if you are asked a pinpointed question, do what is needed. Here, it's a standard thing that the renewals don't take place, renewal of advances don't take place in time. They keep on 3 mahina. Now, with this computerization of IRAC norms, yes, banks have tried to take care of it. After 6 months, of non-renewal, it slips into a substandard. However, systems are subjected to camouflaging anyway. I have seen cases where they put a date only to camouflage the system without actually having done the renew or review part. Some of the banks have created a column where they need to mention whether it's a full-fledged review or a short review. So short review 1 up to so and so, then short review 2, not more than short. So system doesn't allow, but not all the banks have done that. Number 2, although they have done that, there are no other checks available. So anything which is between 3 to 6 months, yes, list would be available. Anything you will never find, at least this year onwards, anything beyond 6 months, because it will have to be downgraded anyway. If you get it, then it's a much larger observation than just merely not renewed for over 6 months, or slip it to in substandard. That observation will not be that simple. It will have much better, larger ramification if you find something here. Next. Now, stock book, BP calculations, this has been the bone of contention for all of us for a long time. And if they are not there, yes, it slips, because these are the aspects may not get covered through automized, because they are more on the non-fund side. So any amount of entry, sometimes it so happens that they keep on entering the same stock statement again and again, all over again and again, all of this. Over here, I won't have any comment, because each one of us will exercise his own judgment whether to allow, not to allow, because it's too individualistic and too account specific. Stocks audit. Now, I'll just share my experiences and the difficulty that we may face in actually answering such questions. And that is, stock audits, we know if it is a 5 crore and above, it needs to be under stock audit. Stock audits are allotted by zone. They are not allotted by the branch. So my experience tells me that you will find all kinds of observations. A, stock audit not allotted. B, allotted but not conducted. Maybe because borrower is not cooperating, whatever. Auditor is not available, pandemic, whatever reasons. C, conducted but report not submitted. It's under progress. Report submitted but not taken cognizance of. I've also seen cases where in certain cases, observations have come out of actually the stock auditor was so good in giving its observation, but branch manager not with intent. It was a routine matter for him. रख दिया drawer में. अरे वो रह गया देखने. And there were grave observations of a stock auditor. If you happen to have such cases where he has submitted it on say 27th of March or 15th of March, or even for that matter 2nd of April, and if you have not taken cognizance, so like other reports, Concurrent audit, etc., such reports do matter and they help us in our opinion forming. So it asks you specific question. Cases where stock audit was required but not conducted. List down now. So if you don't list down, that means all have been done. Where stock audit was conducted but no action was taken on the adverse features. So it pins you down. Every question pins us down. Indicate the cases of advances of non-corporate entities. Now this again is the issue, and we were not very comfortable putting this because this one particular aspect actually features in LFAR for a long time, but there is no counter or a specific regulation to it, wherein a non-corporate entity requires an audit. In fact, it's a wonderful business opportunity for chartered accountants if banks insist, but they don't do that because they will lose the bank. If all the banks do it, and if Reserve Bank of India talks about it, they will do it. Wherein most of the time, if it is a partnership firm or any other business firm which is not a corporate entity, The audit report that is submitted is basically a tax audit report, and tax audit report does not necessarily mean an audit report, because the audit standards that are required for the purpose of audit and for the purpose of a tax audit could be different. Now, however, there is no insistence from the bank. There is no insistence from the regulator. So over here, I have always been saying, we have not come across any such guidelines, specific guidelines by the bank management on this issue, and leave it at that. Don't say yes, no. Don't give vague answers in any of our LFAR. Don't be afraid of saying, I don't know. This is not given to me. I have done that and nobody has questioned me. No, I am not aware of such regulation, hence cannot opine on this. Or no such directions. Take it under management representation and leave it at that. Does the branch have on its record a due diligence report in the form of manner required by Reserve Bank of India in respect of advances under consortium and multiple banking? Last year, again, there is one direction from Reserve Bank of India. And all of us must be aware of this, because even with our bank accounts, our banks must have contacted us. And that is, if you are holding a current account outside your consortium, and if you notice it in your financial statements, you are expected to write to that bank and get that closed, because you're not supposed to hold current account outside the consortium. So actually this clause is not about that. I'll come to this clause, but as a corollary to this, this is more important. Many people have actually, many banks, especially private banks I know of, they would tell the borrower, you do one thing, give me a deposit of 2 lakhs rupees and I will create an OD against that of 1 lakh rupee. Only to say that I don't have a current account, it's a loan account. However, I have seen State Bank of India coming very heavily on such and ensuring that, they don't allow this. But some of the branches I have also seen, the branch manager is afraid that this fellow will take away everything there. And therefore he is little soft. So while he is soft, it creates some kind of a danger to our reporting, because it could be a potential fraud tomorrow. May not be, but that's a greater skepticism that I'm talking about. And such a situation, in my opinion, must be reported. Although this is exactly not the question, but this is also expected out of this question. Then I will come to this question. If your account has some other bank as a leader of consortium, you are expected to have those specific minutes, specific review minutes of the leader bank on record. You cannot plead that I'm not aware, I'm not given. No. If you have an account in your branch which is a consortium or multiple bank, it is necessary that branch manager has obtained this report from that other banks on the record, because you don't know what is happening there. See what happens if, especially if it is about above 5 crores and above, CRIL reporting. No, we don't have easy access to CRIL reporting. You don't know what is his status, what is his problem there. Yes, Reserve Bank of India doesn't say that it's a problem there, it should be problem here. No, I agree. But still it gives you a good sensitization of the account and how things will unfold with your operations in the time to come. So your comments on the assessment, your comments on that particular borrower would make the regulator aware of the problem that this particular account is facing at that branch. God forbid, tomorrow if that account goes bad and you have chosen it for your review in the audit, auditor has not done the job. Although monies have been siphoned by somebody else, we are taking a meager fees, but still auditor has not done the job. Though we were justified at that point in time, they will say you have not exercised the greater skepticism. There will be all kinds of terminologies that Reserve Bank of, or rather regulators will use to ensure that we become part of the governance chain. They expect us to do that, and we should live up to the expectations. Physical verification of the securities, that also doesn't take place. Or if that record has to be there with the branch. Now this is with respect to those accounts you have chosen. You have already chosen the accounts, you are flashing it in your report and you are saying yes, 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 yes. Remember that yes has a different meaning now. It's not general yes. In respect of advances examined by you, have you come across cases of deficiencies, including value of securities? Stock audit reports would give you such. Now, especially if it is a standard account, you will not come to know, because such a thing happens only when it goes to D2, and as such provisioning is not there in the branch level. But the importance of the branch audit is you have access to the documents. So security value is something that you will tell it's a relay. So you will tell to the CSA that this is the problem. If it goes into SS, although it doesn't matter from the provisioning perspective, that's where it starts to find out whether the securities are in place. So that's a greater skepticism, I would say. Though you will sign, technically you are right and nobody can catch you, but still there would be some element in the minds of the regulator. Boss, if you were to inform me earlier, things would have been better. Okay, I will come to this aspect, why regulator is saying that. I have some slides on this subsequently. Red flagged account. I have discussed again red flagged account subsequently. So I will skip at this juncture and move ahead. Comments on adverse features considered significant in top standard large advances. Please note, it is not top 5 accounts of the branch. It may so happen that out of top 5, 3 are NPAs. What are you here for comment? The question is top 5 standard accounts. The reason why they have chosen this is there is a good amount of experience with the regulator and to us also that many accounts these days have slipped from standard to direct loss. Many of the frauds that have taken place have strayed away from standard to loss. There is nothing in between. When auditor signs, yes, he's standard. Next day, it's loss. Now, therefore, it expects top 5 advances of that branch, which are standard. So when you are looking at standard, the responsibility is far more greater. So think as to what all things should be seen. I'll give you one example. In my case, what happened 2 years back when I was auditing, and this last year only, this last year in one of the branch, this new clause. There was one account which was a 400 crore account, running absolutely well, and probably it's still running well. I mean, there is no issue. However, while I was going through its review notes and its balance sheet. You know, all of us are chartered accountants. We know which page to refer to. And I was going through the notes. It was signed by, a good a known chartered accountant company. And 80% of its purchases were from its related party, and 100% of that was sold to related party, different related parties. I buy it from my son, I give it to my daughter, or like that. Different two related parties. And I could see that sales are being done abroad to my related party abroad. And my fund-based limits are reducing, my non-fund-based are increasing. So my question was, if 80% purchases and 100% to related party, you are not funding this company. You are actually funding the related parties. It is, you are funding to those businesses. And do you have, and those are not with you or your bank. The ones which is sold is a foreign bank. This one is another bank, some other private bank. Now, such an account is a vulnerable account. Now, that sensing has to come out. So I mentioned that in my top standard. This is the problem that I see. And this is where I mean a greater skepticism. So, you know, many times we shy away from writing this because, well, it's perfect within the regulation. So there is nothing for me to comment on it. And therefore, not because we ignore, not because we don't understand, we feel it's unreasonable to write. And therefore, we miss on these points. And regulator catches us where if things go wrong. So this is where I'm coming from. Top 5 standard accounts. Leasing finance activities. So basically, advances to NBFCs, leasing finance, etc., etc. Many times you will observe that they enjoy 3-4 different facilities. The only security they give is their receivables. And same receivable is replicated in all the facilities that they are given. 300 crores, 300 crores, 300 crores. Boss, 300 crore, 1200 crore nahi hai uska debtors. 300 crore hi hai. They need to be bifurcated. Now, these are very fine points that matter. Now, therefore, you know, RBI has, I've specifically mentioned the circular here, okay? And we need to take care from that perspective while answering this particular question. Next question, I won't elaborate because now, in fact, yesterday only we had a discussion with some of our other members saying that this LFAR was changed almost after 30-35 years. In fact, we have worked on this for last 7-8 years. Ketan also has been part of this panel for last 5-6 years, and I'm aware this was the 3rd attempt institute made. There were 2 more LFARs were given, but you know, it was simply delayed, the discussion, and the decision was delayed by the regulator. Now it's time for our institute also to, every year there should be depending on the changes, regulatory changes that take place, they should keep changing this. So this clause also, you know, now that next year probably the systems would be stabilized, and this needs to be reframed to suit the newer environment that Reserve Bank of India has directed. So you can, you know, as a council member, you can take a note of this, and we will keep working on this over the period. Also indicate whether required changes have been made, incorporated in the MOC. This is the reason for this question was many times, we have seen that Auditor gives lengthy comments on the advances, but doesn't conclude. इसमें ये प्रॉब्लम है, ये प्रॉब्लम है, ये प्रॉब्लम है, ये प्रॉब्लम है, बट वो कभी वो तोता मरा है कभी नहीं कहेगा. That is the problem. So he says, I have reported. I have reported. That's the kind of mindset some of the members carry. So they leave it to somebody who reads it later. Reserve Bank of India time and again has made it clear that if you are given an audit of a branch, that branch is an entity by itself, your materiality and everything relating to that is limited to that branch, and conclude. I have faced one situation at the central level where the auditor has given such strange comments, and I, after reading that, I said, this cannot continue as a standard account. This needs to be downgraded. You know what the top management said? But where has he qualified? Nor has he given MOC. If you are going to make changes, we will write to RBI that we don't need branch audit. You don't believe in your own colleagues? This was a straight answer given to me. And at that point of time, I was turned to, react. I said, I can't take the side of my member, nor can I, overturn his decision. So conclude whatever you feel, don't write, keep writing. And then, so this question is basically aims that, if you have created a situation for someone to be downgraded, pass the MOC. So be conclusive, be decisive. List the accounts which have either been downgraded or upgraded with regard to their classification. Okay, 10 crores and above. So standard, this means that any account above 10 crores, you should select in the branch. It's an indirect inference that I get out of this. 10 crores and above, आपको करना ही है. Any upgraded or downgraded? Because many times now, see, frankly speaking, upgradations will not take place unreasonably now. But still, we need to be careful on some of the accounts which are upgraded. So ensure, because upgradation indirectly is positive affirmation that yes, it's a standard account. Many accounts you will see every year they go down, come up. So their NPA dates keeps on changing every year. With the computerization and the systems based classification, these problems would reduce but not get eliminated. Now, whether RBI guidelines on IRAC have been followed, it's too far overreaching. And in my opinion, this will form part of our main. When we are giving a clean report, it basically means that. Next. I won't comment more on recovery because this is never part of the branch. These are basically meant for those branches which are recovery branches, or because once it gets in, it slips into a problem, the account gets transferred, and all its subsequent aspects are taken care of at a different branch, because branch managers generally, that's a system which has been evolved. However, in the interest of some few branches where it may not have happened, these clauses continue to be in the LFAR. But in 99% of our cases, I don't think this would be applicable. Recoveries they don't take place in branches. Yeah. Here again, some positive affirmations that are expected. List the borrowers where LCs have been devolved or guarantees have been invoked. And the next is list the borrowers where LCs have been devolved or guarantees have been invoked but not paid. Now, LCs may get devolved anyway and they will get paid. But still, they also need, so they don't want to leave a chance that somebody is devolved and paid should not get captured. No, the regulator wants to know which are the accounts getting into such issues. They may have been paid. Next ones are not paid. Okay, fine. Then you will look at the other aspects. But they also want to know in absolute terms, boss, कितने लोगों का LC devolve हो रहा है, guarantees invoke हो रहा है. This is a positive affirmation that we'll be giving. Imagine, I'm sure as I'm progressing, you would have realized the kind of responsibilities that the regulator is trying to pose on us. They want us to be part of the governance, rise to the occasion, in my opinion. So then the list, that's fine. So reason for non-payment, all of that, what has happened, etc., etc. Deposits, generally we brush through this particular section in the LFAR. Okay, generally but you will realize that there was some issue in the parliament with regard to penalty charges levied on the low balances, and therefore this particular clause, and in my opinion, our appointment letter also specifically mentions this. Am I right? Whatever, na? Pankaj? So this is why this issue has come up, wherein although system takes care of it, and branch manager may not be aware of it, because this is the least important matter for him. However, select some 3, 4, 5 to see whether if there are any charges in your profit and loss account, whether the levies are correct. Keep your documentation before you say yes. It would be a matter of 10 minutes actually, but confirm that. I'll rush through fast because I'm running out of time. I'll come to the important aspects. Okay. Books, records, MIS. See, there are a lot of MIS reports that get generated in the branch. In fact, branch manager operates through those MIS only because those are his eyes and ears. Even for our concurrent when we go, we actually pick up these aspects for us to, comment on. Because branch manager doesn't look at it. He doesn't have time. Most of the observations would come out of it. Don't miss these MIS reports because those will give you ready answers to many of the questions that are being asked. Fraud. Here, I would like to spend some time. You look at the questions. Fraud detected. Now, many times frauds are detected. They are reported. Your branch manager will say report kiya hai. But report kiya ka matlab hota hai, he has reported to his controlling authority. Whether reported to Reserve Bank of India, he may not know. The confirmation that it is reported to Reserve Bank of India should be on record. Because this is where there has been a gap whereby Reserve Bank of India has levied penalties. And over here, we answer, yes, reported. Was auditor ne kaam kiya? That's a standard answer. Question. So the gap between understanding interpretation also lead to such errors. So don't think that if branch manager has done this, it's done. Okay. Whether the suspected or likely fraud cases are reported by the branch to higher office during the year. If they are, go through those, find out what are those cases, if at all there are there. Those will give you an insight. Maybe some of the cases belong to the accounts you have chosen, though they are operating correctly for something or the other. Find out. I will come to this RFA. I skipped that question earlier, and therefore I will come to it. There is one circular, May 7, 2015, on early warning system of early warning framework or red flag accounts. I keep promoting that particular circular, though that circular technically is applicable for 50 crores and above. Red flagged accounts is basically applies to 50 crores and above. But that circular is so fantastically drawn, and it gives us a good amount of insight into what does it mean by Reserve Bank of India saying greater skepticism. It lists some 45 items of type of transaction. If the account which is 50 crores and above notices any of those 45 items, is considered as a red flagged account, and even though it's standard, it's referred to for the purpose of necessary investigation whether it's running well. It is independently judged whether it requires downgradation or it is allowed to be continued. Now, for the purpose of our branch, you can lower it to 10 crores and above also, because it forms a good checklist. You may not comment adversely on that, but at least you will get insight as to where this particular account is moving. So please go through that circular. It's readily available. I think it's available in the guidance note also. We have given, am I right? It's available in the guidance note also. If you look at this third clause, so 1, 2, and 4, I have deliberately kept third one separately because it's huge. It doesn't leave anything. Frankly speaking, adhering to this clause is nothing but investigative audit. Practically, it's investigative audit. Go through, before you go to the branch, एक बार जरा separate करो इसको, segregate these sentences, and you will know its expectations. It's huge. These are the supervisory point of view, which I have mentioned. I have mentioned of 2015. So here, if you look at the fraud cases were increasing. This is the data I've picked up from Reserve Bank of India. Okay. Now, about 90% of the frauds were involving 50 crores and above. That's why that RFA and everything is 50 crores and above. So large accounts actually slip into issues faster. Opening current account, I spoke about it. They plugged it. It's a very serious matter. Okay. Diversion of funds, sanction kiya, pehle hafte mein 80% sister concern ko gaya. No, such a thing, although running well, matter requires some different lenses. Again, I would use the same word called greater skepticism. So why? Let me answer now. Why this has been happening? Although we have been diligent, I will never say some 1% of us may have been negligent, but 99% of us have been diligent. Yet, why this is happening? This is basically happening because we allow the leverage at that point of time. We are happy providing. We feel that if the provisions are made, we are done away with. No, they say if you are declared as a fraud, you are denied entry elsewhere. So you are actually plugging in the system problem. But if you provide, you are allowing him to move around in the market and get things as per his wish. So that delay in determining that he is a fraud has increased the fraud. Because at that point of time, it may have been, technically, we may have been right, and therefore we are not caught. Delay in CRILC reporting. Somebody is slipping into the SMA 0 coming up, SMA 0 coming up, SMA 01 coming up. CRILC reporting नहीं किया, ऊपर आता है यार, ऊपर आता है, छोड़ो ना, आज तो ठीक है ना. वो एक दिन he slips to loss. Now, these are the regulations. Reserve Bank of India is not expecting all banks to be closed down by giving this regulation. No, they only mean report. Let us know. Let's there not be a surprise. With so many of us working so hard, if we don't fulfill this purpose, probably then somebody gets a feel that this whole exercise is futile. So let us not lead to that conclusion by the regulator. So report, we are not harming anyone. We are trying to give that warning that, boss, this could be a problem. If it is not, where we are happy about it. This is just one divergence. And that is, RBI has advised IBA to put in place an enhanced web-enabled third-party enterprise reporting disseminating system. Okay, and it has implemented with effect from 1st December 2018. What is that? Some of us may be also in the business of, referring the client or referring a loan account to a bank. If that gets into a problem, who was the person, that third party who referred? They make a registry. Today, it's a dormant registry. There could be a time that they suddenly get up to say, boss, ye aadmi ne 3 loan diya tha, fraud ho gaya. Ye third party ko pakdo. He could be a chartered accountant. Without us knowing about it, that this person has created a problem. So we also need to be careful when we are, referring a client. Many of these I have covered during my presentation. So some of these I spoke about that 45 items. These are some of the things in there, in that circular. And you will see how it can help us. So critical issues highlighted in the stock statement audit report is early warning signal. And all of this would be helpful to you in that top 5 standard account reporting. Remember, if you find any of these items in the top 5 one, in my opinion, you should comment. And therefore, I said this also serves as a good checklist for you. So don't think that, oh, 50 crore and above ka hai na chodna. No, it's a fantastic circular which we should adopt, even for our routine audits. Poor disclosure of materially adverse information. Frequent change in the scope of the project. Liabilities appearing in ROC search report, not in the annual report. Anomaly hai. Not routed sales through console. I have come across a situation. Believe me, I'm giving you a real story. The turnover of that account is some 500 crores. Extremely running well account. But if you calculate the total turnover in the account, consortium account, total was 200. 500 crore का सेल दिखाता है, ये 200 करोड़ क्यों है? Investigation had to be taken place, and in spite of financial parameters were right, subsequently I came to know that account was declared NPA because we had mentioned that this is the problem and we are not comfortable with this account. Although technical grounds, everything is fine, so we have allowed it. I casually mentioned that. Even at that point of time, believe me, and I will be candid to you, I didn't have that greater skepticism. Somewhere in my heart, I felt like ये कुछ गलत है, लिख के लो. This is the issue, which was picked up. So I was appreciated. Boss, आपने लिखा था वो. So though I did not downgrade that, I didn't do anything, but that comment was highlighted. LC is issued for related parties without underlying trade transactions. Raid by income tax. Accounts freezed. Still, account is going. Significant reduction in the stake of the promoters. It's one famous fraud case, and I will probably, this is the last, I'll conclude on almost, I've all come to conclusion. Famous case in 2013-14. And I was CSA of one bank that time, and that bank had the list. And that is some 6,000 crores advances was suddenly from standard to loss. Happened, fraud. The date of the default, okay, it was a consortium of one foreign bank, HSBC, and 6 public sector banks. On the date of the default, the foreign bank had 0 exposure. And all the public sector bank were branch audits and stock audits and all kinds of audits are conducted. They were the most losers. Why? Early warning signal, which was, we never thought, because every parameter was right and we were technically right in saying it's a good account. We didn't see what's coming. You know what happened in that account? It was such an account where some bankers would come to him, boss, हमको कुछ non-fund limit तो दे दो आपका, 10 crore भी दे दो. They wanted to be in his good books of that client. Now, slowly, he started inducting the top general managers and EDs of the bank, retired, on his board. He did that over 3-4 years. The entire board was comprising of top-notch bankers. On one day, he says, my company is running so well now that I want it to be run by the professionals like you. And therefore, I would like to give you independence, and resigns from the board and leaves it to the learned board members. And most of his exposure was LCs to some 50 odd companies, which over 2 periods started reducing, and last 6 months it was only to 13 companies, though his turnover was increasing. That's where HSBC came out. Stopped giving me more exposure. Our public sector banks thought, अरे पागल है, exposure मिल रहा है, ले लो, अच्छा company है. And those 13 companies were actually shell companies in Dubai. And everything was gone one day. The largest stake was PNB, 1,600 crores. The least was Bank of Maharashtra, 300 crores. All 6,000 crores. It's a public document, so I can simply, you can even Google. So this is where we fail to see what is coming. Although we are auditing all these years, because we are so obsessed by the letter of. So regulator, in short, is only requesting us that use that greater skepticism, and that would help you that will help regulator. I think this is the last slide. Okay, the ICF, I spoke about it earlier that yes, if your branch happens to be the one which is selected for the purpose of ICF reporting, you may have to do that. Okay, so with this, I conclude my session. I don't know whether I've overshot the time. I'm fine, no? Yeah. Okay. So I really thank you for a really a patient hearing. Thank you once again.
Excellent talk in a very, very lucid manner, a lot of practical tips about, how to do reporting, and should not be shy from saying that I'm not aware of provisions. The feedback of the regulators, which is very, very important, what RBI feels, and as you know, the Sandeep has been involved in various activity of institute, be it guidance note, be it online panel. We have first-hand feedback from him, which is, very, very valuable for all of us as a branch statutory auditor. The other day, the president was addressing to all the members, and he says that we need to work thinking that truly we are partner in nation building. And what Sandeep said about various aspects to improve upon the quality of branch audit, I think we need to keep at back of our mind that if we improvise upon quality, automatically that respect gaining will happen before the regulator. Sandeep ji, I assure you as a council member, will definitely be very, very vigilant, and we have started that process. The president and the central council members have met almost all the regulators in the first week of their taking over of the position. They met the Reserve Bank of India, SEBI and other regulators. And sir, it won't take next time so long, to change the, to improvise upon all the aspects of reporting, such as, it took long 30 years, 35 years for the amendment in LFAR. And I'm sure with the current president's rapport with the all the various government regulators, will have, better say in all the government bodies, and will take up all the issues very, very aggressively, very, very politely, but firmly with the all the regulators. With this, I request our one of the contributor and core group member, C.A. Sonali, to offer a very well-deserved vote of thanks to Sandeep Welling, sir.
Thank you, Ketan sir. Dear participants, if you see the circular of this seminar, it is highlighted for this topic as the importance of communications reporting. It is because LFAR is one of the report to communicate. Sir has very well explained what are the expectations of CSA, bank and RBI from you as a branch auditor while drafting LFAR. By suggesting you should not use only yes, not applicable or no. You should look also into the matter of sanction, review, monitoring and other recovery aspects also. Sir has suggested us all due cares for reporting. Thank you, sir, on behalf of WRC for your valuable suggestion. Thank you.
Friends, we have next two sessions. One is, pre-lunch session and post-lunch session, and we have young dynamic speaker, CA Pankaj. I'll request CA Pankaj Tiwari to please come on the dais. Also request CA Sanjay Savla to be on dais. Friends, heart and soul of bank audit is IRAC verification of advances and RBI circulars. We get, the guidance from Reserve Bank of India circular. And as I said earlier, in the post 2015, this year, somewhere in October, the compiled consolidated circular master direction has been issued by Reserve Bank of India. And we have with us again a very young, dynamic and experienced person who has been, doing central statutory audit of various banks. And he has been, kind to take up consecutive 2 sessions. So we have one pre-lunch session, then we'll have a lunch break, and post-lunch, we'll again have an opportunity to hear to CA Pankaj Tiwari. With this, I request CA Sanjay Savla to formally introduce CA Pankaj Tiwari to all of us.
Thank you, Ketan Bhai. It gives me immense pleasure to introduce CA Pankaj Tiwari. He is qualified chartered accountant since 2012. He is partner of CNK and Associates LLP. Previously, he was associated with BSR and Company LLP chartered accountants. Currently, he is involved in audit and assurance services and consultancy in due diligence and various assignments like valuations. He specializes in audit of banks, NBFCs, HFCs, and other listed companies. He handles audit under GAAP, Ind AS, IFRS of other listed and unlisted companies. He is member of Accounting and Audit Standard Boards on guidance note on bank audits. He is in expert panel of AASB on bank audit. He has made notable contributions in publications of WIRC. He is regular speaker on Ind AS and other subjects and Companies Act on various forums. Friends, with brief introduction, please welcome CA Pankaj Tiwari.
Before Pankaj Bhai starts, I'll request CA Shweta Jain, our Secretary of Western India Regional Council, to offer a memento to CA Pankaj Tiwari as a mark of our love and affection towards his contribution to the WIRC. Pankaj Bhai, please, you can start.
Sorry, just give us 2 minutes. We have to resolve some technical issues. Okay, here we are. Thank you. Thank you, Ketan bhai. Thank you, WIC, for inviting me for this presentation to discuss the IRAC norm. As rightly said by Ketan bhai, this is the heart and soul of a bank audit because normally the focus of the branch auditor is to get as far as the MOC is concerned with respect to the NPA provisioning, classification, so on and so forth. Friends, you people, I think so since morning, you might have understood the audit planning, which was taken by Giriraj bhai and now the LFAR. Having understood how to plan the audit, having understood how to, report, what to report, where to report, etc., etc. Now we come to the actual aspect of the bank branch audit, which is how do you, ensure that the branch is complying with the IRAC norms, income recognition. It has 4 parts, and I will get into the topic in a little while. However, before I get into the topic, let me just set the context of the discussion. The context of the discussion is happening post a lot of changes which has happened in the IRAC norm, which I call it as a IRAC 2.0, because we had a IRAC which was issued somewhere in 2015. After that, there were a lot of circulars, etc., which were issued, which were never compiled by the RBI. The RBI has come up with the compiled circular, which was issued somewhere in 1st October 2021. So if you look at, people who, I can see some seniors also sitting in the audience. If you look at it, the last year, the year of change of LFAR, we had a lot of change in the LFAR, a lot of new regulation. A lot of new clauses came from the perspective of the reporting. I consider this as a change of the IRAC norms. And you will come to know once I go to the presentation. The second is that the RBI is in continuous mode of making the changes. If you look at it, starting from 2014-15 onwards, the RBI was making changes in the bank's balance sheet, cleaning up the bank's balance sheet, providing whatever NPAs are required, etc., etc. Now the RBI has turned the table and is changing the policies. When I say changing the policies, some are new, some are more of a clarificatory nature, some are completely different concept altogether. And we will see the example of all those things. The RBI has also recently, and we have been interacting with the RBI, being a central stat auditor or being an auditor of a private bank, we do have a quarterly meeting with the RBI, wherein they come up with the issues, they tell us that where we need to focus upon. And there is an increased focus of the RBI in a consistent way on these restructured accounts. You will have earlier, if you would have known, there was only one circular to deal with the restructured accounts, 7 June 2009 under the resolution plan framework. Now you have multiple circulars to deal with the restructuring. And it is not only applicable to some big accounts having 100 crore, 50 crore, etc. You could have 10 crore MSME account also getting restructured. So there is a consistent increase of focus on these restructured account by the RBI. And whenever we interact with the RBI, we come to know, recently we interacted with the RBI in first week of March to cover up the next quarter. There are 2 to 3 things which I would request you to look at it whenever you are visiting these branches or whenever you are carrying out any audit of any bank, be it a private bank, be it a public sector bank, etc. RBI has recently observed that, you have these inoperative accounts which are there. The RBI has specifically asked us to verify that there should not be 1 rupee debit and credit entry in the current account or in the saving account of any particular borrower, just to avoid this non-operative account provision. They have observed it, and that's why they have come up to the auditors to say that please specifically look into all these aspects. Because all these inoperative accounts, if you are familiar with the banking, need to be transferred to the Deposit Awareness Education Fund, which is called as a DEF,
over a completion of 10 years. The second point where the RBI has asked us to do is the control accounts monitoring, the inter-office accounts monitoring. If your branch has a lot of inter-office accounts, please look at it. This is separately as compared to the IRAC norm. I'll come on the topic, but I thought I will share with you all. The third and the important aspect the RBI has flagged it from the perspective of when you have a term loan for a capex expenditure, capital expenditure, when you are giving a term loan. Please look at it whether the branch has disbursed these amounts on the basis of a photocopy of the invoices, pro forma invoices, purchase order, etc., and whether it has received the original copy of the invoices. Still, you will feel that in case of when you are doing a bill discounting, there were chances of multiple discounting in the past. However, there are not chances of multiple discounting now, because obviously the person who is discounting the bill will sign bill of exchange only once. But still, there is a great possibility of getting these capex expenditure funded by 2 to 3 banks, specifically when you are under the consortium advances. Because till now, you don't have any RFID chips or a QR code which is pasted on a particular invoice that this invoice has been discounted, don't fund against these invoices. So please specifically look into all these aspects, these 3 to 4 points which are there, which I thought I will bring it to you all. Now, coming to the presentation. So I had 2 options when I was thinking how to prepare this presentation or what all to address to all of you. One was to give you a 30,000 feet overview, that what are the major changes in the IRAC norm, etc., and take you through some important circulars, etc. Other option with me was to get your hands dirty in the circular, to make you understand what are the changes in the circular with my experience, limited whatever I have. At the end of the session, you all have to tell me which option I have chosen in my whole presentation. What are the challenges? I'm sorry that we can't see the headings. What are the challenges for the bank auditors in the current year? Every year, there is something new which is coming up. Every year, somebody would say that my responsibility has increased, my reporting parameters have increased, or the scope of the audit is also increasing in some way or the other. What are the challenges which we have for the current year audit, which probably we would start from the first week of April? I have listed down few, there could be many more. I have not dealt with the logistic challenges. I have dealt only with the regulatory challenges. The first challenge which has come to us is that how to deal with the IRAC 2.0. And we will discuss in detail. People who would be familiar in the recent year, in the last year, one circular came on 1st October 2021, which we thought as a compiled circular, because if you look at technically, RBI does not give you what are the changes in the circular. You can't do VLOOKUP also because it's a PDF file. So you need to sit and identify that what are the changes. We have identified what are the changes. I will list down for all of you. The second is November 12, 2021 circular, which is I would call it as a backdoor entry for some of the changes in the definitions altogether. And some of the provisions we'll deal with. And the third, which came somewhere in February 15, 2022. First time I've seen RBI issuing clarification on clarification, technically to 2 to 3 points. So first thing for us as an auditor to look at it, what are the challenges which we have from the IRAC norms? The second is COVID 2.0 restructuring. The circulars were issued somewhere in May 2021, which has dealt with 2 aspects. One is how do you restructure an MSME account, which is an extension of the last year's circular, which was issued somewhere in August 6, 2020. And the other circular is for other than MSME accounts. And we'll spend a good amount of time. The whole session of mine, which is pre-lunch and post-lunch, will address 3 parts, basically. It will address one part, that what are the recent changes in the IRAC norm. We will deal with some routine issues in IRAC norm. And the third and the important part, which I want to address, is on this COVID restructuring 2.0. Monitoring of pool of restructured account. There is a specific direction by the RBI that when you can upgrade these restructured account, what is the duration of the period for which these restructured account to be continued to remain as an NPA or restructured accounts, etc., etc. The third is the next one is the presentation of financial statement for many of you. Obviously it is applicable to the bank, but more from the perspective of preparing a balance sheet format. We have a lot of issues. We are still discussing some of the issues. One or two issues I'll just put it to all of you also, because that is relevant for branch auditor. Revised LFAR, still we have not settled because it came in the last year. Still few clauses are there where there is a difference of opinion, where there is a difference of view that how do you report upon it. And the last one is the most important, is the increased regulatory supervision. These are the challenges. Some are in our hand, some are not in our hand. Let's address those challenges which are in our hand. Specifically, we can say 60-70% of it. What is the Reserve Bank of India new guidelines which have come? And I put it in all my presentation. I would request all of you, if you don't have time, please look at these minimum circulars which are there. Minimum, these are utmost minimum requirements of an, if you're going to do a bank branch audit. The first circular which we all are speaking about and which we will discuss about is the IRAC norm changes. The next one is the RFA and EWS mechanism, which Sandeep Bhai was mentioning just now before the session. This is a beautiful circular, even though applicable only to the specific accounts, but this gives you a lot of guidance that how do you identify chances of an account becoming an NPA in the future. Because the account does not become an NPA suddenly on the 90th day. It becomes an NPA over a period of 9 months. You will have a some or the other items, checks getting bounced. You have a consistent drawing power getting remained, or there's a delay in submission of this stock statement, book debt statement, so on and so forth. There is a whole list of the indication which have been given in the circular, which as an auditor, you can look at it and can understand and can verify also whenever you're visiting any branches. The third one is the master direction of priority sector lending. This I specifically put only because, when we go to do the audit, the certification comes at the last and it is only reviewed for the signature purposes. However, I would request you, please look at this priority sector lending, certificate whenever you are visiting any branches, because now the limit of the MSME has been revised. You will have many accounts getting classified under the priority sector as compared to the last year or last to last year. We know that we have to report on the KYC in the LFAR. There's a master direction on the KYC norms. And this is again one of the important points which the RBI is closely monitoring. So whenever you are reporting in the current year, whenever you are reporting on the LFAR, clauses of the LFAR, please make sure at least you have verified on a sample basis some of the things, and then only you are reporting it. Lending to MSME, a lot of relaxation have been issued. So that's why we should know that what are permissible and non-permissible lending to the MSME entities. We have again a whole list of circular. I will only pick up 2 out of this. We have a resolution framework 2.0, which I call it as a COVID 2.0 circular. One is applicable to the MSME, one is applicable to non-MSME. Why this circular is relevant? Because this circular is relevant because the implementation timeline of this, both the circular, has expired on 31st December 2021. So probably when you are gonna do the audit, if you remember last year COVID circular, MSME was expiring before 31st March, but non-MSME and the accounts which are below a particular threshold, the implementation must have been done in the current year because the due date was 30th June 2021. So these 2 circulars are relevant for you. There will be accounts which will be restructured under this circular, and that's why understanding of this circular is relevant for us. Again, there is one circular which is there on the guidelines of opening the current accounts, which probably we tend to miss because there's no specific clause in the LFAR to report upon. But I would request you that please look at it. How many accounts at the branch were supposed to be closed under that guideline? How many accounts have been closed under that guideline, and how many accounts are still to be closed under that guideline? This could be the last item in your LFAR, which you can address to the central stat auditor, which is the last clause that any other matter which you need to address to the central stat auditor, you can put this even though it is not there in the LFAR, because this is one of the requirements of the RBI to be complied by the bank or the branches or the units. Long form audit report format, everybody knows this was issued somewhere in last September 2020. This is the utmost important circular. I would request you, please go and read those questions and see that how you are able to answer those questions. Sandeep Bhai has discussed this in detail. I will not repeat it. But in the current year, my friends, don't miss to read this last circular. Because November 12 circular, February 15 circular, or IRAC 2020-21 circular is an extension of this last circular, which is reporting on the automation of the NPA, reporting on whether the branch is generating or whether the bank is identifying its account on a daily basis or not. Don't miss to read this circular. I will discuss a part of this circular in one of our case studies. By the way, we have a case studies also, and we will address some of the points through an example, which will make you understand better. Now you'll ask me that how do you find all this circular? It's very simple. You go on the RBI website, you have this link where you can get it. All COVID related circular have been put up under this section, which is COVID-19 measures. If you go there, you will have a whole list of these items, and you can go to the notification or the press releases and you can look at these circulars. ICI materials, technical guidance. I would urge you, please spend few times or some time on these three materials specifically, not the whole one. If your branch is a deposit oriented branch, please look at the advanced section. Now the institute has made it very well. It has divided the whole guidance note into 3 parts. Now, if you're a branch auditor, you can just refer that section. You don't need to refer the whole guidance note of 1,000 pages, etc. Technical guide on the LFAR, most important because it came a little late last year. Now we have a full technical guide available with us. We can understand that what to report, how to report under a particular clause of the LFAR. And technical guide on IFC-FR. If your branch is selected, you can look at this technical guide. The first thing, I will clear it out first itself. What are the changes in the presentation of financial statement? So I would tell you, we were closing, I think so, we closed Q2, and yeah, we were closing Q2. Somewhere on 31st August 2020-21, RBI came up with the notification. Saying what? Saying that this is a consolidated circular which discusses that how do you present your financial statement, how the bank should present the financial statement. 30th August, the circular came, and these were the few changes. I will discuss specifically the highlighted in the red one because there I have a strong apprehension. The circular says, all of you are familiar with the bank's balance sheet, right? You have 16 schedules starting from reserves and surplus, ending on the operating expenses part. And then you have schedule 17, which discusses with the accounting policy. Schedule 18 discusses with the notes to accounts, etc., etc. The point of this circular was, and which came at the first time, is you have a bad debts write-off. And this was my query since my articleship days. Let me tell you all. In banking industry, the bad debts write-off is below the operating profit. If you would see the whole presentation of the financial statement, specifically more on the result part, the bad debts write-off is below the operating profit. But recovery from bad debts write-off is part of operating profit. It is shown in the other income of the bank's balance sheet. RBI tried to clarify it. What RBI said, that bad debts write-off was always a part of provisions and contingencies, which comes below the operating profit. The circular says that recovery from bad debts write-off may be shown under the provisions and contingency schedule. This came on 30th August 2020-21. RBI again came back, probably after closing the first quarter, I believe so, because the second quarter, because that got closed on somewhere in 30th September. If you would see a lot of private public sector banks specifically, their operating profit dip in the second quarter, in Q2. The reason was this, that the recovery from bad debts write-off, which was there as a part of the other income, moved to the provisions and contingencies and reduced the provisions and contingencies. There was a huge issue with respect to this. Mainly the public sector bank represented to the RBI saying that, what is this? I mean, how can you reduce our operating profit? We have to show a particular level. Then what happened? RBI issued another notification, or updated. You will not find that notification. You will find it updated version of 30th August 2020-21 circular, saying removing the whole line itself. So you would find some private bank did it in Q2, continued in Q3. Some private bank did it in Q2, reversed in Q3. So please, whenever you are doing an audit, because normally I understand a branch has a balance sheet which you need to certify, etc., please look at this aspect, that what your bank has done, whether it has shown it as a part of the other income or whether it has shown as a part of the provisions and contingencies. If the bad debts recovery is dealt centrally, what people call it as, you may not find it in your branch LFAR. But if it is dealt at the branch level, you will find it in your trial balance or in the GL trial balance. The another important point which you should look at it, and if your bank has not done it, probably you should report it somewhere. The term loan, which were for a short-term period, the last row on my presentation, the short-term term loan, which were having a maturity of 1 year, basically a demand loan kind of a thing. They were classified by many banks under the term loan. However, now you cannot do so. You have to classify it under the CCOD facility, which is the first line items of the, if you look at the schedule 9, it has 3 parts, 9A, 9B, 9C. 9A, it has to go under the CCOD facility. These are the two changes which I wanted you to address. And this is what I was talking about. You had a bad debts recovery sitting under the other income, was supposed to get transferred to the provisions and contingencies, again updated and have been transferred to other income. And if you look at between the two, on the 5th bullet, it comes as an operating expenses. And if you look at it, 7th bullet, it comes as an operating profit. So provisions and contingencies never considered as a part of the operating profit of the bank. It is below the operating profit. And that's why probably the RBI has to change that circular. Let's come to the IRAC norm 2.0. What are the things? What we call it as IRAC 2.0? Basically, if you have to read IRAC 2.0, what should I go through? You have to go through 3 things. You have to go through the NPA automation circular, which I spoke about. You have to go through this 1st October 2020-21 IRAC norm. No major changes. What the changes, we'll discuss it. But you have to go through in detail the November 12 and 15 February circular. These 3 put together, we call it as a IRAC 2.0. Whenever I'm referring in my presentation later on, I will be calling them as a IRAC 2.0. Now look at it. Last year, you had a changes when it came to 2021, you had the changes in the LFAR. This year, 21-22, there is a changes in the IRAC norms. Now, this completes one cycle by the RBI. First, they changed the reporting parameters. Then they came up with the notifications. You have both together and which we need to report in the current year. So please look at these notifications, circular, etc., to what I would say, give a quality output to the RBI. Many people you might have heard in the market that we have a sword hanging on our head, that these audits may curtail down, may happen somehow or the other. So let's try to give a quality output to the RBI by referring to the circular, and the whole presentation will be addressed in that aspect itself. What are the changes in the IRAC norm 2021? What got changed? Nothing. What they changed, very smartly they changed. Nobody would come to know also where they changed. All of you, some of you or many of you might be familiar with this changes in the restructuring. 7 June 2019 circular, resolution framework, IBC cases, where there are 3 to 4 ways you can resolve a issue in the account or default in the account. One of the ways referred to IBC, either for liquidation, change of ownership, so on and so forth. What the circular was saying, and I have put this slide not from the perspective of a branch audit, but I put this slide from the perspective of what is the intent of the RBI going ahead. If you look at this slide very simply, what was the earlier requirement and what was the whole thing? The whole thing was that, okay, if you can't complete your resolution during a particular number of days, you make some additional provision. That's a very simple way the RBI had put it. And what the RBI wrote at that time, making a provision, they said additional provision to be made as a percentage of total outstanding. Now, in the whole banking industry and in the whole auditors community, total outstanding normally means fund-based advances. If I have to, because wherever the RBI requires specifically to include non-fund based, they mention it. Like, for example, in the recent LFAR circular, where they said 10% need to be computed both on fund-based plus non-fund based. But they never mentioned on this total outstanding amount that what you should include. whether you should include fund-based plus non-fund-based, because it is not written as an exposure. It was written as an outstanding amount. The RBI smartly changed and said in the recent circular, if you people have any cases which are going under the IBC in your branch, please look at this aspect. What the RBI has said, the total outstanding now means, even though the wordings have not been changed, now means funded plus non-funded. Funded plus non-funded. So like for example, if you have any case where the resolution framework is not implemented, earlier your bank might be reporting or might be making provision on fund-based advances. Now they require you to make a provision on non-fund-based advances. That means an LC which has not been devolved or guarantee which has not been invoked, on that also you need to make a provision. And you need to make a provision on the same percentage of the fund-based advances. So when this whole thing came up, we were trying to understand what is hinting the RBI to make such kind of a changes. And to my view, and in my opinion, they are hinting towards making a provision on probable defaults which can happen on this bank guarantee or on these LC in the future. You cover up now itself. And let me tell you, this is not any devolvement rate or any percentage you need to provide upon. 100 rupees bank guarantee, straight away multiply by 20%, make a provision. That's it. So if your bank or if your branch has any cases which are going under the IBC, please look at it, whether they have complied with this circular or they have not complied with this circular. Other than this, there is no change with respect to 1st October 2021 circular. If you do VLOOKUP, if you sit and read completely line by line, you will find the only one change, which is this change. One question which was asked to me in one of the sessions when I was giving this presentation is that whether any banks create a provision on non-fund based advances. You know, if you have an NPA account, normally you don't create a provision on those non-fund based advances, right? Because you wait till the time that bank guarantee gets converted into one of the facilities. That means where the bank actually pays the money. However, let me tell you, my friends, there are banks and there are good corporate governance bank which makes provision on these non-fund based exposure also. Because it is today or tomorrow, the default will happen. To avoid a volatility in the profit and loss account or to avoid a volatility in their profitability, they do make a provision, but they don't make a provision straight away on this 100 rupees multiplied by 20-30%. They compute a devolvement rate based on the history of the way the bank guarantees have been invoked on a particular account or a particular class of the exposure, and then they make a provision. So this practice was not a new thing for many of the banking industry, but completely for public sector bank, this is a completely new thing. Now, what are the major points in November 12, 2020-21 circular? Now we are coming to the IRAC 2.0 second circular, which is the November 12 circular, which is the first circular which came from the RBI on the aspect. Now, one of my friend asked me, that why you think the RBI issued this November 12 circular? Hardly they issued 1st October 2020-21 circular. Why they could have not made all these changes in that circular itself when they were issuing the whole consolidated one? For this reason, you need to understand how the RBI function actually. The RBI inspection starts somewhere after we close the bank audit. So let's suppose you close the bank audit in May, balance sheet gets signed, etc., etc. And from where the RBI inspection starts, the annual inspection. This is all result of annual inspection. Let me tell you very frankly. This is all result of annual inspection. They have identified some different practices. They have issued a circular to negate those practices. Your RBI inspection start, it goes up to August, September. Now in the COVID period, it went up to little late also, because the balance sheet itself got signed little late because of the COVID second wave. Then the RBI inspection happens of all the banks. The regulatory department of the RBI sat together to understand what are the major issues across the banking industry. Probably before that only the circular of 1st October 2020 was issued. And when they identified that there is serious issues with respect to some of the items in the banking industry across various banks, that was the logic of issuing this 12th November 2020-21 circular. Within a month, you can't be issuing a new circular, changing the whole definition of one of the account in the new circular. So this is all result of the RBI inspection in nutshell. What are the changes? Basically, there are some procedural aspect changes. I mean, you mention a due date in the loan account or in the form, etc., etc. You specify that what is the date of repayment, what is the due date, when you will be classified as an NPA, so on and so forth. That's the first change, operational level change. Second is the classification of SMA and NPA on daily basis. This was there in the old circular. Which circular? 14th November 2020, where the RBI told the bank that all of you need to make your NPA process automated, need to make it daily, need to run it through system on a daily basis by 30th June 2021. And let me tell you, RBI is very closely monitoring that aspect. I mean, being an auditor, we have issued one of the certificate on the whole aspect that whether the bank has complied with the 14 November 2020 circular or not. The change was the concept of what is the overdue date got changed. That means if you read the whole circular, you will not understand anything. But if you read the example, you will understand what they're trying to say. The whole circular revolves around that if an account was supposed, if a borrower was supposed to pay you the installment on 31st March or on 31st January 2000 XYZ year, and if it has not paid on that day, it is not overdue from the next day. What we normally call it as, okay, today you didn't pay, from next day you are overdue. No, that's the concept they have removed. They are saying if the borrower has not paid by 12 PM of 31st January, the account is overdue from 31st January. That means they are shifting the next day concept to the same day concept. That's the one change which has happened across this whole November 2012 circular, 2021 circular. And we will discuss the implication of it just now. Just wait for some time. That's the one change which came, and it's a very important change. It could have a multiple implication, but as an auditor, the first thing you should verify whether it has been implemented, and then look at what is the implication of those changes. The third one, and which I called it the backdoor entry of a change in definition, is it's not a clarification. It's a new definition of an out of order. It's completely a new definition of out of order. And let me tell you, industry is still struggling to understand what does it mean by this definition. And we will see that how, this whole thing has been confused. You had an NPA classification in case of interest payment. Let me tell you, this was redundant. This should have been dropped, but however, they have modified it. Income recognition policy in case of loan with moratorium on interest. We will discuss this aspect. There was some confusion between the auditor and the banker with respect to these interest on moratorium, which get capitalized subsequently if the account is classified as an NPA, whether it should be reversed, not reversed, etc., etc. So now they have clarified that aspect. I have deleted the upgradation to standard status because they're not relevant to bank, because we were already complying with it. They will ask me that, why did you include here? Let me tell you, if you read November 12 circular, and I would request you to read it today itself, you would find that they are addressed to everybody and anybody in the banking, in the whole BFSI segment. It is addressed to HFC, it is addressed to NBFC, it is addressed to commercial banks. But the reference is given IRAC norms. The reference is given IRAC norm, but the addressee to the circular are everybody in the banking or in the BFSI segment. So upgradation of the NPA accounts are more relevant for the NBFC. And people who are connected with the NBFC would understand that what were the changes and all that. The third is the consumer education. This is again a procedural. First and the last is the procedural aspect. Consumer education means what? Now the bank has to tell a particular borrower that what do you mean by overdue? What do you mean by due date? When your account will get classified as an NPA, and when we will mark you as an NPA in our books of accounts, and what will be implication of those. So now the bank has to educate the customers that what do you mean by NPA, etc., etc. They have to put a signboard, they have to distribute pamphlets, etc., etc. That's the whole consumer education is all about. These are the timelines, and they are very relevant, let me tell you, because when you are going to check, you should know by when the branch or the bank should have complied with. So the first one, which is specifying the due date, should have been done by 31st December 2021 for all new loans. New loans mean current, whatever loans have been disbursed. The second classification of SMA and NPA, it's part of the day-end process. it should have been effectively done from 12th November because they thought it's a clarification. They never thought that it would require a system change. It would require a tweaking in the logic which have been put in the system, because now it's an automated process. Clarification regarding out of order immediately, even though it was a new definition. NPA classification in case of interest payment, this is the only thing which they have deferred it to the next year, which you don't need to report in the current year. It has been gone to the next year. Income recognition policy in respect of loans with moratorium, again effectively because it is more of a clarification. Consumer education is supposed to be completed by 31st March 2022. And you would find, if you are a borrower or if you're there in the bank and all that, you would find many, you're getting emails from the bank specifying what is the due date, etc., so on and so forth. So this exercise is as of now going upon. When you are as an auditor, you need to report upon the compliance of 12 November circular. You need to report on all these aspects, except that one aspect which is gone to the next year. So let's understand that what as an auditor I need to report upon or I need to comment upon. These are the aspects which as an auditor you need to comment upon. Now, and that's what I said, if you read this circular, you'll not understand anything. This is November 12 circular specifying that now you need to classify account as an overdue from the same date and not from the next day. Now read the whole line and read the last line. SMA as well as NPA shall be done as a part of day in process for the relevant date. In other words, the date of SMA or NPA shall reflect the asset classification status of an account at the day end of that calendar date. Now, if you read the whole thing, you'll not understand. But if you read the example just below this, they have very clearly given a way that if your account was due, what example we discussed on 31st January, and if you don't pay, you'll be classified. I mean, you will be overdue from that day itself. Now, whenever you need to report upon whether the bank has complied with the automation, because there is a one clause in the LFAR, which I am sure Sandeep Bhai might have discussed, that whether the IRAC norm or whether the identification, provisioning, income reversal, everything has been done through system without manual intervention, right? This is from where they're getting the power in the LFAR. 14 September 2020 circular requires the bank to do all these things. What it requires you to do, all borrower account, the asset classification rules. When you say rules, it means 90 days criteria, credit card criteria, short-term, long-term crop criteria, and also the security issue criteria should be fed into the system. And calculation of provisioning as per the preset rule should also happen through system. The income recognition, derecognition should also happen through the system. Upgrade and downgrade should also happen through system. So whenever you are reporting on a particular clause that the IRAC norm have been complied without any manual intervention, please look at this first. Whether they have done all of these or whether they have done some of these or whether they have done none of these. Then only you go comment and in the LFAR. Don't assume that if the report is coming from the system, it means it is an NPA system. Many a times they download this report from some link or something, which is not an NPA system, but it's only a repository which is there, from where an auditor or the branch manager can just go and download those NPA reports. Understand that from there where this report has been generated. If you have an access, please look at those systems and just ask the branch manager that how the NPA system is happening. I'm 100% sure he might not be aware about it also. For that purpose, many of the central stat auditor and are in process of including some guidance in the closing guidelines, which might be coming to all of you, that what is the system of the bank is using and how do you report upon. If you can't get it, just reach out to your central stat auditor, whoever is looking at that particular reason. Now, typically, and this I used to face a lot of challenge when I used to tell the people that NPA has to be part of day-in process. Now, what do you mean by this? It's a very simple line. NPA has to be part of a day-in process. And I want to spend little time on this, making you understand that how the whole NPA thing happens. Then only you will be able to appreciate it, that why the clause is required. Normally, in any banks, you can have two ways to identify an NPA. One is, which is a part of the CBS system itself. Finacle or whatever system they are using, the NPA identification, everything will happen through the system. The other way, you have an independent system. And this example is discussing the second one, because many banks have moved to the independent system of classifying account as an NPA because they don't want to put load on the finacle. The other reason is the independent system are cost effective that way. Now, what do you mean by a day-in process? And if you have to understand what is a day-in process, at every given day, whenever the system gets closed, what happens? You have two systems involved. You have a source system and you have an NPA system. The data from this source system moves to the NPA system. What data moves? The data are as follows: the customer database, type of facility, agree loan, non-agree loan, credit card, not credit card, the position and the demand of recovery, how much overdue, flag of restructuring, because that account should be excluded from identification and NPA and all that. This whole data moves from the source system to the NPA system. And what the NPA system will do now? The NPA system will classify these accounts in substandard, doubtful, loss, etc., depending upon their demand of amount and recovery from the account. It will also compute the provision on the NPA. It will also tell you that interest reversal, how much to be done. It will also tell you upgradation of an NPA account if the whole overdue has been paid. This whole, and then it sends, which in technical term we call it as a reverse feed, to the source system to flag an account as an NPA in the finacle or in their CBS system whenever you are using an independent system. This is what the process happens on a daily basis after day end has been done by the banks. You need to understand and you need to just inquire whether this process is happening or not happening at the bank level. How would I inquire? I can't go and ask the IT guy that how do you have run the process, show me the patches and all that. No, you don't have to. Just read the closing guidelines, because normally when a central stat auditor or as a statutory auditor, I'm issuing a certificate in the IRAC norms, I am ensuring that these all things have been done. They are in process of giving a guidance in the closing guidelines, and you will find a good guidance on that part. But first understand that what should be done. Then only you can ask the relevant question. What is the change now by this day in process? Earlier, what used to happen, if you look at this slide, your due date was 31st March 2021. Your overdue date was 1st April 2021. Your SMA used to start from 1st April, and your NPA would normally be on 30th June 2021, because that's the day when 90 days is expiring. Now the new one, look at the next one. Due date remains the same. Overdue date get changed. It becomes 31st March 2021, hence the SMA date, and hence the NPA date preponed by 1 day. Why? Because you change the starting point of computing the 90 days overdue. This is the one change which has come in the November 12 circular. Please look at it at your respective branches. How do you look at it? Identify some new accounts which have been classified in the current year. Look at it mostly after November 12, because that's when the circular is relevant. Pick up some samples, identify that what is the overdue which is there in that particular account. Whether it is 90 days overdue, 89 days overdue, it should be, the NPA date should be on the 90th day and not on the 91st day. It should be on 90th day. It would not make much difference, but it is required as per the IRAC norms. One more point, which is not mentioned in the closing guidelines, which you can write it to the central stat auditor and put it in your LFAR. There is no exemption or relaxation given with respect to Sundays, Saturdays, holidays. No, the circular does not give that relaxation. This process has to run on each day. This day in process has to run on each day, whether it is Sunday, Monday, Tuesday, Wednesday, or holiday. RBI has not given any relaxation. If your bank has taken an option of not running this whole NPA process on a Sunday or on holidays, please mention in the LFAR that the bank has taken a relaxation in complying with the circular to this extent. The second is, what is the change? I mean, what will be the impact? For banking, it is not an impact, let me tell you. But yes, you need to see that whether this has been complied, not complied, and you need to report in that particular section of the LFAR. Now comes the main thing. What is the change in the CC order? And let me tell you this, I always say, and I said in the beginning also, this is completely new definition. This is not some clarificatory or clarification which has come in the RBI circular. And if you all are aware, 3 conditions for classifying an account as a out of order in case of CCOD facility. First was what? First was that if your outstanding is more than sanction or drawing power for more than 90 days, etc., etc. The second was mainly if there are no credits for 90 days, your account can get classified as an NPA. Or if there are credits, but they are not sufficient to cover the interest debited during the period, should be classified as an NPA. This was very simple, plain English language, which was there in the earlier IRAC now. Now look at the change. And I've strike off whatever the changes happened in the current. What they say, if the outstanding balance in the CCOD account remains continuously in excess of sanction or drawing power for 90 days, no change, it's okay. Same, whatever was there earlier. In cases where deleted, the outstanding balance in the CCOD account is less than the sanction limit or drawing power, but there are no credits continuously for 90 days. As on the balance sheet date has been removed very smartly. Why? Obviously, you can't have this as on the balance sheet date when you have a daily NPA asset classification. This definition was somewhere revised, if I remember correctly, in 2011, 12 or 13 in one of the year, where you still had a manual intervention, you still had a manual identification, and mainly people were doing on a quarterly basis. Public sector bank, because they were listed, they have to publish their results, so they were doing on a quarterly basis. And they were terming balance sheet date as a quarter end date. Simple. But since now you have 14 September 2020 circular, which requires you to run an NPA on a daily basis, you can't be saying that I will be testing this condition on a balance sheet date, which is that outstanding balance in the CCR is less than the drawing power, but there are no credits in the account. This logic has to be tested on a daily basis now. If you are sitting today, you have to look at what is the previous 90 days period and whether there are any credits or not. There are no credits. What earlier we used to do, we used to take the balance sheet date or the quarter end date and we used to see that whether there are credits there or not there. But since now it has moved to a daily NPA asset classification without any relaxation on the CCOD accounts, this process has to run on a daily basis, and we will understand with the help of example. The third, outstanding balance is very good. You have credits in the CCOD account also, but those credits are not enough to cover the interest debited during previous 90-day period. This is where the main thing is happening, and this is where, auditor and the industry is debating. What do you mean by this line? The outstanding balance is very good. You have a credit also, but those credits are not sufficient to cover the debits of interest debit during the previous 90-day period. Again, this is relevant now because you need to run an NP on a daily basis. You need to consider that what is the previous 90 days credit on a daily basis, whether they are able to cover the interest debited during those previous 90 days period on a daily basis. So what condition we were testing or what condition we were evaluating on a quarter end date or on a balance sheet date needs to be done on a daily basis because the NPA requires you to run on a daily basis. Now you will say this is too confusing. What is there's a change in the English. How does it makes a difference? Many banks have understood that way. Let me tell you very frankly, many banks. What was the existing practice? Let's understand with the help of example now. What was the existing practice was there? Existing practice was this. And let me tell you, you will go and you will see many banks were doing it. Still, they were not and RBI had never pointed out any issues with respect to this. You had July, August, September interest getting debited. You had what they used to do. They used to look at it. What is the recovery in October, November, December? Whether the recovery during this current quarter, I am on December 2021 quarter basically. I am sitting on a December 2021 quarter and trying to evaluate whether this CCOD account should be classified as NPA or not. I have an interest debited between July, August, September. What the industry used to do, they used to look at it. What is the interest credits from that particular date till the current quarter? That means they used to take 180 days period, 90th day plus 90th day of the current quarter to evaluate whether this account should be classified as an out of order or should not be classified as an out of order. So let's look at the situation now. Situation A, total debits is 56. How? 15, 20 plus 21. Very simple. Total credit in situation A is only 45. Why? Because December recovery is 10 rupees only. Basis which the accounts were classified as a NPA account because the quarter credits in the current quarter are not enough to cover the interest debited during the previous quarter. Situation B, if you look at it, you had this 56 rupees again, same, but you had a 60 rupees credit in the account. The account was classified as standard. This is how I'm sure many banks would have a different practice to do it, but this is how a common practice across the banks were there to classify account as an NPA or out of order. Now, again, I'm testing the third condition only. I'm not testing the first two because there is no change in the first two condition. I'm testing the third condition. Now, if I read plain, simple English, okay, if I read plain, simple English, what the circular says, the credits are not enough to cover the interest debited during the previous 90-day period. That's the circular says. Now come to this example, and this example has been made purely a layman interpretation, not a bank auditor interpretation, a layman interpretation. What it means, I am again sitting on what? I am again sitting on 31st December quarter. And in first example, I am on 31st October. The circular says what? The circular says that you need to look at previous 90 days debits of the interest recovery. I am on 31st October to 2021. For me, the previous 90-day falls in the third column, if you look at it, on 2nd August. That means I need to look at all transactions starting from 2nd August 2021. Whether there are interest debited during that period are enough to cover the, the credits are enough to cover the interest debited during that period. So if you look at it, you had a previous 90-day 36 rupees debited. I'm looking from 2nd August. So I will look at 31st August. I will look at it 30th September and 31st October. Because, and one of the person in one of my session asked me this question, how you are considering 31st August 2021 interest as interest debited during the previous 90-day period. The reason is that first the interest will get debited. Then your day-end process of NPA classification will happen. It's not the reverse way that you will first run the NPA process and then the interest debit will happen. No, first the interest debit will happen. And if there is no recovery on 31st October, if you look at it, it becomes an overdue on the same date. So for me, the total debit during the previous 90-day period would include 31st October 2021 also. And you have a previous 90 days credit because I'm looking for up from the 2nd August. I have 2nd August recovery. I have other recoveries also. So total debit is 36, total recovery is 36. Now come to the situation, second situation. I am moving from 31st October and I'm just moving to 1st of November. Situation is changing. Now what is changing? Now previous 90-day period means start from 3rd August. 2nd August gone, starting from 3rd August. What you have now, you have same interest debits, but that one credit which you had on 2nd August gone. And the total interest debited during the period of 36 is the credits are not enough to cover those interest debits. You have 36 interest debit, you have 23 interest credit. I am running an NPA on daily basis. Let me tell you, 31st October also I run the process. On 1st November also I'm running that process. But the one credit has gone and there is no subsequent credit which has come. The account would turn into an NPA because of the third condition. Now, if you look at it very carefully, the borrower has not paid 1 month interest, which is 31st October interest. Whether it is technically or logically to classify these accounts as an out of order. And that's why I said many people have understood is a clarification and not understood the reality of it. If you implement this process, the whole thing goes that 31st October ko NPA nahi hoga, 1st October ko NPA hoga, 2nd November ko paisa aa jayega, wo वापस se upgrade ho jayega. Do you want this kind of fluctuation happening in the daily upgrade or downgrade of the account? Because it is not only a CCOD account becoming an NPA, it is whole connected account becoming an NPA because it's a borrower-wise classification. And that's why, and these are the understanding of the circular I'm putting to all of you. And what I said in view 1, 31st October, the credits were sufficient to cover. But 1st November, the credit were not sufficient to cover. And if you conclude classifying account as an NPA on a monthly basis for one 1 month interest not getting service may be unintentional, frankly. Then, you will tell me, okay, then what is the change? Why you are explaining me so much, all these things? The change is this. And maybe this is a view too. That's why I'm calling it as. When the RBI is asking you that the interest debited during the previous 90 days period should be recovered by way of a credit, what they mean and what I can understand, that no interest should remain overdue for a period of 90 days. That means what? No interest in a particular account should remain overdue for a period of 90 days. So like, for example, if I take 31st July 2020-21 interest getting debited, I need to do what? I need to identify a day of demand. On 31st July 2020-21, interest debited, not serviced, DPD 1. Till the time this DPD 1 goes to 90, the moment it crosses 90, the account will become an NPA because the interest has not been served through the credits in the account. Are you understanding? You will identify a demand, you will identify a credit in the account, and you will knock the two. You will say this was the interest debit, this is a recovery made, it is knocking the word. And I will show you that the RBI or the IBA has implemented that, has accepted that practice. This is a view two which is coming, which is logical. Classify an account as an NPA because of 1 month overdue in the view 1 could be having a little bit volatility and could be unintentional by the RBI. But if you look at the view 2, which is identifying a demand in a particular CCOD account and then seeing that whether it has been serviced or not serviced, could be a rational, logical way to put at it. So this is how you will go. You will identify a demand. You'll see whether it has crossed, 90 DPD or no. One point to remember, 31st July, 1 DPD. It is not on 1st August, the 1 DPD will happen. It is on the same day the DPD will happen and you need to pay within 90 days. And this is what my view which is there, or logical conclusion which we can draw, that interest debited during the previous 90-day period, which can be also interpreted, interest should not remain overdue for a period of 90 days. That means if the interest in CCOD account is happening or remaining for a period of more than 90 days, you need to classify an account as an NPA. Now, there could be one view, or there would be some people who will say that, okay, then what's the difference between term loan and then CCOD facility? In term loan also, you are doing the same thing, right? You are saying that, okay, principal demand, interest demand, getting serviced within 90 days or no. The major difference is there is one-way inflow in term loan account. That means when the recovery will happen, there will not be a disbursement happening. But in CCOD account, you could have a interest recovery happening and you could have a subsequent debits also. So that's the difference between a term loan account and a CCOD facility account. So even though they are treated in the same way, but there is a two-way flowing happening in CCOD account. So that's why they are different. And there are two unresolved issues. And let me tell you, these are personally my issues which are there with respect to this. And if your bank has adopted this practice, please ask them two issues. One, what you will do if there are credits which are more than the interest debit. For example, here I put it very simply, 15 रुपए का interest debit किया, 15 रुपए का credit आ गया. 15 रुपए का interest debit किया, 30 रुपए का credit आया. Because now we are not going on summation model. If you would understand, here we were going through summation model. 90 days previous credit, 90 days previous debit. In this model, you are not going by summation model, you are going by a demand model. What you would do if there is an excess recovery, whether it will be allowed to be set off against the future interest debits. Normally, it should not happen because you're going by a demand model. But you can ask, you can look at your respective banks, whichever you're doing. Second is, how would you appropriate the interest? Because in CCOD, there's no concept of interest, principal, separate. It's a running account. So whenever you recover any amount, how do you appropriate? Because once you classify this account as an NPA, you need to reverse the unrealized interest. Basically, the interest which is not serviced from 90th day till today. But when you recover the amount, how would you appropriate? Whether you will appropriate first towards the interest, whether you'll appropriate to bring down the outstanding, specifically in the cases where the outstanding is more than the drawing power due to these interest debits, what you will do. So these are two unresolved issues, but This is what I can, in my view, is the intent of the circular. I could be partially correct, partially incorrect, or fully incorrect also. But you need to look at it, how your bank has implemented this circular at your branch or in your bank at first place. And let me tell you from where I have picked up this logic, and or wherever we are auditing, how we have discussed this. IBA issued a clarification. This clarification was more from the perspective of identifying a due date, identifying what should be the overdue date, etc., etc. They have, and this concept, I call it as a FIFO model. Basically, it is not simple. First in, first out. First interest debit, first credit should get knock off. The IBA has implemented it, and they have also said there should be a FIFO model in the account or in the recovery model. First interest debit, first principal demand debit should get recovered from the first recovery per se. And it says if any loan account, that means they're not specifying whether it's a term loan, whether it's a CCOD facility or any other facility. They're saying any loan account. And they have given an example, exactly the same example which you just discussed. They are saying 1st February, there was a due date of payment. The payment date was 1st February and you didn't pay or partly paid. On 1st February, the age of old age due in the days is 1 day. I'm on the second row on the slide. And from there, the SMA 0 will start, and the SMA date will be the 1st February 2022. And this is how they are going if you look at it. On 2nd Feb, it becomes 2 days DPD. And then it becomes 20th 9. So what they're trying to say, create a demand, see whether it has been recovered or not recovered. If it is not recovered within 90 days, classify that account as an NPA. This is the change in the CCOD account. Now, I've spoken to many bankers, many auditors who are my friends. They have said, "Arey, to koi clarification hai, kuch change nahi hua hai." But I would request, ask your bank that what is the change. If they are not able to tell you, ask your central stat auditor what is the change and how this change has been implemented. And that's why I said this is a backdoor entry of a change in definition of a CCOD order account. One more issue, and I was in fact traveling last 10 to 15 days, and this is what I've identified. One example. When the RBI says credits in the account, they are very silent the quality of credit. And I will tell you what do you mean by quality of credit. Look at this account. ABC Private Limited, very simply, CCOD facility liya tha, uska current account band kar diya because of that RBI direction jo aaya. The company has taken a rupee term loan also and capex LC also. Capex LC liya tha, import machinery karne ke liye uska payout karna padega. And on due date of these LCs, the bank has to pay the amounts, right, to these foreign parties. What they used to do, they used to disburse these capex LC payments as a rupee term loan to these CCOD accounts. Because if there is no current account, how would I make the payment? So they used to disburse this capex LC or the rupee term loan in the CCOD account from where they used to make the payments. Now, when we verified this account statement, there are two types of credits which are coming. One is coming through these disbursements, which is again getting repaid, right? Because they're going to those suppliers or whoever is paying to them, from wherever they've taken the machinery. There are second credit, which are the business credits, actual recover from debtors, sales, etc., etc. When you bifurcate this credit, your business credits are not sufficient to cover your interest debited during the period. Your business credits, if I segregate and make a pivot of the total credit in that particular account, classify them into two. One business credit, one disbursement credits. The business credits are not enough to cover my interest debited. However, when I add the disbursement credit, they are enough to cover my interest debited during the period. Now the question is, RBI is silent. RBI has never said you look at business credit or you look at disbursement credit. Because, normally they feel that the credits will come only from the regular supplier or from the debtors of the particular borrower, and not that one bank disbursing the loan in the other account and then from where they're making the payment. And this account was not classified as an NPA, considering the out of order concept, because the system, so-called, which has been implemented, does not identify or does not segregate that what do you mean by business credit or what do you mean by disbursement credits. The system is very plain, vanilla, simple. that you identify these account as an NPA only if the credits in the account are not sufficient to cover the interest debited during the period. So when we did little research, we identified that RBI would have said somewhere that these should not happen. And that's why I said at the beginning only that current account circular is important to read. Now, these are 2 points which are given in that current account circular. What it says, banks should not route the drawal from the term loans through the current accounts. Since term loans are meant for specific purpose, the fund should be remitted directly to the suppliers of goods and services. Expenses incurred by the borrower from day-to-day operation should be routed through CCOD accounts. If the borrower has a CCOD account, else through a current account. Very simple. They issued an FAQ on this. What was the question of the FAQ? As per para 3 of the circular, which we just read about, the term loan should be disbursed directly to the supplier goods and services. Whether the term loan towards refinancing of existing term debt of the borrower, that means you are taking over a loan from some other bank basically, for the general corporate, for general corporate purpose, that means a separate facility. Either you are taking over the loan from somewhere else, or you are disbursing it for general corporate purpose, or long-term working capital, or reimbursement of expenses can be disbursed to CCOD account or current account of the borrower. That was a question. कि भैया इन सबको मैं disburse कर सकता हूँ क्या CCOD account में? So the answer to that, the RBI has given, in cases where term loans are meant for purpose other than supply of goods and services, and where the payment destination is unidentifiable, that means you don't know whom you will be paying, banks may route such term loans through CCOD accounts or current account of the borrower opened as per the provision of the circular, which is basically that bringing the discipline in the borrower, etc., etc. Bank shall ensure where the payment's destination is identifiable, payment is made directly without routing through CCOD or CCOD accounts. So my friends, this is where we got the answer. That if Capex LC, you know whom you have to make a payment because you have issued a LC against that name. You know which party you need to make a payment. You cannot credit these account to CCOD facility account and call it as a credit. Irrespective what could be your intent, whether you were knowing that this would avoid the classification of NPA or not. But from a particular, this circular itself, these credits cannot be allowed in the CCOD accounts. But let me tell you, still the circular is half. Circular is still allowing the banks to disburse the amount in the CCOD account if the destination is not identifiable. That means अगर मैंने कोई working capital या cash flow mismatch के लिए loan दे दिया है, that can be easily disbursed to CCOD account and can be counted as a credit also. So the point is, and still, you know, we haven't concluded on this aspect, that how do you address this issue? Because many current accounts have been closed by the banks because they had a 10% less exposure. Now the relaxation has come below 5 crore, you don't need to do anything. But still many current accounts have been closed and all the transactions are happening to these current, CCOD account. So please look at this aspect, identify if there are such situations which are there, and probably discuss with your central stat auditor till the time you receive any guidance. But the second aspect, the Capex LC should be, completely avoidable, So this is what we have covered till COVID. I mean, the whole November 12th circular, I can call it. There are some items which are left, which will continue post the lunch break. Thank you so much. Let's reassemble faster. Thank you. Thanks a lot.
Friends, we'll reassemble at 2:30 sharp post lunch break after half an hour. Thank you so much. Pankaj Tiwari ji to start off with his balance presentation.
So thank you for coming back. And I hope lunch was good, but I'll not let you sleep. Don't worry. So we have, we have covered the major changes in the IRAC norm. I'll quickly touch upon the other things also which are there, which are relevant for you as a branch auditor or as a bank auditor. There are little more responsibility on the central stat auditor, but I see branch auditor as a eyes and ears are an extension of an arm of a central stat auditor only. Because probably when a stat auditor is there, he might look at only top 20 branches, etc. But you people are the one who are doing extensively all the branch audit. So let's continue the topic where we left last. We were on this credit discipline, that what are the quality of credits which are happening in the CCOD accounts, whether these credits are correct credit, these credits are eligible credit, these credits are ineligible credits. So whenever you are going to look at any branch, operations or in the operations in the CCOD account, please look at this aspect, that what is the quality of credit which is there in the CCOD account, and probably discuss with, that's where we last left when we were baking for lunch. Now, coming to the session ahead, this is one clarification which came on interest on moratorium. The circular was very simple and very plain. What the circular says that if as part of the sanction, okay, that's a very critical point, that this moratorium, whatever you are giving, first should be part of the sanction terms. That means when you originally sanctioned this facility to a particular borrower, this moratorium was part of the sanction term. So I will tell you the reason of this clarification also, why it came from the RBI. In case of education loans, if you know, what happens is that the interest during a particular period till the person doesn't qualify, get the job, etc., etc. There's a particular period where the interest is accrued and then it is capitalized to the principal amount. And then you have this EMI getting built up, equated monthly installments. You have a principal plus you have an interest which is getting capitalized, and then your EMI is getting built up, and that person has to pay the EMI. What used to happen, this EMI, if the person is defaulting, the auditor were of the view that whatever interest has been capitalized, which is now reflecting as a part of the principal, should get reversed, because that becomes an unrealized interest. And as per the IRAC norm, you cannot recognize an unrealized interest. You need to reverse that unrealized interest. That was a view which was there across many auditors. Some were getting convinced that once an interest is capitalized as a part of the principal, it loses its identity as an accrued interest. Why? Because it shifts from the accrued interest to the principal, because it is becoming a part of the principal. Once it has become a part of the principal, you cannot then bifurcate, say that, no, out of this much is an unserviced interest and this much is a principal, and now you reverse the unserviced interest. RBI has clarified that such interest, even though the account is getting classified as an NPA, need not be reversed. You can continue with that, the interest component along with the principal. Now, one question which came to me when we were debating this topic was whether this can be extended to the COVID interest. If you remember, during the COVID period also, the interest moratorium was given, which was capitalized effectively as a part of the term loan, and the EMI or the tenure was rescheduled. This and no bank, let me tell you, no bank has dared to reverse those COVID interest moratorium. Let's suppose your COVID moratorium got over, you capitalized that interest as a part of the principal, you recomputed your EMI, or you extended the tenure. These are the only two possible ways by which you can accommodate this accrued interest. Either you recalculate your EMI, increase the EMI, or you extend the tenure of the facility. Now, when that particular account is turning an NPA, no bank has reversed that capitalized interest, and the auditors were debating upon it, whether the COVID moratorium interest should be reversed, should not be reversed, because no banks have done that process. Now, this circular says what? This circular says that that interest which has been capitalized during the moratorium should be only part of the sanction term. The COVID interest moratorium was never a part of the sanction term. It is by way of a specific RBI direction. And you can't extend this logic to the COVID interest moratorium and say that I will not reverse it. But let me tell you, no bank has reversed it. Every bank has capitalized it and said that the identity of that accrued interest has lost, and that's why we don't need to look at it. There is no issue as such, but what I would request you is that please look at the treatment given by your particular bank with respect to this COVID moratorium interest, because these accounts might be getting classified as NPA in the current year. They might not have got classified as an NPA in the previous year. Because up to 31st March 2021, there was some or the other way the accounts were shifted from the NPA to the standard criteria. So this is a clarification. This clarification is mostly applicable to the educational loan, which I can think about it. We have discussed one. So let me just recap. We have discussed one, the IRAC 2021 1st October circular. We spent a good amount of time on understanding what are the changes in November 12 circular. We discussed that what do you mean by day in process. We discussed that how does one day, earlier come into play. We also discussed that what are the changes which will happen in the CCOD accounts and what are those implications, what is the existing practice, what is view 1, what is view 2, etc., so on and so forth. We have just discussed the interest moratorium part also. Now comes after November 2021 circular, there is another circular which was issued by RBI. That's what I said. First time, clarification on clarification by the RBI. And when I read this circular, let me tell you, I was very surprised because some were very obvious facts which were stated in the circular. But I feel that somewhere the RBI would have thought, I think they don't trust the banking industry or something, that the people can interpret this in a different way. Now let's look at what are the main points of clarification. Let me tell you that 15 February circular also is applicable to the NBFC and banks. So I have carved out the points which are relevant for the banking purpose and not for the NBFC purpose, because the circular is not so small. The first is out of order criteria is also applicable to other overdraft facilities which are having the same nature of the repayment terms. That means you only repay the interest, you don't repay the principal. It's like a running credit facility. Like, for example, home overdraft facilities, which are given to the retail consumer. Now, this was never to be clarified because every person in the industry were aware that these accounts should be treated in similar way, just like a just like a CCOD facility. But still the RBI clarified it, may be applicable for NBFCs, but not may be relevant for many banks. But there could be some banks which might be treating these accounts differently. That's why the RBI has come out with the clarification. Previous 90-day period in case of CCOD accounts should also cover the 90th day. Please read it once again. I'll explain you once again. Previous 90 days period for CCOD account, either for second condition or for third condition, because these are the two conditions where 90 day has been mentioned, should cover 90th day. That means very simple. It should not go to 91st day. That means you classify account as an out of order on 90th day. That means our principal, same day versus next day. So they have transferred from next day to the same day. 90th day, that account will be out of order and not on 91st day. They had to clarify it because they thought some will misinterpret and say that when you said previous 90-day period, that means I can sit on 91st day and then only can count to the previous 90 days period. That's why they came back and clarified that 90th day include the previous 90 days also. Don't classify out of order on 91st day, it is on 90th day only. Upgradation, and this was the most important clarification which I could relate in the circular. Upgradation of the facility only upon repayment of entire arrears of all the accounts and not only one account. Now, you will find this very basic, that why RBI has to clarify this aspect. But let me tell you, there were some banks which were taking the benefit of this point. Look at and that's why I put the exact para only in the IRAC norms. What the clarification says that if a borrower has been classified as an NPA and if he has 3 accounts, because of one account, the account got classified as an NPA, other 2 accounts become an NPA, very simple, plain vanilla. In banking terms, that's a first standard question kind of a thing. What happens to the upgradation? What happens to the upgradation? General practice was across the banks which I have seen, that once an account, the main account, because of which the borrower became an NPA, there should be 100% recovery of the overdues. Then only that account can be upgraded. And the other account should also repay the overdue amount, because obviously there will not have you will have an overdue of hardly 1 month, or there will be nil overdue. This was one practice in the bank. That means recovery in all 3 accounts, or overdue in all 3 accounts should be 0. then only you upgrade the account to a standard category. Another practice which was there was out of the 3 accounts, one account which became an NPA, because of which the linked account became an NPA, you do recovery only in this account and upgrade the other 2 accounts also. Even though in the other 2 accounts, there could be probably overdue of 60 days, 30 days, etc., etc. This was the second practice. The clarification relates to the second practice. What it says that you cannot upgrade an account to a standard category if the linked account are having an overdue in their particular account. So that means what? You can only upgrade a particular account when the overdue in all the facility of that borrower becomes 0. Then only you can upgrade that particular account. That's what the clarification is. Now, if you read the IRAC norm and the clarification, you will say that where the scope for interpretation, why the bank were taking this kind of a stand. Read it. If arrears of interest and principal are paid by the borrower in case of loan accounts classified as an NPA, what people were terming it as that the account which has become an NPA, my other 2 accounts didn't become an NPA. They became NPA because of the linked account facility. My first account became an NPA. So what people were interpreting is that if the arrears in those first account gets recovered, I can upgrade all 3 accounts. But now the IRAC says, read the 15th Feb clarification. In case of borrower having more than 1 credit facility from a lending institution, loan account shall be upgraded to stand up from NPA to standard only upon repayment of entire arrears of interest and principal pertaining to all the credit facilities. You should not have an overdue in any of the account. I would not say people were not following it, but the clarification was necessary because some people were doing this kind of practice. Now you'll ask me what to do. Whenever you are looking at any branch, whenever you're looking at any particular, a branch audit, look at this aspect that when the account have been upgraded. See, normally what happens, when we as an auditor, we try to look at the main account which has been classified as an NPA. Sometimes we might tend to overlook the other accounts because you will not find them in 90 days DPD overdue. You might find them in the NPA list, but they will not be overdue. So this time, you look at those accounts also which have been upgraded as a connecting accounts as a part of this clarification. So that's the takeaway from this clarification. Now, there are few questions. I have tried to answer some of them, but I will pick up some of them which are not there. Yes. Question number 6. And these are the questions which we have debated, discussed in various forums. Whether this change in the criteria for CCOD account, which significantly increased the NPA figures as on 31st March 2022, considering that now the banks need to track the recovery within 90 days for interest debit in the account. This is, I'm talking on view 2, which we discussed. As an auditor, what should be our procedure to verify whether the correct classification has been done by the system? This was a question which was put to me when I discussed this first in January. We did one session in January to understand this circular. The answer is very simple. The answer is yes, it will increase the NPA figures coming in the March 2022 quarter, provided the bank adopt the correct approach. If the bank says that it is just a clarification having no impact on the classification, nothing will happen. But you as an auditor need to make sure that the bank adopt the correct practice of classifying account as an NPA. What should be your practice? Your practice should be very simple to verify the CCOD account, to ensure that what view the bank has taken and whether that view is in compliance with the IRAC norm. That means if the account has been classified as an NPA from 90 days DPD or from considering the 90 days out of order facility or no. That's the question you need to answer as part of the as part of this process. Now, what are the takeaways after November 12 circular or 15th Feb circular? And these are the points which you should remember from the November 12 circular. First is timely compliance of November 12. That means we saw the timelines, right? For 6 to 7 items, which is mentioned in the presentation. One responsibility on us, whether a central stat auditor or as a branch auditor, to ensure the timely compliance of November 12 circular. Second, reporting on different practices followed by the bank. That means you should report what is the practice followed by the bank with respect to the CCOD facility, because that's the change in the definition. Third, daily classification of account as an NPA. As I said in the beginning, that there is no exception to any holidays or any particular day. The NPA has to run on a every day, 365 days, it has to run and throw the report. Now, if it has not been done, there is no, I will not say you go and qualify or you go and disclaim or etc. etc. Simply report in that section of the LFAR, which I will just show it to you all. Manual intervention. Now, how do you identify whether there is a manual intervention involved or not involved? Very simple. Pick up the, if the NPA has been identified from different system, pick up the report, go and see the CBS system, whether the same date is appearing over there or not appearing, whether the same classification is appearing over or not appearing. In my experience, in last year itself, one of the PSU bank which we are auditing, we observed that the date which is captured in the CBS for the NPA is different as compared to the date which is appearing in the report. So when you have an NPA report, go and reconcile with the CBS, because CBS also, it has to be tagged as an NPA. When you reconcile the two, you will find there are two different dates coming up. What is the reason behind it? Reason behind it is that in the NPA system, these dates were changed manually. Why? These dates were changed manually only because these were restructured accounts. And if you, I'm sure all of you are aware, in case of restructured account, you need to backdate the NPA date. You need to go as per the original schedule of the restructuring without any restructuring when the account should have been classified as an NPA. So that's why it was changed in the NPA system manually, but never put it in the FinACL system. And that's why we were finding a difference in the dates. Even though there was a classification correct, the provisioning itself is correct. But what we understood is that there is a manual intervention in the system because of which you're changing the date, which is not reconciling with the CBS system. Change in the provision on NFB exposure, just now we spoke. That's, I mean, if you get to see any accounts, look at it, that total outstanding, fund base plus non-fund base. That's the, you need to make sure that provision is done accurately. So these are 2 to 3 critical points from November 12 circular, which as an auditor, you need to make sure that the branch or the bank has complied. And if not complied, you need to report it in the LFAR. This is the LFAR clause where everybody can report whatever you have with respect to November 12 or with respect to the automation of an NPA. The clause first, which deals with the manual intervention, the clause second, which deals with the classification, the clause third deals with the upgradation. These are the 3 clauses wherever you, if you find that the bank has not complied with the November 12 circular, you can report it in the clause B. If you find that there is a manual intervention, there is a difference in the dates or the provisioning percentage, etc., you can report it in the clause 1. So you can fit all of your observation with respect to the IRAC norm into those clauses. And you have a open clause at the end of the LFAR where you can put up any issues. Now, this was IRAC 2.0. Here we end our discussion on IRAC 2.0. As I said in the beginning, we have 3 parts of the session. One was IRAC 2.0, where we covered entirely the changes in November 12. The other is the routine issues in the identification, provisioning, etc., which we'll cover now. And third we have is the COVID restructuring. Taking the proximity of the time, I will quickly run upon the routine issues in the NP identification, because all of you are familiar with these aspects. Because I want your time on the COVID restructuring, which is more relevant to all of you. These are some recent issues of RBI divergence. Why they are important? Because this gives us an indication that what is the expectation of RBI, which is my next slide. What are the, if you find now, you don't find a news report in the paper that the RBI has reported so much of diversion, etc., etc. Because I said balance sheet cleaning is done away. It's over. Now it's a policy cleaning, which is going on. First, they had, and this will give you a little hint, non-implementation of RP 7 June 2019 provision. That means it was not, implemented. And even though it was not implemented, the account was not classified as an NPA. Look at the second sub-bullet. Look at the second sub-bullet of the presentation. Additional provision made only on the fund-based exposure portion and not on total outstanding fund plus non-fund. Actually, the change which has happened in the IRAC 2.0 on the 1st October circular is originating from the RBI divergence. That's why I said November 12 clarification is also from RBI divergence only or RBI observation. The second is a very routine issue, which is DP computed based on expired stock statement. We as an auditor, these are like A, B, C, D of a bank audit. But still the RBI is able to find out the divergence with respect to these things, that the DP has been computed on the expired stock statement. Wrongful upgradation of the NPA account before the implementation of restructuring plan. So the restructuring plan was not implemented, and I will discuss that when you call a restructuring as an implemented. Because what I understood from this RBI divergence, basically, I will not say the auditors, basically few people in the industry doesn't know when you call it as a restructuring implemented and not implemented. Because you can upgrade an account from a NPA to standard only when you implement the restructuring. Signing an application form, getting a sanction letter, getting a approval from the bank is not an implementation of the restructuring plan. We will discuss that what we call it as a restructuring implementation. Wrongful reversal of provision on change in ownership before the expiry period. I will not discuss this because this is very specific to 2 or 3 instances which were there. Realizable value of security less than 10% of outstanding not classified as a loss asset. This is para 4.2.9 of the IRAC norms tells you that you need to classify account to a loss asset if the realizable value of the security less than 10% of outstanding. I can challenge you. Go and ask any bank except the top 3 banks from the private segment. No bank has a system to identify such issues. That if your realizable value of the security has gone away less than 10% of outstanding, classify those accounts as a loss asset. And that's where, my friend, whenever you go to see the automation exercise, these aspects should ideally get covered in those automation exercise. This is one of the rule which need to be put it in the system, that if your security value is less than 10% of outstanding, it should be classified as a loss asset. Many banks have still not done it. Probably they would do it as a part of their automation exercise. Considering these divergence, what I think is a probable expectation of the RBI from the auditor is number 1, identification of probable evergreening of accounts by the bank. Evergreening of accounts by the bank. That is one of the expectation of the RBI. Evergreening cannot be identified only through an investigation. We will see the examples where evergreening can be identified only by review of the accounts. Account statement, transaction with the group companies, you can identify very easily. They're not telling you that investigate from every segment whether the evergreening has been done or not. But that is one of the expectation of the RBI. Reporting on non-compliance of the IRAC norm. We just saw the RBI divergence. That the DP has been computed on the expired stock statement. There is a wrongful reversal of the provision, etc., etc. They expect that at least you verify the basics of the IRAC norms. Extra care or additional audit procedure on the restructured accounts. This will be, let me tell you, an area of divergence very soon. Because 1 year of the restructuring will get over somewhere in March 2022. You will have first quarter of the next year where these restructured account, if not done again restructuring COVID 2.0, will come to the surface and need to serve their interest or principal. These are the areas where wrongful restructuring will be identified and will be reported upon. So my humble request to all of you is that if you have a branch which has a restructured account, you spend good amount of time on NPA provisioning, but spend equal amount of time on these restructured accounts. Because let me tell you, we will discuss some of the case studies. The way the circulars are and the way so many circulars have been issued, you will not have a track of it also. That ye structuring kaun se scheme mein kiya tha? And how do I go and see that scheme? So make it as an area of focus and spend time as you spend on this restructured account. And we'll tell you what to look into those accounts. Basic compliance of the IRAC norms, as I said. Third is assess increase in the credit risk, which are pervasive in nature. Quick mortality account, Sandeep bhai might have discussed in the morning that you need to report on the quick mortality account. The logic behind that clause is not that the auditor should give the list of the quick mortality account. No, that is not the logic. If RBI want that list, they can simply call up the bank and get the list of the quick mortality accounts. Why RBI need to ask the auditor to give you the list? Because they are simply extracted from the system. The idea is that what is the reason behind those quick mortality accounts? whether it indicates any lapses on the part of the branch management or on the part of the bank, because of which there could be one quick mortality account in the current year, but there could be some accounts which are coming up in the next 2 to 3 months. That's the intent behind putting that clause of quick mortality reporting. That first identify that why that account has turned into quick mortality and try to understand the reason under that. These are, I can think, as a probable expectation of the RBI from the NPA identification purpose. I could be wrong, I could be right also. But if you look at the 5 years RBI divergence aspect, they revolve around these only and nowhere else. I will not discuss into the definition. I will quickly go on the case studies. Very simple. And I call it as the evergreening case studies. We may find it, we may not find it, but we should try. And we should try spending some time on these accounts, specifically the critical accounts. And as I always say, the starting point of NPA is not 31st March 2021 or 2022 statement. The starting point of an NPA is 31st December statement. Because those are the accounts which can turn into NPA on 31st March. The account which has become an overdue on 1st January, 2nd Feb or 3rd March cannot become an NPA. So look at the statement of 31st December, pick up the accounts from there and identify these aspects. What is this account? What is this whole evergreening exercise which is there in this particular account? Simple. You have a private limited company which is registered under Companies Act. Obviously, it has to. Subsidiary of another company. It has taken a term loan from a bank and serving interest or principal regularly. They have utilized these funds to construct a factory. The factory is not doing well. Why? Because the product demand is not there. The principal amount for November 20 and December 20 is overdue. The principal, what the bank did, the bank simply picked up the holding company, prepared one whole analysis of that company, said that you have a cash flow mismatch, working capital cash flow mismatch, dispersed the amount to the group company, from where the group company diverted this money to the first company where there was an overdue, and the first company repaid the overdue of the bank. Now, will it be called as an evergreening, provided you have a sufficient reasons, because there's an intercorporate deposit which is provided at 12%, etc., so on and so forth. Because when the transfer happened from the holding company to the subsidiary company, they had entered into an intercorporate deposit agreement also, that I'm giving an ICD at 12% and you will repay me with the 12% interest. Now, whether this is a potential case of evergreening, answer could be different. Answer could be that whether it's a temporary setback or it's a permanent setback. That means what? Whether the factory which you have constructed, whether it has any potential future in the ahead, or it is just the way to get out of the NPA, you have just done this transaction. Second, when the transaction or when the purpose of the loan was to match the cash flow or was to given for, setting of the cash flow mismatch, how can it become an intercorporate deposit and come to you? Now you'll ask me that, how do I know? Simple question. How do I know that this group company has given a loan to this group company? So just to tell you all, we had done a recasting audit of one of the NBFC, which all of you are aware about, which, was the biggest infrastructure company in India. And 2 to 3 years back, 2018, it went away. The biggest issue was this. How do you identify? As an auditor, if we can't identify the behind curtain transaction, we can at least look at the transaction which are in front of us. You have an account which was on overdue on December 2021, getting regularized as on 31st March 2022. What is the reason behind it? You see, it's not one installment, it's not two installments. There's a big inflow coming into that account. And you have a same group company, or you have another group company of the same group where the funds have been disbursed by the bank or by the branch. At least we can do that. If the fund has been disbursed by the branch, we can identify and we can correlate the dates. That's what I said. We can't do 100% to identify an evergreening, but it should not happen that we don't try also. So in these particular transactions, your job is very simple. How do you identify? Look at the account statement from where the money has come. You will not be able to trace the source of the money because it could have come from multiple sources. Identify whether any group company has been disbursed the fund in that particular interval, not on the same day, but in the same month. Not on the same month, but just next to the month. And there is a potential recovery which is happening. By this way, you can at least try to identify these evergreen transactions. We may be successful, we may not be successful. But tomorrow, if the auditor or if the RBI comes and asks me, because I hope Sandeep Bhai would have covered that, you have to give the list of the accounts which you have audited as part of the LFAR exercise. So rest assured that if you have verified these accounts, you have appropriate documents to that effect. Second, very simple example. This was I call it as a COVID-19 evergreening. The account was performing. The account had certain setbacks before COVID. The account became performing, or all the issues which were there in the account got resolved before the COVID started also. So that's what I have said. Came back to normal in July 2021. This was not relating to any COVID impacts, etc., etc. The sanction limit of the facility was 20 crore, 30 crore, and the current outstanding 27 crore during the September month, which is COVID 2.0 last dates. Because COVID 2.0, I will discuss it, the last day was 30th September 2021. The borrower made an application to restructure the account and provided moratorium for a period of 1 year. The bank has accepted and restructured the account. Now, if you read the whole circular of the RBI, obviously, you might have gone through the COVID 1.0, even 2.0. The circular is very specific in saying that these restructuring packages or these restructuring are allowed only to the accounts where there is an impact of COVID. These are not a normal restructuring which is allowed as a blanket, applicable to all the exposures. So what should be my job as an auditor? My job as an auditor is only to ensure how the bank has ensured that this temporary downfall or this issue in the account has happened because of only COVID and not because of any persistent issues in the business of the company or persistent issues in the management of the company. These are only and only because of the COVID-19. Then only that circular is allowing you to restructure the account. But I saw it in the last year. I'm sure it will be there in the current year. There are many accounts which are restructured, just taking an application from the borrower, signing it off and approving the restructuring, giving 1 year moratorium, 2 years moratorium. That's the maximum you can give. Identify such transaction. What I can do with those transactions? Let's suppose I identify. Comment on the policy or comment on the practice of the branch in the restructuring clauses of the LFAR. That these accounts still, it was performing, it was normal, but still it has been restructured as part of the as part of the COVID restructuring guidelines. This is, okay. This I called it as a ECLGS evergreening. So we looked at normal evergreening. We looked at restructuring evergreening. Let's look at the ECLGS evergreening. And let me tell you, you will find all these cases. Just you need to do little bit tweaking. That's it. The bank has sanctioned an ECLGS facility to ABC company, which is a partnership firm. Under ECLGS, one extension, because there are many extensions have also come. The sanction was as per the limit prescribed under the scheme after complying with the eligibility criteria, because it has a criteria. It should not be NPA, it should not be a overdue, etc., etc. Another group entity of the borrower, and look at this ironic situation. And this is a live case, which we have discussed, I think 1 week back or something like that. Another group entity of the borrower, XYZ company, has also applied to ECLGS facility, but the same was rejected by the bank because they didn't comply with the criteria. So you have same group company. One group company is getting rejected because it's not eligible. Another group company getting accepted because it's eligible. On verification, the auditor observed that after the disbursement of ECLGS facility, what happened? After that, the facility to the borrower, the amount disbursed to the account was transferred to XYZ. Look at this very carefully. XYZ got rejected because it was not eligible, primarily because it was an overdue account. You have a ECLGS facility getting disbursed to one particular account, getting the money transferred to another particular account. And from where, what is happening? And the bank has utilized the same to recover its pending overdues. ECLGS facility has no end use. It is given for working capital. Post clearing, read further. Post clearing of the dues, CC facility of the borrowers was renewed with enhancement. The enhanced amount was transferred from CC to ABC company and ABC CC account. The ECLGS facility was closed through such disbursements. Now, how do you identify all such transactions? As an auditor, what is your view, etc., etc.? Very simple. Wherever you are going to do a branch audit, don't verify the documents of ECLGS facility. Because let me tell you all, your CGT PAN, I'm sure people who would have done ECLGS facility will know, to register a guarantee with that company, you need to create a CG PAN. That CG PAN creation will happen only provided you satisfy the conditions. Your focus on ECLGS loans should be divided between 70-30. 70% should be spent on utilization of these ECLGS and 30% on procedural aspect of ECLGS. 70% should be spent on from where the money came into CC account, wo gaya kidhar? Whether it has gone to some group company, whether it has been actually paid to the vendor, whether it has been transferred to current account and routed to some other account, at least you can go one step, you can go two steps. You can't go beyond that. But if you verify it genuinely, you will come to know that the ECLGS facility has also been used as an evergreening exercise. I will not say in across all the accounts, but obviously you will have one or two exceptions in every bank, in every branch. So the point over here to understand is that whenever you are looking at the ECLGS facility, don't look at it only from the compliance perspective, but look at it also that how it has been used. I would not comment too much, but when the reports comes that ECLGS facility have saved this many NPA accounts, it has saved temporarily and not permanently. So these are the cases which could become NPA coming ahead also. This is very simple example. I think this is more from the perspective of that if you had a undrawn facility, that means your limit was 10 crore, you were disbursed 8 crore, you had 2 crore pending. Now you have another account which was overdue. What the bank did, they disbursed this 2 crore in the first facility and they recovered the overdue in the other facility. These are the type of evergreening which happens across the banking industry and across everywhere. Somewhere you can comment upon it when you find that this disbursement should not have happened, provided you have the pending recovery overdues from the other accounts. But if it is a temporary nature, you can avoid. I mean, you can let it go. This is more from the substance over form or form over substance, whatever you call it as. And I still don't have an answer to this question. If a particular partnership firm is there, and this I would have dealt at many forums. If you have a particular partnership account is becoming an NPA. You have same partners having housing loan facility, personal loan facility, etc., etc. from the same bank, whether those accounts should also get classified as an NPA or not an NPA. If you look at from the custody level or for individual entity level, if you look at from the, a different borrower level, they will satisfy all the conditions. They will satisfy all the conditions. But if you, that's why heading of the case study is form over substance. And this we had discussed in one of the branch and we put it to them and we signed an MOC. We said, if you don't agree, but we'll put an MOC. If the partners have only one business, I can understand if you have a different source of income from where you can service your repayments. But if the partners have only this business from where they can withdraw the fund, they can get the remuneration, and this account itself can become an NPA. Unless and until you sell your asset, you can't repay the overdues. So in those cases, we have tried to put an MOC and which has been not accepted by the branch auditor, has been accepted at the central office level. So the idea to tell you all these evergreening exercises is we may not be 100%, get these information or get these accounts at the first instance, but we should not stop trying for it. Now, coming to the, I'm not going to discuss that how much percentage of provisioning you are required to make. You all are well versed with those things. We will discuss only the issues which are having an impact on our side. Erosion in the value of security, I have put it through a case studies, which I will discuss about it. You know, one of my friend, when I was doing an audit last year, told me that, have you ever found an instance where there is an erosion in the security value? Where this clause you make it applicable, have you found an instance? We actually found an instance in the last year, and this is exactly what I have commented in the LFAR I've just posted here, except the name of the borrower, obviously. And how do you identify these clauses? I mean, how should I report it? When we look at these clauses from the branch auditor, they said that not applicable, not found, NA, no, different versions of saying that we don't know. Simple that you need to look at this NPA statement, look at the security value in those particular accounts, compare it with the security value what was there in the last year, and if possible, where you see there is a huge fluctuation in the security value, go and look at it, what was the security value at the time of giving that particular loan. We did that exercise and we identified this one particular case where at the 2018, the security value was 9.88 crore, which has reduced to 3.75 crore as per the last 25th January 2021 report. These are the cases for which these clauses have been given. And these clauses not from perspective of, okay, you report what is the changes in the security value. No, these are the cases, these are the clauses where the RBI is expecting you to address whether this property or whether this loan has an element of fraud. Because if you would have projected a property at 9.88 crore, the actual value comes to some 3 crore, etc., etc. You might have sanctioned the facility considering the LTV of as per 9.88 crore. But actually, if you go and sell the security today, you will not get even 3 crore also. So what the RBI is expecting you to not to report on the fluctuation in the security value. The RBI is expecting you to report upon whether there is an element of fraud or no. And that's what we also reported over there, if you look at it. Further, the valuation report obtained by the branch dated this. Legal report is not available at the time of visit. Said property is not traceable also. This questions the whole valuation aspect actually. These are normal IRAC norms on the security valuation aspect. Realizable value of security. And this is a very, very typical example. And this you'll find in many banks when you look at the security valuation. The realizable value of the security is what? What is the realizable value of the security? The realizable value of the security is not what one person has written in the valuation report. In this example, the person wrote in the valuation report that the realizable value of the security is 4.2 crore. But if I go and put this property for the auction, I cannot get even 4 crore. So what is the realizable value of the security? Whether it is 4.2 crore or it has to be reduced. If the bid is continuously falling and there is no buyer to take that property at 4.2 crore, that's not the realizable value of the security. What we can do, we can reduce it by 10%, 20% to make it fair to the we can make it fair to the accurate realizable value of the security. Because your bid has fallen 2 times on 4 crore. How can you say my realizable value of the security is 4 crore then? Let me tell you, you will not find these cases across all the branches or in any branches. But you should not, nobody should stop you from questioning these aspects. कि भाई आपने कितने प्रॉपर्टी में ऑक्शन किया था और आपके कितने प्रॉपर्टी में ऑक्शन फेल हुआ है. Give me those cases. Let me see what is the value you have considered for the valuation. Realizable value of the security, again, this was a typical example in one of the company. Unka valuation report 3 साल के अंदर था. Right? We have this concept now, 3 years valuation report should be taken. That concept is there only for immovable properties. In case of plant and machinery, in case of, you have a movable fixed asset, probably the last ABS gives the correct picture. From what perspective? to you actually. IBC cases, if you have any IBC cases, look at it, what value has been considered by the bank as a part of the realizable value of the security. In case of IBC cases, if the court order has been given and court order says that the company need to be liquidated, the bank cannot continue with the valuation report. It has to come to a liquidation value. That's the only thing which I can say in these aspects. These are the routine issues which were there in evergreening and in the security valuation. We will quickly move to the main issue, which is on COVID 2.0 restructuring, looking at the time. MSME restructuring, and please pay attention for at least 10 to 15 minutes because this will be one of the core area of audit in the month of April. MSME restructuring, you all are aware there was a definition change in the last year. There was a confusion on the definition change also, but now all things settled. You have this MSME definition, sab likha hua hai. Investment kitna hona chahiye, turnover kitna hona chahiye. No issues in this slide. This is all MSME restructuring till today. I'm not getting into 18 and all that. 1st January 2019 से circular आया था MSME restructuring का, the master circular which I call it as, because the disclosure, the provisioning, etc. is given in that particular circular. 11 Feb 2020, another circular came extending the MSME restructuring. Till now we have extended 4 times. 6th August 2020, another restructuring circular came which has extended the MSME restructuring. Now the circular came on 5th May 2021, which has again extended the restructuring. So we are sitting on a full portfolio which has been restructured at least once. In current year, what is the requirement? So these are the circular, these are the dates which I put it. I have just put it for your purpose. If you are looking at the restructuring, first you should know ये account restructure कौन से circular के हिसाब से हुआ था. Whether it was done as per 6th August 2020, 11th Feb 2020, 1st January 2020, by which this account was restructured. And let's move ahead. Comparison of the restructure. Because to understand what is the change in the current time, I should know what was there in the previous time. Now, what is the change? What is the restructuring package of the current MSME? 1, exposure criteria. Now it is applicable to exposure less than 50 crore. Okay. What criteria? Less than. There was a general COVID circular which was allowing this restructuring to happen more than 25 crore also in the last year. But MSME COVID 2.0 MSME circular restrict itself to 50 crore. These limits were revised. अगर आप देखोगे dates 5 मई से 4 जून तक ये लिमिट 25 करोड़ थी जिसको इंक्रीज करके 50 करोड़ किया है. So if there is any restructuring which has been done during that particular period, the limit was 25 crore. But now after 4th June, the limit is 50 crore. Any MSME account more than 50 crore can be restructured post 4th June 2021. It should be standard. It should be standard on 31st March 2021. Standard का मतलब after taking the effect of Supreme Court decision, which came in the last year, 24th March 2021. That means what was the correct position of the account on 31st March 2021? It should be standard. Then only you can restructure, otherwise you can't. Standard with default is allowed, by the way. But only you should be standard. You could be SMA 1, you could be SMA 2, but you should be standard account. You should, implementation date is 90 days from the invocation. So just to make you very clear, what do you mean by invocation and implementation? ये restructuring terms बहुत लोगों को नहीं समझ में आता है. Invocation means the day the bank and borrower agree to restructure the account. Implementation date is the date when the borrower complies with all the conditions of the restructuring. So it should be implemented from the 90 days from the invocation date. Last invocation date जब तक था, जब ये scheme implement हो सकती थी, was 30th September 2021, not beyond that. Or last date of implementation was 31st December 2021. उसके बाद आप कोई अकाउंट को रिस्ट्रक्चर इंप्लीमेंट नहीं कर सकते हो. सो यू शुड सी दीज एस्पेक्ट कि भी उसका इन्वोकेशन कभी हुआ और 90 दिन के अंदर उसको इंप्लीमेंट किया कि नहीं किया, और नहीं किया तो वो अकाउंट एनपीए बना कि नहीं बना. दीज आर द 2 to 3 थिंग्स यू शुड चेक. प्रोविजन रिक्वायरमेंट 10% ऑफ द रेसिडुअल डेट, 10% प्रोविजन करना पड़ेगा अगर कोई अकाउंट रिस्ट्रक्चर होता है अंडर कोविड 2.0. Earlier account restructured, कोई benefit है क्या उनको? Yes, there is a benefit. There is a one-time relaxation which has been given to those accounts. This is important. We will come on a case study for it. Reversal of provision after the end of specified period, which is 1 year after the date of restructuring. Now, what should I pick up from this slide? I should pick up from this slide 2 things. One, the account should be less than 50 crore. It should be standard. 2, everything relating to that account should be done by 31st December. उसके बाद आप कुछ नहीं कर सकते वो अकाउंट में. Look at this account. ABC and company was standard on 31st. Tick 1 over eligible for restructuring, right? But was on overdue. Okay. They say only standard. They never mentioned overdue. Based on the COVID 2.0 MSME circular, the borrower approached the bank to restructure the account by giving 1 year moratorium. मतलब उसको 1 साल का moratorium चाहिए था. On principal payment on its term loan. Allowed? Allowed. 1 year moratorium is allowed because maximum you can give 2 years moratorium. The branch has accepted the proposal and requested the borrower to provide additional collateral. This is we call as an implementation condition. After accepting the proposal, the branch has put a condition that you give additional collateral to me. Tomorrow you might become an NPA. How do I recover my amount? They said that, okay, you give additional collateral. Due to non-payment on principal amount, the borrower account was classified as an NPA. I'm trying to bring one point over here is that from the invocation date, that means when the borrower and branch agree to restructure an account, you could be classified as an NPA. But on implementation, you could be upgraded also. That's the point which I'm trying to bring over here. That only after the borrower has complied with the condition, if you go ahead, due to non-payment on the principal amount, the borrower account was classified as an NPA on 30th June 2021. And the borrower provided the collateral and restructuring plan was implemented on 31st July. That means he brought the collateral on 31st July, the account was upgraded. And the bank reversed the provision on that particular NPA account and made a provision of 10%. One point to understand is that it doesn't mean that if the invocation has happened, you have to stop the NPA criteria. No, NPA criteria will go as it is. The account will be upgraded on the implementation part. You need to see that whether the account was classified as an NPA or not. The other point, and this is a point which if you're a central stat auditor, you would be interested in knowing it. Hota kya tha? Whenever any account becomes an NPA, RBI always said, you create a provision higher off the prescribed provision or the IRAC norm provision, whichever is higher. मतलब अगर यहाँ पे मेरे को 10% provision करना है और अगर वो account पे 15% provision था, you need to continue with 15% provision. But this circular tells you, you can reverse that 15% provision and you can create 10% provision. If you look at here, if you look COVID 1.0 column, it was saying additional 5% provision or NPA provision if any. But this circular says only 10% of the provision, residual debt provision you need to make. This may not be done at a branch level. That's why I don't want to spend too much time dealing with that. But what you need to understand is that the invocation does not mean that the stop is on the NPA. The NPA will move on. And this is what I was planning to put. Yes. Very, very critical point. I don't know whether RBI has understood what they have done or no. But look at this point. It's an MSME entity. It has taken a CC facility from some bank, which has an exposure of 35 crore. If the exposure of the account is 35 crore, it was not a part of COVID 1.0 MSME restructuring because that was allowed only up to 25 crore. Right? MSME 1 circular was allowed only up to 25 crore. The account was restructured under COVID 1.0, normal restructuring by assessment of working capital cycle of reduction of working capital margin. Basically, that means you reduce the margin, you give them an additional limit kind of a thing. The company is regular in repayment of the dues and has not classified as an NPA. Considering the impact of second wave, COVID-19 and relaxation given by the RBI via COVID 2.0 MSME, what this guy is doing, he's playing very smart. Look at it. पहले उसने कोविड 1.0 में रीस्ट्रक्चरिंग करा लिया, 25 करोड़ के ऊपर था, वो चला गया जर्नल कोविड सर्कुलर में, and he got the account restructured. Now the circular permits you to go up to 50 crore. This account has a 35 crore. Now he's again going under COVID 2.0. And he's saying, boss, I'm eligible because my exposure is less than 50 crore. Restructuring circular. The bank has approached to once again review the limit. The bank has reviewed the limit. Same, and revised the margin on stock and book debts, and accordingly the limit has been updated in the system on 30th September. मतलब बैंक ने वो एक्सेप्ट भी कर लिया. Now I'll tell you where the bank made a mistake. And let me tell you, this is an example of one of the branch only, which we audited recently. Because in private banks, you don't have a concept of doing a branch audit. You have a concept of central audit itself. So we are a part of doing a firm, which is we are doing as a private bank central audit. In your view, whether the above treatment is correct. Now, when we looked at this account, we thought that this account is correctly restructured. But when we looked at the circular of COVID 2.0, which is giving one-time relaxation, it is giving one-time relaxation, and this will be there in many branches, let me tell you. It is giving the relaxation of reassessment of working capital. Read where it is giving. In respect of the account of the borrower, which were restructured in terms of MSME restructuring circulars. That means one time ka jo relaxation diya hai COVID 2.0 mein, that is only and only applicable if your account was restructured under the MSME circulars and not under the COVID-19 circular. That's why this account will not be eligible for restructuring under the MSME 2.0 circular, even though it is less than 50 crore. Because that's not the intent of the RBI. Now, what should I do? I mean, I have restructured this account. What should I do? Straight away classify this to account to an NPA. Because you have not complied with the provision of the restructuring guidelines. And then they say that if you have done any restructuring which is contrary to this circular, you should account to classify as an NPA. Now, you'll ask me, okay, fine. What is the intent behind all this case study? The intent behind this case study is see whether the account was eligible for restructuring. We may tend to miss it because there are too many circulars involved into these restructuring guidelines. But you need to be very clear that whether this account was eligible or not eligible. This was a conclusion which I was trying to put it. One time was allowed only if the account was restructured under MSME, which is less than 25 crore. If it is not, the account should be, additional DP which you have given should be restored, and more than the drawing power. The obviously outstanding will be more than the drawing power because the account might have utilized the extra limit what was given to them. And that's why it should be classified as an NPA. COVID, other MSME, other than MSME, 2.0, 1.0. This came for very few cases, let me tell you. It came for personal loan, it came for individual business loan, it came for small business loan, except few as per para 2, which are already excluded. Plus COVID impact. All these should have COVID impact. That's a primary. That's a rider which is there on this restructuring. Exposure criteria, again, less than 50 crore. Same, 5th May to 4th June, 25 crore it was. Standard, the account should be standard as on the 31st March 2020-21. Not only the credit facility, and this is the interesting twist by the RBI. Not only the credit facility of the bank of the borrower, but the investment exposure also of the borrower. Because now they feel कि भाई अगर आपका limit 50 crore तक हम लेके जा रहे हैं, the bank might have some investment exposure also. So not only the credit facility should be standard, but also the investment exposure should be standard. Then only you are eligible an account. What do you mean by investment exposure, by the way? NCDs. If the bank has done any investment in the NCD, or if the bank has done any investment in the shares and you have not paid dividend, etc., etc. Implementation date, again same, 90 days from the invocation date, 30th September, 31st December. These are the 2 dates you need to keep in the mind. Provision requirement, here they say 10% or IRAC provision, whichever is higher. Earlier account restructured, again they have given one-time relaxation in some of the accounts. This is a tabular chart which I have put for you to understand very simply. कि भैया आपका reference date 31 मार्च होगा, आपको invocation करना है 30th September तक, और आपको implement करना है 31st December तक. सारे scheme में यही है, COVID 2.0 both, whether it's an MSME or non-MSME loans. And this is what we say. What do you mean by personal loan? The RBI has given a definition. When you will say MSME restructuring implemented, when all condition of the restructuring has been complied. When we will say restructuring implemented in other cases, when all conditions relating to the restructuring, whether it is providing collateral, etc., has been complied. So let me tell you all, there is no scope for any interpretation. RBI ने लिख के दिया है कि implementation को कब consider करना as an implemented. So we should stick to that, and otherwise we will have the divergence cases where the implementation was not done, but still the account was upgraded. Okay. Another very interesting question. And here one principle I've understood from the RBI. ये केस क्या था? ये केस ये था, आपकी एक कंपनी है which is called ABC Private Limited. You had a debt in that company. On 1st March आपने ये अकाउंट को रीस्ट्रक्चर कर दिया था, डेट को रीस्ट्रक्चर किया था, टर्म लोन को रीस्ट्रक्चर किया था. And let me tell you, this is again a case study of the last quarter, I believe so. Yeah. हुआ क्या? ABC Private Limited ने अपने एक यूनिट को डीमर्ज किया. Just understand how complicated it can get. ABC Private Limited demerged its one of the unit. और ये जो restructured debt था, ये अब demerger scheme में transfer हो गया to another entity, which is called in this example XYZ Private Limited. So you had this debt which was sitting in the last year in ABC Private Limited company. By scheme of a demerger, this debt is getting transferred to XYZ Private Limited company. And now XYZ Private Limited company is coming to the bank. And saying ki, boss, look my proposal, please restructure this under COVID 2.2. Bank ne bhi kya kiya? Okay, earlier it was ABC, this is a new borrower, restructure the account. Because when you restructure this debt in the last time, this was in the balance sheet of ABC Private Limited. When the application came this time, it came from XYZ Private Limited. Obviously, the branch should have done the diligence of this and to say that this is not eligible. But the branch did the restructuring, and I think, yeah, it is written, it granted a moratorium on this facility, etc., etc. This was a big debate that whether we need to look at the borrower restructured or whether we need to look at the loan exposure restructured. These are the two different things. एक loan exposure double restructuring नहीं हो सकता है कि एक borrower double restructuring नहीं हो सकता है. And when we read this whole circular, we understood you need to ignore the borrower. You need to consider the debt. ये loan restructure हुआ था क्या? If this loan was restructured under COVID 1.0, you cannot restructure under COVID 2.2 again, except the relaxation which has been given in the circular. So obviously this is a unique thing, but you will come to know, understand and analyze whenever you will look at the cases which have been restructured. And how do you come to know about all these cases? It is all written in that sanction note कि ये debt demerger scheme के through यहाँ पे आया था. But only thing we need to read those sanction note and read those proposals. This is what been given as a one-time measure for those term loan which were restructured kind of a thing. And this is another interesting aspect. PQR working capital facility थी उसकी, working capital facility को extension दिया हुआ है as under MSME 1 also, under MSME 2 also, that you can reassess the working capital facility, you can grant them additional limits, additional drawing power, so on and so forth. But what is the condition? What is the condition? The condition is that these additional limit which you have given as one-time measure should come back to the original by 31st March 2022. That means your limit should be restated to the original limit by 31st March 2022. If not, then it's a violation of the restructuring condition which was put up originally. So whenever you have any cases, and that's why I say the restructuring is one of the areas where you have to provide 70% on understanding the eligibility and 30% on understanding the criteria, etc. This account, iska limit 31st March tak should come within the original limit. If it is not, it becomes an NPA, it becomes a reportable matter in the LFAR, so on and so forth. The reporting will follow. These are the restructuring issues clauses which you need to report. COVID 1.0, COVID 2.0, MSME, COVID 1.0, COVID 2.0, non-MSME. If you find any issues, these are the places where you need to comment upon. These are some other master circulars, other circulars which are there for the banking. If you're doing a bank audit, you can look at it. You have master circulars on guarantee and co-acceptance. current accounts by the bank, which I've just spoken about, the first thing which we referred in that FAQ, current account mein kya allowed hai, etc., etc. This I'm leaving it for you. You can look at this circular. What are the points now? Let's conclude. As an auditor, whether a CSA or a branch auditor, if I have to say what are the 10 points which should be on my priority list, these are those points. First, automation ka kya status hai? Pehla question wo, whether you are a CSA or you are a BBA, both. Implementation of new RBI circular, 12 November or 15 February pe aapne kya kaam kiya hai? ESOP accounting, not from branch audit perspective, but from central audit perspective, I will not get into that. Transfer of loan exposure, again from the stat audit perspective. COVID 2.0, restructuring kya kiya aur kaise kiya aur kitne accounts hain, whether they were eligible, not eligible. That will be my top priority list. IRAC norm 1st October changes. अगर आपके यहाँ पे कोई IBC cases है तो उस पे provision किया कि नहीं किया properly as per the IRAC circular. Transition to LIBOR, again CSA, I will not get into that, but I have prepared a consolidated list because some of you might be CSA also. Locker rent new changes. By the way, this is a very important one. ये locker rent का जो हम advance में income लेते थे, bank सब income credit कर देता था PNL को over a period of the locker rent. Now the policy says that if any account, if any locker has been surrendered, the proportionate amount need to be refunded to the borrower. 1st January से उसको चालू करना था to the every banks. Look at this aspect if you have a locker in your branch. ECLGS scheme, less spoke the better. That also you need to comply with it. Thank you very much for listening to me so patiently since I think 2 hours. Thank you. Thanks a lot. Thank you.
Excellent exposition into great details, going into the various nitty-gritties of the IRAC norms, covering up all the circulars, and also taking us through the examples which he has rightly mentioned on the various critical issues. With this, I request Ashok Chaudhary ji to propose a very well-deserved vote of thanks to Pankaj Tiwari ji.
Dear friends, we heard Mr. Pankaj Tiwari before lunch and after lunch also. In both the sessions, we could not, even after post-lunch also, we could not, you didn't allow us to sleep. We learned a lot on the live examples, case studies, and the detailed your explanations. Thank you very much. Thank you very much for that.
Friends, we'll just break for 10 minutes for tea and reassemble with the next session of Abhijit Sanzgiri sir. He's already here, and post that the last session on the panel discussion. So just a short, quick break of 10 minutes, please. Welcome back to the next session. The next session is on verification of advances. As I said earlier, the NPA norms, IRAC norm, as well as the advances is the hard core of banking. And there are a lot of practical issues, as we just now saw. After learning the IRAC, the right thing is to how to see the advances, what to verify in advances, various type of advances, and with the use of system technology. I think in the COVID, we have learned that using technology. With this opening remark, I'll request CA Sonali to formally introduce our worthy speaker, CA Abhijit Sanzgiri.
Hello, everybody. From the flyer of this seminar session, we can see that WRC has taken a creative steps to listing the topic. Like for planning, we have said the well planning is half done. For LFAR, that importance of communication and reporting. And for the IRAC norms, that is risk comes from not knowing what you are doing. And also for new circulars, yes, auditor should know everything. And now the last topic, that is verification of advances, is the core of bank branch audit. And for this topic, we have an eminent speaker, CA Abhijit Sanzgiri, sir. Sir is CA over a 3 decades experience. He is law graduate and also a speaker at professional forums over 2 decades. Also contributor to various professional journals, ICAI guidance note. He is also author, blogger, mentor, interviewer and examiner, and has also CFO position in a listed company. So I request Abhijit Sanzgiri, sir, to continue. Thank you, sir.
Before Abhijit starts, I'll request Treasurer WIRC CAPU Shandak to offer a memento as a as a token of our love and affection. All yours, please start. Hello.
Good afternoon. And I'm quite pleased to see that those who have attended since the morning are still there till the end. And this is a typical scenario if in a bank branch audit also. So we've started late, but we are supposed to end on time. So though I'm starting with a delay, I would definitely end this on schedule or technically much before the allotted time given to me. So let's go directly and speak. Am I audible? So let's go directly and yeah. So let's take this topic directly head on. Advances constitute the major, the heart, the core of any banking audit. The fees are also dependent on the advances which the branch has. So that's the number one thing which we ask for when we get the appointment letter and we phone the bank manager. Now we have to mandatorily do, as per the LFAR, we have to report on advances over 10% of the total advances size or 10 crores, whichever is lower. So that's mandatorily to be done. And in that we need to do a complete transactional audit. And for the others, it's a process audit. And also in the LFAR, there's a question that you comment on the top 5 standard accounts. So if your top 5 standard accounts do not come from the advances over 10 crores, because each of these advances over 10 crores or each of these advances, let's say over 10% could be NPAs, then you still have to do the top 5 standard accounts separately and comment on the adverse features there. So that's as far as selection of the criteria of an advance account is concerned. Now, how many of us have actually read the guidance note? Anyone with the show of hands? Guidance note 2022 is out. How many of us has read the guidance note? So the guidance note, page 482 of the guidance note specifically gives us what is the basis or the criteria for selection of an account for audit. So what would be the sample size you should select? So specific guidance given on what should be selected. So one is there's a mandatory requirement. And apart from that, what is the sample size you should check is specifically covered in the guidance note. So it says you take a sample of basically all product types. So you may have a car loan, vehicle loan, educational loan, personal loan, loan against property, loan against fixed deposits. You may have a bills discounting, you may have term loans, you may have various unique products also given, loans against warehouse receipts. Take a sample of at least 2-3 loan accounts of each product type, see the process start to end, and then comment. The first thing, let's remember that the primary responsibility of ensuring that things are in order is of the management. And very clearly in our audit report, we say that the management is responsible for maintenance of accounts. And as we say, the management is responsible for maintenance of account. Management means the branch head and his allotted deputies. They are responsible even for maintaining and ensuring that whatever are the questions which we are supposed to write in the LFAR or check or find mistakes, in an ideal scenario, there should be no mistake. The error or the mistake will only be due to the fact that the bank officials are not doing what is expected out of them. Their responsibilities are not being executed correctly. So this is what we would be reporting on. But we very well need to know that this is what they are ideally supposed to do. And when we look at audit as the last line of defense, the first line of defense is obviously the maker or the checker. If you are looking at an area of credit, the credit officers, whose in turn his boss would be the credit head, whatever designation he would be called. And then the next line of defense would be the branch head, who's supposed to be on top of each of these issues. And the audit is supposed to validate whether that is done in order or not. If it is not done in order, then he has to report that the risk management is not basically taken care correctly. Whatever transactional failures are noticed, those transactional failures are purely because that there is a system or a process gap. And the LFAR very specifically wants us to comment on the system or the process gap which is there. So be very clear what you are supposed to do. Once we are very clear what we are supposed to do, then the verification part would be much easier. Okay, fine. So let's start with the top advanced checking, which we are primarily supposed to do mandatory. There is a specific format specifically stated in the LFAR. It's a 25 question format, which the branch manager has to fill up and give it to us. Now, I'm saying the branch manager because we asked details from him. Ideally, it's the credit officer who would fill it up and give it to us. And we have to comment thereon. Now, there are certain points in these questionnaire which actually need to be seen, and I'll only focus on those important questions. So the first question which is important is the basis of valuation. Now, valuation is again not a very standard process in the bank. You may have something which they call as fair market value, and which is the most unfair market value as far as a bank will take. Because nothing is fair, because it's just an utopian, well-wisher, optimistic, highly inflated value which somebody will expect to be received. Then you have the realizable value, which in normal course you should receive if it's a seller's market. And then you have the distress value. If the seller is selling it and it's the buyer's market, the price the buyer commands. But a lot of sales take place in auctions. And in auctions, there is another value known as a reserve price, which at times is even lesser than the distress value. And if you see the success ratio at auctions, at many times in the pandemic, most of the auctions didn't take place at all, or the success rate was less than 10%. In that case, the valuation you are putting for the security valuation, especially in case of doubtful accounts, should ideally be, if it's an auction and an auction has not taken place, it should be at a discount given to the distress value, maybe at least a 5% or a 10% discount. So please note that the valuation is one key aspect when you are commenting on these large accounts, especially if these accounts are NPAs. The second point is the asset coverage ratio, the collateral coverage ratio. Many times you find that the collateral coverage ratio is less than 100%, especially in big account, there is no collateral, it's only the primary security of stock and book debts. So if the collateral coverage ratio is less than 100%, and if the account is going to be NPA, at any point of time, if it shows weakness, then be sure that the bank is not going to receive much money at the end. The third is the insurance. You'll always find that the insurance is taken on the book value, which is another value, which nowhere comes anywhere in the picture for valuation. The book value is only for insurance. So if I have pledged a collateral worth 10 crores, which is the fair market value, which is what is taken for the margin, and if the book value is 2 crores, then the insurance would be done normally on 2 crores. Or maybe it might be done on the 3 crore valuation. But it's nowhere as per the collateral based on which the facility is sanctioned. So please note that would be another issue which is commonplace in these advanced verifications. Then the most important question is, any qualifications in the auditor's report? And you will mostly find that column as blank. Now, that is blank because of the fact that most of the time the audited financials could not be on record, or there may not be any direct qualification in the balance sheet as such, but your notes to accounts may contain various points which would be in the nature of qualification, which the bank manager may not be able to comprehend how accounts are drawn up. So please don't go by what he says and do your verification and read the notes clearly, because a lot of qualifications are smartly hidden in the notes to accounts. The next question is on the overview on the operations of the account. And that's the most important question. That is why there are 2 questions on this. There's question number 21 in the format and question number 23, which basically talks of the branch manager's overview on the operation and conduct of the account. And like we as statutory auditors mostly do, and I really don't know who borrowed from whom or who followed whom. The LFAR, as we have a one-liner answers in many cases, yes, no, not applicable. The branch manager also gives us one-line answers. Good, satisfactory, okay. Now that's not what is expected. One, when you're talking of a branch manager's overview on the operations of the account, and when in the LFAR, you are specifically asked to comment on the transactions in the account, the branch manager's overview on the operations is crucial for you to determine what is his field. And in most of the times, the short answers mean that we need to increase our scope of checking to actually write correctly by finding out what were the operations. So what we generally do is, if we get this one-liner answers, and if we don't get anything in qualifications, if by a cursory glance we feel there are qualifications, we don't accept that report from him, we send it back. And if in case he refuses to make any changes because he says that's final from our side, and that's a matter of another qualification in the LFAR that this is what has been wrongly submitted. Despite having been sent back for rectification, it has not been rectified. And this cannot be relied on in entirety. So wherever you can't rely on, just qualify, and in your observations also state that. Now, issues which are generally noted in this format for large advances, and which will not take even 10 or 15 minutes for us to put that. One is the fact that you have not got the latest balance sheet. So in some of these accounts, you will not even get the 31st March 21 balance sheet. In the format which is supposed to give, he is supposed to give you the estimates for 31st March 22. They will just not be there. They will just not be filled up. If you see the sales would be decreasing. If you see the profitability would be decreasing. If you see the debt equity ratio, the debt equity ratio will not be 3:1 minimum, which is required. If you see a lot of capital, the net worth or the debt equity will just be managed because of the loans we have taken, which maybe we are putting it as quasi capital and treating it as capital. You will have your current ratios going for a toss, profitability ratios very low. You will have very adverse current ratios and quick ratios. And these would be the common findings we would have. Apart from that, the fact that your turnover has to be at least 5 times the sanction limit. The annual turnover would at times be not even 2 times or 3 times your sanction limit. So these are the quick issues which you can immediately find out in the large advances, primarily by the scrutiny of the information which the bank manager is supposed to fill up and give us. Now the next point. How do you again notch up quick wins? By actually pointing issues. One is the long form audit report of the previous year and the concurrent audit report. Now the best case scenario is a very efficient and effective concurrent auditor who has found out real issues and has put in. So that reduces your work because you are there only for 7 days maximum at the end of the year. We again don't know when we'll be appointed. We are on 20th. We really have got nothing. So maybe next week we'll also go. So finally, we are auditing only at the last 2-3 days of the year and maybe another 10-12 days of the next year. So we are there for 15 days, whereas we have to cover a lot of things. But the concurrent auditor is there for about 365 days of the year. So he's supposed to do an in-depth check. And he will have found issues. The best case scenario is found a lot of issues where you have ready-made masala to put it in your LFAR or report on the advances. The worst case scenario is finds nothing. That means you'll still have to check because you can't rely that if he has not found out anything, doesn't mean that there is nothing. Now, SA 600 clearly states when you are relying on the work of another auditor, you have to do what is known as a competency assessment. You have to actually find out the scope, maybe meet the concurrent auditor, maybe discuss with the concurrent auditor, minute what was the discussion, and then take a stand whether you would rely on his observations. And whatever observations you are relying on and stating it without having actually verified it, you'll have to state it very clearly that you've done an assessment. So that's what SA 600 specifically requires us to do. So in case you are relying on the findings of the concurrent auditor, or maybe even what were there in the previous statutory audit, please state so that you have relied on these reports after taking cognizance of what SA 600 specifically is wanting me to do. Now, discussions with the branch head or the credit head. Advances follow an end-to-end process. And the first process starts with the credit policy. So is the credit policy, the latest credit policy, available at the branch? Now, obviously everything is on the intranet, so you'll have a policy put there. Now, is that the latest policy? When was the date it was last reviewed? And what about the circulars from that date till date? Are these there in some folder, or is there some hard copy file maintained? And whether due cognizance has been taken by the credit heads while being on top or in control of the advances? Now, this is simple, smart questioning which you'll have to ask them whether they are doing it. If they are doing it, please show us the audit trail. And if you really ask for the audit trail and you insist on the audit trail, in most of the cases, you will get no audit trail that they have done it. And we are clearly stating in our auditor's report about the management responsibility that they have done everything. So either we are just pasting the management responsibility part of the audit report from what we did last year in 2021, or what is the format which is there. Or if we really check that what is supposed to be their responsibility and ask for the audit evidence or the audit trail, you might not find most of it in most of the cases. So that's another matter where you can clearly state that there is no audit trail to evidence the fact that these guys have actually read the policy and have actually followed the policy. Now the policy also will have, or maybe there might be an independent circular on risk pricing. So if a borrower has been charged a particular rate of interest, what is the basis on which he is charged? Now you might have a sanction letter where it says that the borrower has been charged 12%. But is that 12% correct? Is there some assessment in a sanction note that this is his MCLR or PLR plus 2% that's arrived at? And whether whoever has sanctioned it has the power to sanction that particular interest rate. So that comes to another circular which we should take on delegation of financial powers, who's allowed to sanction what. So if you see, if you are in any private bank, and this should apply to the PSU banks also and applies also, or if you actually go for any loan, there'll be a loan at a particular percentage which the branch head can sanction. So take a simple case of a gold loan. That gold loan could be at 8%, but that 8% can be sanctioned only by a particular authority, or it can be sanctioned at that rate only if it is over a particular amount. If it is not over that threshold, or if it is not sanctioned by that particular head, it will be at a much higher rate. So is the correct rate actually charged? That some simple questions asked on the pricing policy and the circulars on delegation of financial powers will let us know. So the first basic three parts before we actually take up even the appraisal part is the policy, the pricing, and the delegation of financial powers. Now we come to the appraisal part. If you look up at the policy, The policy clearly states that these are the papers we should obtain while appraising a particular loan. And it's a simple checklist. Just take that checklist and see what papers are there in the credit documentation file. If certain papers which are required as per your credit policy are not there, then your obvious question will be, how have you appraised it without these papers which you are supposed to have? And do you have anything on record which says that these papers are not needed and that is why we have not specifically asked for them and not obtained them? So like we have our standards of auditing, where standards of auditing says that whatever you do, you document. Standards of auditing requires us, any oral communication also has to be put in documentation in written form. Communications with those charged with governance. The same way, if these guys are also doing something in appraisal, they need to put it on paper. If they have not done something, obtained something, why haven't they obtained something is again something which they need to document, which you will not mostly find. Now, are there any adverse features noted which has been deliberately concealed? Now, you will find a lot of these possibly, and a lot of these can be explained as we just forgot. So the classic defense of any fraud is the oops theory. Oops, it was an error. Now, is that an error? Or is there a deliberate concealment of the fact that certain information which is needed was not obtained, or which was obtained, but because of the fact that it was damaging, was never kept on record? Now, this is something where this is a deliberate intentional act on the part of the branch to hide up certain facts and to ensure that the loan is sanctioned. And not all loans will be sanctioned because of the fact that there is some financial gain to any branch head. Most of these sanctions happen where certain key information is ignored, at times deliberately, is because of the pressure of targets. And you'll see a lot of bank managers, especially in healthy banks, not following for recovery. They also follow for recovery wherever it is there. They are also following up for you to take loans, especially car loans, or they want you to take gold loans. And there have been cases where managers don't want you to even close loans. So I know many people who have gold loans or some small loans and they want to repay it. The branch manager is refusing to accept the repayment. Now, technically, that may amount to window dressing also. Because here is somebody who wants to repay, but is not being able to repay because the branch manager doesn't want to reduce his loan size. The second thing is, people who have not utilized their limits are also forced to utilize it so that the advances get inflated. Anyway, it's good for a chartered accountant because if it inflates and goes over a particular size, our fees will increase, but that's not the purpose in which this should be done. So are there cases where there are withdrawals at the year end and immediately at 2nd or 3rd of March, April, the money is bought back? These are classic cases of evergreening or window dressing, which you should see, or the fact that money is withdrawn and money has gone to a third party, and from the third party, it has gone to a fourth party, maybe in the bank, if these guys don't know to plan things properly. And again, it comes back as a fixed deposit here. for a temporary period of time. So you have inflated both your advances as well as your deposits. And this is not very uncommon. Again, recoveries at the year end. Recoveries at the year end is also very commonly explained because the borrower also wakes up at the last minute, because the borrower is anyway a businessman and he's used to the fact that even for a tax audits or account signing, he wakes up at the last minute. So he's habituated last minute riser. So he repays also at the last minute. Now, whether that is genuine or whether it's by giving him some other loan to some other borrower. And one of the classic cases where this is camouflaged, because what we will do is we'll normally check such cases by looking at the surname. So Abhijit Sanzgiri, whether some other Sanzgiri has been given a loan and that money has been bought back through another account back again as a recovery in the account which otherwise would have become an NPA. But one way, if this loan is given to the borrower's daughter who's married, you'll never come to know and catch by the surname. You will never come to know and catch by the address. You'll never come to know and catch by the email ID or the telephone number, which is most common way of finding an interconnected source. Now, why I'm suggesting you that you at least check this, and this doesn't take much time to go and deep dive, is that if an evergreening or window dressing was to be done by this route, which is very common, and at least you have done the diligence and plugged out a major portion which is evident and apparent from the face of the records. So be skeptical, especially of recoveries at the year end, because the RBI circular is very clear that the auditor has to be satisfied as to the genuineness of the recovery, and the bank manager has to give that evidence to the satisfaction of the auditor. So for all recoveries at the year end, have you written to the branch head that we want confirmation on the genuineness? Now, how he gives it is another issue. How he thinks it's genuine. He may take a letter from the borrower that he's sold some stocks or property or whatever. So that's something we need to do. So that's the appraisal stage. At the appraisal stage, you will make a temporary or a draft sanction note. Is that policy in place, or directly a sanction letter is issued? Because your sanction note may technically contain a particular rate which, or a repayment period or an EMI, and the borrower has to accept it, and only after the acceptance a sanction letter is issued. The sanction letter is not the first point of issuance. A letter of sanction terms and conditions is issued first, it is accepted by the borrower, and then only a sanction letter is issued. So please check whether this process has been followed or not. And now, as per the latest circular in February, all banks have to intimate the borrower what is the EMI, when will the EMI be collected, when will the account be an SMA, and when will that account be an NPA. And if this is not there in the sanction letter, it is a specific violation of the RBI circular of February 2020. And if you want any important circulars which are there, a WRC newsletter has a column of all important circulars which have been issued month on month. So this is again a ready-made stuff which you'll get, no need to hunt that around. WRC has even made it easier for you. The WRC thought that the guidance note is also too bulky. So the revisionary is much simpler. But if you read the guidance note, it specifically gives you a format of a management representation letter which you need to take. So that is absolutely spoon fed. आपको सिर्फ वो सॉफ्ट कॉपी में लेना है, थोड़ा बहुत बैंक का नाम चेंज करना है, ब्रांच का नाम डालना है, ईयर शायद वो ब्लैंक लिखा है 2022 लिखना है. Some points which may be applicable or not applicable, you just have to make a 15-minute change and send it. The MRL is over and dusted. It is ready even before you even visit the branch. So MRL is there. List of important reports. So the MRL also includes your program on advances. So please check that. What documentation you should have in your audit file. The guidance note specifically states in a checklist format. So आपका अगर peer review हो रहा है तो peer review को कुछ काम ही नहीं करना है, उसको सिर्फ वो guidance note का पेज उठाना है, देखना है ये तो तुम्हारे इंस्टीट्यूट ने ही गाइडेंस दिया, अभी दिखाओ तुम्हारी ऑडिट फाइल और बताओ ये डॉक्यूमेंट्स है कि नहीं. Now again, you don't need to do anything. This document which should be there in the audit file has to be obtained from the branch. So branch को वही सॉफ्ट कॉपी का जो है भेज दो उधर. Again, spoon feeding. I don't think any other document would do so much spoon feeding for any professional anywhere in the world like what this guidance note does. And the third is the reports which should be extracted from CBS. Again, there's a list of another 30-40 reports which you should have. आपको सिर्फ वो रिपोर्ट उठाना है, उनसे मांगना है, मिला अच्छा है. My team is very happy if the report is not there because उनका काम बच गया और क्वालिफिकेशन मिल गया. और 40 रिपोर्ट जो 40-50 जो भी डाले हैं, maybe 10 people who have drafted the guidance note have put all their brains in it and made such a comprehensive list that you may be dead sure that 25 report तो आपको मिलेंगे ही नहीं. So you have ready-made points, because if these reports are not there, then it gives rise to another qualification. Whether you have received all the information and explanations which to the best of your knowledge and belief were necessary for the purposes of the audit. और आपने information मांगा है, और information जो मांगा है is not what you are writing on your own. It is what is prescribed by the guidance note, which has the authority of the institute. It has the authority of the ASB. So no bank or no statutory auditor, especially the central statutory auditor, will dare comment anything on why you are asking for this report from a branch statutory auditor, because most of the central statutory auditors would have been part of the drafting of this guidance note. So it has received their patronage straight. So this is something very clearly is something which is spoon-fed. So you have an illustrative MRL, you have a draft audit program, you have documents which should be there in your file, you have reports which you should have, and there is one more checklist which is given, is what are the reasons for divergence in NPAs. So the topic which was taken earlier, for which he spoke at length for over 2 hours, in 5 minutes, I can just pull up the institute guidance note and say, these are the causes of divergences which are pointed out by our guidance note. And you ask the branch straight for it. How are you on top of it? Now, one, if you have done your audit in accordance with the guidance note, if there were any issues which have come apart from the guidance note, then can you be at fault? Technically, nobody will say that you were not diligent. You have done your diligence, you have followed the guidance note to the T. Now, whatever would be the impact by the peer reviewer or the impact by any disciplinary council would be completely blown away by the fact that I have followed the guidance note. But the point is, do I really follow the guidance note? Or is the guidance note only read by those who have drafted it? And that too, within those who have drafted it, is read by those for only those paras which they have drafted or they have reviewed. Now, the guidance note is really meant to be read. And the biggest, if I can say, one mistake where the quality of audit of a bank is really, really poor. And this is not, I think we need not have the session, we can go home early on expectations by central statutory auditors. And it's not an expectation of a central statutory auditor, it's a basic fundamental duty, is to read the guidance note and conduct their audit in accordance with the guidance which is given. And in case you have any issues, वो guidance note के कोई पेज में किसी ने वो guidance note draft किया, उनके नाम भी आते हैं, केतन सैया भाई का भी नाम रहेगा, तो उनको पूछो कुछ समझा नहीं तो. The language is very simple. There's nothing which you can't understand. But in case still you want to trouble him, you can very well ask him. You can very well ask me also. I'm also a party to that crime of drafting a guidance note and thrusting it on the members to read. But technically, our biggest problem in any bank branch audit starts with the fact that the guidance note is really not read. That's unfortunate. Why? I still don't know. Then the standards of auditing. And the special purpose certifications. The standards of auditing, again, very clearly we put it out in our audit report that the audit is conducted in accordance with the standards of auditing. Now, this is the biggest cut pasted and copied statement by all auditors. Because if we really don't copy paste and put every line in our audit report only based on our checking, then this line will never go in. And we are all talking of MOCs, and MOCs are nothing but qualifications. And your SA 700 very clearly states that if there is a qualification, then you please communicate that qualification with the auditee and get an explanation from the auditee. And SA 265 says that all communications with those charged with governance have to be in writing. And as a peer reviewer, I found in all cases, MOCs which are given or qualifications which have been made have all been in oral form. Very few people have been able to reproduce the trail of a qualification being sent by way of a mail and a reply being received back and the exact wordings of SA 700 being followed. SA 600 relies on the work of concurrent auditor, relies on work of other auditors like valuers or lawyers. SA 605, whatever it is just not followed. SA 315, risk assessment. SA 330, auditor's response to assessed risk, materiality. SA 320, SA 530, sampling. It's just not followed. So if we follow the essay, whatever we learned in, I believe, Inter-CA, which maybe most of us have done it 20 years, 30 years, 10 years back, and which we have forgotten, I think we need to revisit that. And the next is the guidance note. And if we revisit the essays, we revisit the guidance note. And the third, which I'm coming to, is the special purpose certifications. Now, these certifications always come to us at the last minute. And at times it has happened that we have signed off the audit. We've gone home, and the next day we get a call that some certificate is pending to be signed. Now, this can't happen ideally, because whatever is there in your closing circulars list, that these are the certificates to be obtained, will only be the ones which will be signed, unless there is something which the bank itself has missed out and not put it in the closing circular list or in your appointment letter, which is an afterthought that they missed out. So it's not your fault. But if you are signing off those certificates based on what is your requirement as per your appointment letter and closing it, there can't be any miss out. And again, when you're been given this dump to sign, how are you certifying the accuracy? You hardly have any time. So have you at least done a test check of certain figures at random from the figures which are there? How is the figures actually derived at? And what I always do is, for whatever I've checked at random, because it's not possible to check each and every figure, is I always state in the covering letter to every certification that this is what I did, this is how I did, and this is the extent to which I checked certain details. So I clearly state, if I've checked certain ledger accounts, this is what I've checked. If within the ledger account, I've checked A, B, C, this is what I'll state. If I have followed a particular audit methodology, I'll state that. So my certification will be factually based on what I actually did. The institute doesn't expect us to give an absolute assurance. It says an absolute assurance is a myth. We can only give a limited assurance and a reasonable assurance. So why do you want to certify and give a absolute assurance? The same way, when it comes to the long form audit report, please state any answer to any question on advances is what was the sampling size you took, so to what extent you did, how you did, and what you did. And please state so in the LFAR, because the LFAR asks you on advances to state, please give your opinion on, please give your judgment on, please state on the basis of accounts examined by you. So when it asks us to do a lot of things, please state this is what I did, how I did, and to what extent I did. And also state that you were appointed only on this date, and you were for the year only for 2 days or 3 days in the year, and only maybe 7, 8, 10 days, whatever in the next year. And this audit and whatever is the reporting for the entire year is done on the checking for those dates, plus MRLs, reliance on the work of another auditors, plus whatever we did. So be very factual. So I end by just saying that please follow 3 things. One is, please read the guidance note. Do the audit in accordance with the guidance given as per the guidance note. Please conduct your audit in accordance with the standards of auditing. And document whatever you can, wherever you can. And if you are in doubt, please clarify from the central statutory auditor, for whatever are the faculties for any courses you have attended, for whoever has written the guidance note, or your peer auditors. So when in doubt, clarify and qualify. And please remember, we can't give an absolute assurance. We can only give a limited and reasonable assurance. And if you look at what would be the expectations from central statutory auditors, is technically the central statutory auditor is also a chartered accountant like us. So for him also, these applies. So as he expects us to follow this. We also expect him to follow the same thing. Because we are all fellow professionals. Any questions I can take? Thank you.
An experienced person like Abhijit, without paper, without presentation, so many practical insights on verification of advances. Also, he has been, working on guidance note. So absolutely, he knows point to point chapters, what all is, given in the appendix, MRL, the audit checklist, the RBI divergent. And yes, on behalf of member, I can say, Abhijit sir, we have been reading guidance note. However, these type of seminars are like capsules, and everybody today want, faster recap, T20. So, these type of publication of WIRC and the seminars are useful. But yes, the ultimate Bible is guidance note, and as and when any query is there, any answer is to be searched, the guidance note is the ultimate publication. With this, sir, we place on sincere thanks on records for sparing your valuable time and coming over to the Western India Regional Council. And we also expect you to continue your contribution, valued contribution in the years to come. Thank you so much. Request all the participants to carry it with the loud round of applause. Moving towards the last session on the panel discussion. थोड़ा सा कर दो ना change. Though the last session has been titled as expectation from branch auditors by the central auditors, as well as Reserve Bank of India, as well as bank management. But I'll take little liberty of also answering all the questions which were asked online, as well as there are some questions which I have received in the personal chat. So we will utilize the experts' time in getting the queries resolved of the member. That will be more useful and more fruitful, that the members who are attending online as well as those who are attending in physical mode, if those questions are covered in this session. Yeah, there have been questions. So I'll request all the three panelists, CA Pankaj Tiwari, CA Jayesh Kala sir, to please come on the dais, and also CA Sonali Chandak, the moderator, to come on the dais for taking forward this last session. Before we start with the session, though the other two speakers introduction was done, but I'll take this privilege of introducing CA Jayesh Kala, one of the panelists and eminent person. CA Jayesh Kala is a versatile personality, past regional council member, past treasurer of Western India Regional Council. He is having experience of more than 2 decades in rendering advisory, planning and compliance services for corporate in income tax matters. He is a founder and managing partner of J. Kala and Associate, one of the leading chartered accountant firm in Mumbai, and it's having presence across 7 cities all over India. CA Jayesh Kala is a committed, dedicated professional, and we have seen Jayesh working very, very hard in last term in the Western India Regional Council. He has persuaded many young entrepreneurs to set up their own venture and also has been, mentor to those young chartered accountants in setting up their own practice. CA Jayesh Kala has been awarded with the Man of Excellence Award in the recognition of outstanding professional achievement and contribution in nation building by Indian Achievers Forum. He is also, to his credit, has an award, Professional Award of Excellence at Paris. This is an appreciation award given to him, conferred on him on 2017 by the French European Indian organization based in Paris and the World News Network. Also, he has been conferred with the Bharat Jyoti Award organized by the Indian International Friendship Society. With this, I welcome CA Jayesh Kala to this panel discussion on bank branch audit and request all of you to carry it with the loud round of applause. We'll begin with the question answer panel discussion. I'm so sorry. See, Jayesh Kala has joined now. I request our treasurer, CA Piyush Chandak, to offer a memento as a token of appreciation and our love. Also, I request Secretary CA Shweta Jain to give a memento to our moderator CA Sonali Chandak. So before Sonali starts, let me take this liberty of asking, few points to all the three panelists. So one by one, Abhijit, Pankaj and Jayesh bhai, all of you, come from a very rich experience. Like Abhijit has been doing big cooperative bank like NKGSB. Pankaj has been currently doing Axis Central Audit. Jayesh bhai is again doing nationalized banks central statutory audit. So, what are, as your central auditors, what are your expectations from the branch auditor, or where you look upon that the branch auditor should be doing something better and should be, working upon more areas, or the areas where, you expect the branch auditor to do more? Yes, you would have covered somewhere in your talk also all this thing. The Abhijit sir has covered, to some extent Pankaj bhai has also covered, but some points, key points which you expect from a branch auditor, beginning with the Abhijit.
So I have already said that guidance note, standards of auditing, and in whatever you do, you state what you did, how you did, and to what extent you did. But I think one quality which all auditors, I believe, should have is the courage of conviction to call a spade a spade. I think the moment you raise an MOC, there would be a lot of pressures, and you would also get to meet the regional heads and zonal heads also at times. So please, if you are right, stand by what you feel is right. So have the courage of conviction to stand firmly by what is your professional judgment. And if a matter needs to be qualified or disclaimed, please do so. An LFAR is no substitute for a qualification in the auditor's report. So please don't state something in the LFAR which should have been a matter of qualification, because you are giving an evidence against yourself. And anything which is written in the LFAR will just not save you that, oh, I put it in the LFAR. No, it won't. If there is a qualification, it's the qualification. So I think these are basic hygiene, I would say. They're not expectation. This is basic hygiene which a chartered accountant should do as a professional, and it need not be the expectation of a central statutory auditor. It's the expectation of a fellow professional from another professional, so that we do our audit with the necessary care and diligence, what we are expected to and what we have the competency to do and we can easily do. I think that's it.
So I fully agree with Abhijit sir that, as an auditor, we need to also not only maintain the expectation from central stat auditor, he rightly said they are also a fellow auditor, but also to maintain the expectation from the RBI, from the regulator, from the bank's management as well. 2 to 3 points clearly, from the central stat auditor perspective, I can specifically point out. One is, if you're discussing any account, if you're writing anything about the accounts, etc., by putting into the LFAR, avoiding the MOC is not the appreciable way to do it. He rightly said, if you have a conviction and the courage, downgrade that account. In many banks, I have encountered some of the accounts which have been discussed at a length and had been written that please take a call at the central office level, please take a call at the zonal office level. Please provide those MOCs irrespective of the fact what pressure is there from the bank's management. The second and the most important point is that the LFAR is a long form audit report. Please let it remain a long form audit report. What I mean that whenever you're commenting in the long form audit report, mention the facts, mention the samples, mention the account, whichever you have verified before you comment any observation to that extent. That helps us not only to the RBI, that helps us to the central stat auditor, to put it frankly to the RBI, because normally how the process happens, the way you report in the LFR, it gets consolidated at the central office level, and that's a final report which goes to the RBI with some addition to that effect. Third, whenever you are giving MOC, please look at the closing guidelines. I will tell you my personal experiences. These MOCs are not passed at the branch level. These MOCs are normally passed at the central office or the zonal office level. We have to reach out to the branch auditor to correct the MOC, to get the revised MOC to that extent. So these are 2 to 3 aspects. And being central stat auditor, we also have certain responsibility. If you have any clarification required, you need some guidance on some of the matters which you might have come across, you can easily reach out to them. So it has to be a dual process. That's it. Thank you.
As you said on the LFAR, I think it's not a short form audit report, it's a long form audit report and has to be really long to answer the questions. At times the answers are shorter than the questions. And for any super hit long form audit report, I think it has to be as long as possible as the super hit films are. I think all the super hit films, the Bahubalis or the Pushpas of the world are in part 1 and 2. So let the LFAR be as long as would be a reading content for somebody, that he should spend at least 6 hours reading it and trying to spend another 12 hours even in solving what the issues we have raised. Yeah.
Thank you. It's rightly pointed out by Abhijit sir and Pankaj ji. The details has to be informative. See, what happens generally is that at the central level, we have access to the LFAR which you submit, which as a branch auditor submits at the zonal office or at the RO level. So we can access to that point. If sometimes the point is so vague, understanding itself is a big problem as to what the auditor wants to say. like he's mentioning that there was a stock audit report, and in that stock audit report it was mentioned that the DP is not properly calculated, hence we suggest that the account should be downgraded. First of all, if the account should be downgraded, then you cannot suggest it. You have to either downgrade the account, or you have to be very peculiar, very to the point. Now this kind of thing is that it is very vague. Now how, as a central auditor, we have to judge as to what you are trying to mention unless and until we have access to that stock audit report or to that particular report what you are referring. So आप लोग जब करते हो तो उसमें आप ये मत देखिए कि हम लोग ने क्रॉस रेफरेंस दे दिया तो वहां पर बैठ के जोनल ऑफिस या सेंट्रल ऑफिस या सेंट्रल ऑडिटर देखता रहेगा. You have to, if possible, you attach that copy of that relevant report or relevant thing, whatever you are cross referring, so that it becomes easier for the central auditor to say with conviction that whatever my branch auditor has done, it is final. Otherwise वो vagueness का the bank sometimes take a benefit कि सर ये तो वेग है तो समझ में नहीं आ रहा है क्या हो रहा है क्या नहीं हो रहा है, and at a central office level everybody is under pressure for completing the task, so sometimes it happens कि नहीं भाई चलो ठीक है इसको छोड़ दो. So that should not happen, and that will happen only when you are giving all the details in a very crisp language along with all the supportings. ऐसा नहीं होना चाहिए कि आपकी मेहनत करी और वो वहां पे जाके कुछ उसका नतीजा नहीं निकल रहा है. एंड एज अ गाइडेंस की अगर अपन बात करते हैं तो का जो see you will be given around 10 to 12 days time for completing the audit. Now generally what happens is, I was also branch auditor for almost 15 years. Generally what happens, आप जब जाओगे ब्रांच में तो हाय कैसे हो क्या करते हो, दुनिया भर की आपसे बातें करेगा ब्रांच मैनेजर विदाउट कमिंग ऑन द सब्जेक्ट. आपको खाने के लिए लेके जाएगा, नाश्ते के लिए लेके जाएगा, ऑल दैट स्टफ ही विल डू जस्ट टू किल द टाइम. 4 दिन के बाद जब अपन कहीं पे मतलब वी हैव जस्ट गॉन थ्रू दी कॉन्करेंट ऑडिट रिपोर्ट और जो स्टॉक ऑडिट रिपोर्ट्स वगैरह जब करे उस टाइम से प्रेशर आना चालू हो जाएगा. सर आपके प्रीवियस ऑडिटर वाज सो फास्ट, दे कंप्लीटेड द ऑडिट इन 4 days. इतना बोला कि आपकी तो टेंशन आ गया, उसने 4 दिन में कंप्लीट किया, इट मींस कि वी आर इनएफिशिएंट. दिस जनरली हैपेंस. सर उन्होंने तो इतना डीपली चेक किया था फिर भी उनको कोई पॉइंट नहीं मिला. तो अपन कोई पॉइंट रेस करे उससे पहले उन्होंने अपने को डीमोरलाइज कर दिया कि अपन पॉइंट जो रेस कर रहे बराबर में रेस कर रहे हैं कि नहीं कर रहे. So all that thing is going to happen. So for avoiding all these things and to write with courage and conviction, as Abhijit sir has mentioned, Abhijit जी को हम लोग है ना बैंक ऑडिट का एनसाइक्लोपीडिया बोलते हैं. कभी भी कुछ भी प्रॉब्लम हो जाए 24/7 इनको खाली फोन करो and believe me, with circular number, with circular date, everything is ready with him. So you can also take advantage. We are as such taking advantage of his knowledge. So what he was telling, the courage and conviction, unless and until you have gone through the entire guidance note, you have gone through the RBI circulars, which is again very important. You are very thorough in your standards on auditing. तब जाके आपको मालूम पड़ेगा कि whatever you have mentioned is perfect and you cannot be overtaken by the branch manager or to that extent by anybody. So the only thing what is the most important is you will have to go through the guidance note. भले आपका टाइम जाएगा, 2 दिन पूरा लगेगा, 3 दिन लगेगा, बट आप उसको इग्नोर नहीं कर सकते हो. आरबीआई सर्कुलर रिसेंटली बहुत सारे सर्कुलर्स आरबीआई ने दिए हैं. The one which he was referring was also very important, that the 12th November circular which mentions that the NPA has to be marked at the day end. Then the day of the sanction has to be, the day of repayment has to be particularly mentioned. Clear नहीं होएगा. And bank audit, believe me friends, without clearing your concept, without going through the circulars, it will just a mere formality. आप जाओगे क्योंकि सारी चीज सिस्टम से निकलने वाली है और ब्रांच मैनेजर का एक ही आने वाला है, सर ये तो सिस्टम से निकला है, सर ये तो सिस्टम से निकला है, सर ये एनपीए कैसे, ये एनपीए होता है आपके हिसाब से, नहीं सर ये तो सिस्टम से आया, आप क्या करोगे इसमें. So you will have to be thorough with all that thing. So that's a piece of thing what we are expecting as a central auditors. I would also like to acknowledge the presence of my colleague Mr. Udesh Dasani and Mr. Manoj Rathi, who have come all the way from Indore. They are also central auditors from Bank of Baroda.
What you said, I just like to add or just, if you are anyway writing it in the non-form audit report for the central statutory auditor to take care, So if you are basically writing in the long form audit report for the central statutory auditor to act on it, why not phone him before you put it and ask for his view and opinion and take his guidance? There's nothing which forbids you from doing that. You just phone him up, and all of them are fellow professionals. All of them are ones which you know, and just do that. I think it just takes a phone call. It just takes consulting with him, and he will guide you in case you are in doubt. So when I said, when in doubt, please clarify, please do.
Sir, on this, some of the participant has said online that usually earlier there were, interaction meeting with the central auditors and the branch auditors. So have they stopped, or what is the scene in any of your banks, wherever?
On this, because of COVID, these meetings are not taking place physically, online, yes, but maybe with the paucity of time, if they are not happening. But one is the name of the central statutory auditor is clearly available, his phone number is available, just need to take a call and call him. The second is, even the institute has the Accounting and Assurance Standard Board has formed a committee of panelists who will be ready to answer all your queries. So if a query is put forward to the mail ID which is given, within 24 hours, you will expect a reply and an answer to whatever is your query. So please make use of it. When in doubt, as I say, please clarify.
This was a question by Khushi, and Mr. Gaurav Oswal has asked that, is it practically CSAs are going through all the LFAR, or how do they do it?
Yes, yes. LFAR को compile करने में मतलब literally we have to go through. There is no other option. एक एक पॉइंट आपका जो भी रहता है उस सारे चीज को हम लोग गो थ्रू करते हैं एंड उसका हम लोग फिर कंपाइल करते हैं, बिकॉज इट इज पॉसिबल दैट देयर में भी आप लोग ने एक ही चीज को 4 जगह पे डाला है, उसको खाली हम लोग रीग्रुप कर सकते हैं. अदरवाइज ऑल द पॉइंट्स व्हिच यू मेंशन आर लुक्ड आफ्टर वेरी डिलिजेंटली, वेरी सीरियसली, विद ऑल सॉर्ट ऑफ सीरियसनेस गिवन टू ऑल द क्वेरीज व्हाट यू रेज. इसलिए मैंने आपको पहले ही बोला था कि व्हाटएवर यू राइट, यू डोंट कंसीडर कि भाई ये कौन पढ़ने वाला, इतना कौन पढ़ता है, ऐसा मत समझिए. आप पूरा पढ़ा जाता है, इसलिए जितना आप डिटेल में लिखेंगे उतना ही सबके लिए बेटर है. अदरवाइज मेनी टाइम्स यू विल फील, मतलब हम लोग ने किया है बैंक ऑफ बड़ौदा, व्हाट वी डिड, अगर कोई चीज हमको क्लैरिटी नहीं आती तो वी डायरेक्टली कॉल दैट ब्रांच ऑडिटर एंड अंडरस्टैंड द मैटर व्हाट इट इज. इट टेक्स टाइम, सो इट्स बेटर दैट यू ओनली गिव ऑल द डिटेल्स एट वन शॉट when you are finalizing your LFAR.
So I'll just add. See, central stat auditor, be it private bank, you don't have a concept of branch audit, but in the case of public sector bank, you have this concept. The central stat auditor might be visiting top 20 branches, identifying the issues over there. But if you look at the LFAR, which has to be submitted by this central stat auditor, it has various aspects to be reported upon. It has an aspect to be reported upon whether the branches or whether the bank has complied with its rate policy or not, whether the sanctioning and the appraisal process is accurate or not. These are the things which one cannot comment upon only visiting, let's suppose, top 3, top 4, top 5 branches. These are the points which gets gathered from your LFAR, which are reported by the branch auditor, and the points which are mentioned in the branch auditor also form part of the annexures which are submitted to the RBI. And those comments need to be addressed by these branches respectively. So don't think that these comments are never read. They are read, they are well thought, and they are put it to the RBI for the compliance by the banks.
Sir, continuing with your discussion, specifically LFAR ask about the 7B point. Are there any other matters which you as a branch auditor would like to bring to the notice of management or CSA? Then what kind of matters you expect?
So if you look at the LFAR, and fortunately the LFAR got revised after a lot of effort by the institute, everybody, the LFAR covers only certain specific items about the asset, liability, deposits, P&L items, etc., etc. As I mentioned during my presentation, I think so. Let's suppose you have this current account circular which is there, where the banks are supposed to comply with the current account circular. They need to close some of the current accounts, etc., etc. You don't have any specific clause which is there in the LFAR to report upon that compliance.
Now, one way to report upon that compliance is put it here, because as a central stat auditor, I would be looking at the HO level or at the central office level, the compliance of the circular. But if I get certain instances from the branch auditor LFAR, that will be good for me. The second matter which can be reported, in that aspect is about, let's suppose you have this cutoff dates, loans which are there. You have a, variance analysis to be done from the deposit perspective or from the P&L perspective. But we have observed, and one of the branch auditor from a north has mentioned in the one of the LFAR, that there were certain loans which were disbursed in the last week of March and subsequently got closed in somewhere first week of April or second week of April. Now, these are the points which, and let me tell you, my friends, the points which you mentioned normally in the clauses may be overlooked. But if you mention in this clause, it will be 100% looked up by the central stat auditor. That does not mean that you don't comment in the respective clauses. If you want to put up certain important matter, it could be addressed, the two examples which I just quoted.
The main point is that if you have found issues in any branch, which you are sure that this will not be in your branch, it will be in all other branches, because you can only find mistakes in your branches and pass an MOC if there's something which is done wrong. And there's a certain manner of classification, certain circular is not followed because this is the wrong way of interpreting it by all the branches. Now you can only correct in your 2 or 3 branches which you get as branch auditors. For the rest, it's real work for the central statutory auditors, how they really do it. And believe me, if such points are put, then it's a nightmare for the central statutory auditors, because he is to take a call from all branches, and none of the branch statutory auditors except you may have found this issue because you were quite good in interpreting and finding that.
Sir, just a moment. In this point, what he was mentioning, I would request Udesh Bhai to say his experience regarding that NPA issue, what was flagged out, which was affecting the entire bank as a whole, wherein if there is any recovery in NPA account, how it is adjusted. Sir, please, your guidance. Ketan Bhai, with your permission. Because it's a very good point and it can happen in other banks also.
What was happening in NP recovery, they are taking a validating of this recovery took in the account. Whatever the recovery in the account, they place on the day one on the account was NPA. So what was happening, amount received on current date, but the system is taking validating as a date of NPA. So banking losing the interest of that amount recovered from today to till date. This is the issue. So there are some, if you will go through the systems, you will find small issue which will bank as a whole. So the points already raised by the authorities. Thank you.
So that is a point. NPA में अगर रिकवरी होती है तो आप लोग को पता भी नहीं चलेगा कि वैल्यू डेट कौन सा आ रहा है, बिकॉज नॉर्मली एट ब्रांच लेवल यू डोंट कॉन्सेंट्रेट ऑन दैट वैल्यू डेट. NPA 1st of August को हुआ है, पैसा आया है 21st of February को. So if the money is coming on 21st Feb, then effective date should be 21st Feb. Am I right or wrong? Yes or no? But the system takes it as of the date of NPA, that is the 1st of September, whatever it is. So पैसा February में आया, उसको validate करते हैं last date को, जब February या April जब भी हुआ है. So that is a flaw which is happening. So it may happen in other banks also. So you might just have a look at it. This can be reported in that other matters which has to be brought to the management notice of this central auditors or the management. This can be bank specific. We are just discussing aspect without quoting any particular bank.
So one question for Pankaj Bhai, with relation to your talk, somebody has asked that in second approach, are you doing summation? That is a question. And whether the same is the interpretation of Reserve Bank of India.
So I think they are on view 2 of the CCOD accounts, if I'm right. So view 2, I'm not doing any summation. View 1 and the existing practice was on the summation model. View 2, I am creating a demand of the 90 days DPD, whenever the interest is getting debited and the interest is not served in that particular account, I'm creating a DPD 1. And the moment that account crosses 90 DPDs, I'm classifying that account as an NPA. What was the second part?
Is that the view of RBI?
So as I said during my presentation also, we have got some comfort from the IBA clarification, which has not been refuted by the RBI, which is issued to all the banks. And you will find those examples in the customer education material, which has come from most of the banks on their website, or if you're a customer, you might have got from the respective banks. So as of now, and to be very frank with you, we have put this question to the RBI as well during our meetings when it happens with the SSM. Still, they have not rejected or they have not commented upon that view.
So one is, I think we are basically, this question comes at a lot of times, and I always have one thing that at heart, we are tax practitioners. And when we are tax practitioners, we look at the client's interest first. Okay, how can we read in between the lines and possibly look at saving taxes? So the same attitude we carry here and see how we could avoid an account being NPA. I think it's none of our business. I think we should do what is right. Now, coming to RBI's view, and explicitly RBI's view, why do divergence happen? Is if the account is weak and subsequently it becomes an NPA, the RBI adds it as an NPA as of 31st March. Very clearly going by the spirit that the RBI expects the account to be performing and earning revenue for the bank continuously. Now, why are we overthinking and saying that this account is an NPA on 31st March or 1st of April? Technically, अगर वो 1st April में NPA हुआ है, and if it's a big account, then RBI would definitely add it as an NPA on 31st March. Any accounts which have become NPA before the signing of our balance sheet, wherever I have signed balance sheets, and I've signed many balance sheets of foreign banks and cooperative banks, I have classified them as NPAs. And earlier, whenever I have not classified as NPAs, RBI has come down very heavily on me. So the RBI stand is very clear. If an account has been regularized or technically is standard as of 31st March and subsequently it's on a borderline case and subsequently it's an NPA, Reserve Bank will definitely treat it as NPA. So you also treat accordingly. I think there's no need to even ask a clarification from the Central Statutory Auditor. You do it on your own. Straight.
Sir, this is the question regarding new circular of provision on non-fund base. Whether we should suggest provision of non-fund based exposure as of 31st March 22 in respect of the NPA customers which has been identified by us through MOC.
So let me clarify that provision on the non-fund based exposure was restricted to the cases which are under IBC or which are under resolution plan framework as per 7 June 2019 circular. Now, obviously, first the management, there is no provision which has been prescribed by the RBI with respect to the non-fund based exposure provision with respect to the NPA accounts. So first of all, as an auditor, we don't have to suggest anything to the management. It is the management who has to decide whether they want to create any provision or no as per an approved board policy. You can't be creating any arbitrary provision in the profit and loss account. If you're creating any provision in the profit and loss account, it has to be supported by an appropriate board approved policy. So I don't think so, we need to comment upon anything with respect to the provision on NFB exposure, etc.
So again, I would take these cases as non-fund based exposures. Let's say there's a non-fund based exposure of 100 rupees, of which 50 rupees has already been devolved as of 31st March and has already been provided for, and the account is really bad. So that non-funded exposure, which is devolving in maybe April or May, will anyway devolve and will again be provided. So for standalone banks where we have signed, the banks also have provided that NPAs. Wherever some banks have not done it, we have asked them to provide that as NPAs. Anyway, if Reserve Bank is going to come in the month of April, May, June, whenever it is, and they find that they are NPAs, they will classify them in NPA. So conservatively, as a matter of prudence and conservatism, I would suggest that this should be provided for.
So a lot of time, the question here is that liability is going to come in future. So as of 31st March, is it not a contingent? It is not. See, there have been a significant portion of it which has already been devolved and it has already been booked as a liability. As of date, it is not contingent. You know for sure that it is going to devolve. There is no contingency in that. And because the fact that there is no contingency, I am making a provision. There is no remoteness on the fact that it will not devolve. 10 LCs, 10 guarantees have been invoked that borrower has no funds. Especially borrowers may have died, borrowers may have become bankrupt. There is no way that I should pass on the provision to the next year because as of date, I know very clearly that this is a liability which will hit me. So that's the stand a lot of foreign banks take. And that's nowhere where RBI has refuted it that you are booking a provision for the next year in the current year, they have accepted it. And when there is a stand where somebody is following, there is a precedence. I think I will, if it was a nationalized bank or any branch, I would do it. Whether the central statutory auditor doesn't agree with me, I know what I'm doing and I'm doing is right.
So just to add to what Abhijit sir is saying, and I can give you an experience because the bank which normally we audit has this policy of creating the provision on the NPA exposure. And he's rightly said that the thought is the same, that today if the bank guarantee is getting devolved or if the invoked by the bank and by the third party and you need to pay the amount, the big issue comes up in that will you do in few accounts or you will do across the NPAs. That's where the issue comes up and that's where the RBI picks up the bank. And just to avoid those kind of situation, what normally the bank do, and if they expect this kind of devolvement to happen, the bank compute a devolvement rate based on their experience of 3 years, 5 years, etc., etc. Basis the each classified accounts. Let's suppose you have a pool of account which are in substandard, you have a pool of account which is in doubtful, 1, 2, 3, etc. They try to compute a devolvement rate. They apply the devolvement rate on those NFB exposure and they then make a provision on that NFB exposure. That is one of the way how these provisions are created. The reason being is that if you create any provision which is not in line with the IRAC norm or which is not in, not prescribed by the RBI, you need to have an approved board policy. Then you create whatever provision you need to create. Because there is a subtle difference between a floating provision and a specific provision. These provisions may be considered as a floating provision by the RBI, and that's why they specifically hint on creating or making a board approved policy and then creating a provision.
This is really being conservative and it's a good practice. We had qualified a balance sheet only once in our entire career for excess provisionings because what the bank used to do it, when an account became an NPA, it never used to provide on the outstanding. It used to provide on the actual commitment and not just the commitment on the funded. It used to provide on the commitment of the non-funded also. It was so stringent. And we said, no, this is being too stringent. And I would not say that it gives a true and fair view because of the huge excess provision made. Especially the P&L doesn't give a true and fair view of the profit for the year because there's the commitment is there. There's no way after that NPA you will allow him to take that commitment, or maybe there is a commitment of a non-funded facility. You will not allow him to utilize that commitment, but they had said, no, it's a legal contract. And as per our country, once it's committed, it's committed. So even if it's an NPA, we'll force him to draw. If he asks a drawdown, we can't refuse. But yes, we had qualified for that in those cases. But again, it's on a case-to-case basis.
Jayesh bhai, next question is for you. Do we take as a branch auditor professional indemnity insurance, and where it will be useful? Like tomorrow, if I receive some show cause from RBI and they charge me some penalty, will that be, and what is the quantum? How do I take, do I take 5 lakhs ka professional indemnity insurance, or how much insurance I should take?
It will depend on the size of the practice and what are you expecting from that, anticipating the problem which may arise. But it's an advisable thing to do because in today's time you never know bomb कहाँ से गिर सकता है, कैसे गिरेगा, कब गिरेगा. And but उसके लिए जैसा अभिजीत सर ने पहले भी जो उनके लेक्चर में बोल रहे थे कि you need to document each and every observation of yours, because at a time when some problem is going to come, unless and until you are well equipped, आपके पास arms and ammunition is your documentary evidence. तो आपको you have to be prepared with your documentary evidence 24/7. वो चीज पे आप कभी भी compromise मत करो. अगर वो करते हो and when you are thorough with your guidance note circulars, then I don't think so that indemnity insurance will be required. But yes, it's a good step. You should take it depending on the size and the nature of problem which you are anticipating.
So I have another question on this, maybe for all the panelists or even Ketan, because I'm in no position to answer this. Is actually, even if you have taken a professional indemnity, the insurance is always covered by the fine print, what will be covered and what will not be covered. So I would really like to see the policy, whether negligence is covered or gross negligence is also covered. So I believe gross negligence will not be covered. That's my personal view, but I will still need to check back before so in case of an insurance, if there's a rash and complete negligent driving, I don't think the insurance company will pay you for the damage. The same way, if you are grossly negligent, I don't think the professional indemnity will save you. But again, I need to verify this. But good, very good question. I think somebody who's asked this.
Pankaj, sir, the question is for you. What will happen if one account is classified as NPA considering 90 days DPD on 15th December and subsequently borrower pays 2 EMI on 29 December? Now only one EMI is pending on 31st December. What will the status of accounts on 31st December?
So these issues were there, when you used to have a monthly NPA run. These issues will not be there now when you have a daily NPA run. Now, if I get the date correctly, 15 December, once an account has been classified as an NPA on 15 December, you can be only upgraded to a standard account unless until you pay the whole overdue, which we have discussed. And not only in the account which has got classified as an NPA, but in the linked account also. You need to clear off all recoveries, then only you can get upgraded from the NPA. This question or this point, which I will say November 12 circular on upgradation, has not hit the banks to that extent, but has hit the NBFCs in a large extent. Because what used to happen, and this is exactly what NBFC were having a practice, on 15 December, you are having these 3 EMI outstanding. On 29 December, they pay 2 EMIs. Again, you come below 90 days DPD. On 31st December, because they used to do a monthly run. On 31st December, when you run in the NBFC companies, these account will get classified as a standard account and not as an NPA account. So from banking perspective, this account will continue to remain in the NPA, and from the NBFC also, it will continue to remain in the NPA.
I think the question was very simple. That if an account has been upgraded, it can be upgraded only if the entire overdues are recovered. And entire overdues means not even one installment. It has to be complete installment and not to just in the facility which became an NPA. I think entire facilities, everything there has to be no overdue. That's what is the interpretation. The only issue is this circular was present in scheduled commercial banks all along. It was not there for cooperative banks. And RBI used this circular in one cooperative bank which we were auditing and found a huge divergence. And we had represented to them that what you had done is wrong. And we went to them with the circular and told us to show that where they are saying that if an account has been upgraded, all overdues has to be recovered. And it's only on 6 Jan 2020, Reserve Bank issued a separate clarification for cooperative banks also to bring them in line with what was there for scheduled commercial banks all along. So this circular is there all along. Banks were taking the excuse that we just don't have the facilities to calculate it on a monthly daily basis. That is where the automation of circular has come in, so that no excuse can be taken for the bank to have cases like that. So it's very clear, it has the entire overdue has to be updated. So this is an
one question for the central auditor is that, at time we see that MOCs are passed by SBA and CSs are reversing. So don't they confirm with SBA what are their views before they reverse?
नहीं सही, it is, see, if reversal happens generally if they are not in sync with IRAC norms, तो ही वो होता है. जैसे पहले जो बता रहे हैं कि पहले द बैंक पॉलिसी वाज देयर कि इट वाज टू बी डाउनग्रेडेड वंस इन अ क्वार्टर. तो अगर कोई मंथ में हो गया और उसके बाद अगले महीने में अगर वो अपग्रेड, मतलब 90 डेज डीपीडी के बाद अगले महीने में नेक्स्ट फरवरी महीने और मार्च महीने में अगर वो 60 डेज में आ गया, तो you will say कि as on February it was NPA, so now you should continue till entire amount is recorded. But if the board approved policy was that it was to be done quarterly, then it was done quarterly. अगर वैसा कुछ है which is not in sync with IRAC norms, yes, we do it. But generally, if any MOC is given and if it is to be reversed, generally no central auditors will do it without confirming with the branch auditor, unless and until it is very apparent कि yes, something has not been with line with the circulars. Otherwise, it is a practice to discuss the matter with SBA.
My question to you is, that if something is very apparent from the face of the record that it is completely wrong, then as a central statutory auditor, the statutory branch auditor has wasted his time and made him look at that entry, which itself should never have been passed in the first instance. Why waste further time by even speaking with him and telling him? Now, I believe as a professional, the only thing is that if some of my fellow colleague has done something wrong, as a matter of professional courtesy, I should speak with him and tell him that this was absolutely wrong, what you have done, and this is the right way, and this entry should be reversed. So one classic case is MOCs have to be passed over a particular amount. There's a threshold of 15,000, 25,000, it varies from bank to bank. So if an MOC is passed for 10,000, which is below the threshold limit, I will not even consider it. Why should I even intimate the statutory branch auditor that this entry is reversed at my end? I think what is, if it is completely wrong, then it need not be told. But yes, I think it should be told for the fact that if somebody is making a mistake, his mistake should be made known to him so that it doesn't commit the mistake again.
Sir, next question is for you, Abhijit sir. The question of intention. If the borrower forgot to pay interest of term loan from more than 90 days, in short, branch forget to transfer it from CC account, he has available working capital limit. All other formalities like stock statement, turnover, audited financial statement, renewal, all are in line with procedure, whether to make that term loan NPA and make the whole exposure NPA or not, and how to report it.
It's the tough question. The point is the borrower should not be penalized for what mistakes the bank has done. If there was balance available on record, and if that balance has not been captured by the bank, I think it is the bank's mistake. Now, I tell you what happened is in my case only, I had a car loan and I had transferred the EMI from one bank to another bank, and I had the acknowledgement, but the bank refused, or bank not refused, the bank forgot to take the debit, and my entries were not captured only of it. Though I had ample balance. In fact, the balance in my savings account was much more than the loan outstanding. But last three or 5-6 EMIs were not paid. Now it's my duty also to check whether it's being debited from my account. So I will not completely say that it's the branch's fault. It's my fault also. But in such a case, I will not penalize. I will not classify it as an NPA, but I will give a note. So not this case, but in another case, it was a big college, engineering college, having a limit of about 50 crores. And because of the fact that government grants were delayed, they were not able to repay the EMI. Now to call a college of such caliber and reputation and NPA because of something which was not their fault, it's the government's fault. We specifically did not classify it as an NPA, but gave a specific note that as a specific case, this account has not been subject to this account, so we qualified it, but we didn't pass the actual MOC. So I personally would not classify it as an NPA, though I would give all the disclosures of qualification and state the impact which it would otherwise have, because calling it an NPA will impact his CIBIL score or reporting to credit and spoil his credit rating. But technically, not much fault of it. I think the fault is that he should also check whether the debits have been done to his account. So he is also negligent, maybe 25%, 75% is the bank.
Sir, only one thing to add. इसमें question बहुत अच्छा है और बहुत important चीज है इसमें. If there is a authority or standing instruction given by the borrower to debit the current account or saving account for the loan, then definitely bank is at fault. You cannot ignore it. But if there is no standing instruction, in that case, the things will become bit skeptical, because then you will have to, but again, it's a call person to person, but then you will have to take a call as per IRAC norms, because it's not a mistake of the bank. In case of bank's mistake against standing instruction, yes, we are right. The bank, the customer cannot be penalized. But in other case, we'll have to really think about it, how it has to be dealt with.
Loan against shares, OD against shares, where I have a huge limit. I have not utilized the limit. So I have a 20 lakh limit. My outstanding is just 1 lakh. And there's an interest of 10,000 which has been debited. So one has become 110, 110 has become 120, but the bank has forgotten to recover. And I have also not basically passed any credit entry. In such cases, technically the account is an NPA and should be classified as such. It's the bank's mistake not to basically collect it from my current account, and it's basically my mistake also not to service it.
So another question, Pankaj, for you, like we have around 50 housing loan account which are sanctioned during the year. All the accounts are regularly repaying. However, during the statutory audit, auditor finds that the income statement based on which these facilities were granted are forged and the borrowers were not having actual income. But now if I look at the NPA criteria, objective criteria, they have been regularly paying all the EMIs of housing loan. So what do we do? Do we classify those accounts as NPA or not?
So I'll tell you a live experience of similar nature of the transaction. And this is nothing but a proxy funding to some builders. Because you have these borrowers, and I can give you an example that the builder was constructing a residential township somewhere outskirts of Panvel. Now the builder needed some facility, and obviously with the name of that builder, nobody would like to associate with him. He front-ended some of these Ola drivers. All these Ola drivers will had the income proof, everything was there, they were earning everything, and these amounts were transferred. I mean, these were made an application to these housing finance companies, which has funded. And these all income proofs were, one was the normal income proof, which normally they get money what they get from the Ola, plus others were the fabricated evidences. The returns were forged, everything was forged. And these amounts, when we finally traced back to their account statement, because it went completely into the forensic kind of thing, we identified that the day the loan was disbursed, they were immediately transferred, because this was a builder purchase. So immediately these money were transferred to the respective account of the builder, and the EMIs of these borrowers were also funded to the builder's account itself, because they were not having that much capacity or the income capability to repay these EMIs. All these whole accounts were classified as a fraud from our side and were made a provision, irrespective of the fact that these were servicing regularly, because the 90 days criteria, 180 days criteria, so on and so forth, are applicable to normal loan accounts. When the origination itself of a particular account is based on the forged document, irrespective of how the EMI has been serviced or how the account has been performed, was classified as a fraud itself. So that's all.
So one question is very good question. It's on the limitation. Like, nowadays I'm asked to fill up the data into the window of the software which is given, where somewhere I am given an opportunity to write, somewhere there is no space, or just the options are given yes, no, and I actually want to write something. So a lot of time auditors are attaching a separate sheet or they are writing in the other observation, but they are not sure whether the central auditors are getting it or not. So number one, the question is that, I'm not able to write what I want to write. So there is some limitation on my reporting part. And how do I communicate the same to the central auditors and make sure that they are getting this replies? Anyone can answer, no?
So last year we audited one of the branches of a public sector bank, and this was the exact issue what Ketan Bhai mentioned, because now all it's automated, you just spit up the details and then it is only to make the consolidation easy. What we did effectively, and we had this limitation of 1,000 words, 2,000 words in putting in that particular section of the LFAR. We signed the LFAR copy, we scanned it, and we forwarded it to the zonal office, we forwarded it to the central stat auditor, we forwarded it to the branch office also. So only because of a system limitation, only because the system is not allowing to put up certain words or characters, etc., etc. The alternate way is that send these copies to the respective branches, marking a CC to the central state auditor or to the zonal auditor, whoever is looking at your particular zone. That is one of the alternative way, because tomorrow, let's suppose if the RBI comes up and verifies or inspect that particular branch, he's not going to look at it, or the RBI may not look at what has been submitted in that some software, something like that. They will look at it, what you have really signed. And if you have given or send a copy to the LFAR to the respective branch or zonal officer, the defense you have well within your rights to present that copy to the RBI. So irrespective of whether you are putting it in the system or not, please sign a copy of the LFAR and give it to the branch management. So that way you can resolve this issue.
One question which was there, so somebody would have asked online. So the question was that if an account becomes an NPA post 31st of March, will you classify that as an NPA on 31st March? Obviously, no. And that was never what I had said. What I had said is that if a facility is regularized, which has been continuously overdrawn throughout the year, and if the facility is regularized by a credit at the year end, then the RBI circular is itself very clear that the genuineness of the credit has to be seen, and the auditor has to be satisfied of the genuineness of the credit, and the branch manager has to basically prove that. Now, if that credit is genuine, it's fine. If it's not genuine, then maybe if it's a window dressing or something, then you classify it as an NPA. Otherwise, a 90-day rule is a strict rule. The second fallout to this was that if the account has been upgraded by full recoveries and the account there is no recovery after the balance sheet date, now will you take that into cognizance? My question is again will be on a case-to-case basis. Ideally, no, but maybe with a note. And if there is something which is of a temporary nature, which was stuck up, then with full and proper disclosure, I'll consider this one. If the account has been completely closed, then I'll upgrade it. I will not classify it as an NPA on 31st March because anyway, as of 5th April, 6th April, it was closed. But if it has been upgraded by entire overdue recovery after the balance sheet date, I will still go on a case-to-case basis, but even after making full and fair disclosure. Now, this is something where I would write to the central statutory auditor that you take a call, is because that this may not be only a solitary case at my branch, it could be cases across. So what is the case view which is taken across the bank that can be considered?
Sir, this is the very common question for branch auditor, whether documentary evidence prove borrower has not shown 90 days debtors correctly in stock statement. And if recalculated the DP, the CC account is continuously excess of available, then what to do?
I'll add a flavor to this question that when I'm comparing with the previous audited balance sheet, the audited balance sheet of, let's say in current year, March 21, and stock statement, which was given in March 21, and I find differences across, like even in stock, creditors, debtors. So do I consider that and make the account as NPA?
NPA plus fraud.
Yeah, I agree. I mean, it's a clear-cut an NPA case. And just to extend that question, that not only the stock statement or not only the DP statement, sometimes you also need to look at it. What is the quality of stock which has been included in the stock statement? Because many a times the sanction notes or the approval notes prescribe that what you can include for computing DP. Like for example, you cannot consider the sales to the group companies or the receivable from the group companies for purpose of computing the drawing power. So you can go one step ahead and see what kind of stock has been considered or what kind of receivable has been considered for computing the drawing power. This is one of the areas where RBI is looking into it, that what kind of quality of stock or the receivable which you are capturing it. In this particular case, as said by, it is completely NPA plus fraud, right?
See, in this branch audit, the only thing what you can analyze in deep is the stock statement and the financial statements. और अगर आप लोगों ने वो कर लिया analyze thoroughly, then I am 100% sure कि कोई भी चीज आप मिस नहीं कर पाओगे. अगर आपने 3 महीने का स्टॉक स्टेटमेंट एनालिस कर दिया, मतलब you have got FFR also जो आपका क्वार्टरली आता है. अभी हमने एक केस देखा था, जस्ट शेयर विद द लाइव केस. FFR में वो बंदा लिखता है कि भाई उसका क्वार्टरली सेल्स जो हुआ है वो 10 करोड़ का हुआ है, एंड जब वो स्टॉक स्टेटमेंट देता है तो उसमें बताता है कि डेटर्स बिलो 90 डेज इज 115 करोड़ का है. मतलब सेल्स 10 करोड़ का हुआ है, उसका 90 दिन का डेटर्स 15 करोड़ का है. हाउ इट इज पॉसिबल? सो अगर आप ये चीज खाली लिंक करके थॉरोली देख लो ना, आई थिंक आपका एडवांसेस का ऑडिट बहुत अच्छी तरह से हो जाएगा. दिस थिंग हैज टू बी एनालाइज्ड थॉरोली अलोंग विद द एक्चुअल डेबिट्स एंड क्रेडिट्स इन द बैंक स्टेटमेंट. बस इतना कर लिया ना, एटलीस्ट आई कैन से यू विल बी मतलब क्वाइट कन्विंस्ड विद द वे यू हैव डन द एडवांसेस ऑडिट.
One of the members has asked question that you are saying that automated system, Pankaj bhai mentioned that, in the NPAs to be done automatically in PC. But as a branch auditor, how do we verify that, the system is functioning well? And because the branch managers are saying that IRAC is automatic and don't verify anything. So how do we verify that, whether it is automated, not automated?
If you find an MOC, there is no way the system is automated and working correctly. नहीं तो सब NPA automated ही आता था. The point is complete automation is a myth. There has to be a manual intervention policy. And RBI is very clear that the manual intervention policy should be there, and the manual intervention policy should be exercised at appropriate level. So अगर कोई NPA add करना है, it should not be at the level of a branch manager. Ideally, it should be at a zonal level or a central level. So to that extent, the branch manager can be excused, a branch auditor could be excused if he puts the ball in the court of the central statutory auditor. But yes, any MOC is a living proof that complete automation just can't happen.
Sir, next question is whether FD for BG margin can be made from working capital limit, as there is only one running account as per new current account circular.
No, it cannot be made. FD cannot be made out of the working capital account because the facility which has been sanctioned for a very specific purpose, which is for your regular business transaction. You can't be creating a investment out of it. And I have seen, if I remember correctly, in some of the sanction note, whenever these limits are sanctioned, now the bank has started putting it that for which items you can utilize these facility. And one of these for investment purpose, even though irrespective of that, you are giving it as a margin for the bank guarantees.
So any guidance on the how to check the gold loan accounts? And there have been cases of evergreening in gold loan. So if whether in gold loan or anywhere else, if there is a evergreening, how do we treat? Do we make those account NPA or how do we do it?
So gold loan is a known fact that it has been used as a evergreening, not only in the non-priority, but also in the priority segment, both. And normally they are pushed from the perspective of achieving the priority criteria in the agri ancillary segment. Now, if you found these instances and if you are observing that these have been rolled over for a considerable period of time, 1 year, 2 years, this account is completely running. One day there will be certain credit which will come on a due date, and the second day there will be disbursement which is done on a particular due date. These are the accounts which are normally, I can say, passive NPA accounts, may not be an active NPA account, may not be fitting into your 90 days DPD criteria. And if you have this regular phenomena, you need to downgrade this account to a NPA. If you don't downgrade it, the RBI will come and downgrade at the later point of the time.
So you are talking of cases where account has been repaid on days 1 and day 2, again a fresh facility is transferred. There have been cases where a new loan has been sanctioned on the same day where there is no security. It's just a dummy loan just to repay the old loan. The credit is given to the savings bank account. The money is withdrawn from that savings bank account same day. and again it is deposited to clear the old loan. So at one temporary point of time in the system, there are two loans existing, two gold loans, one with gold, one without gold. Now, when the new loan which is sanctioned, again, there is no valuer which is coming in. There is actually no transfer of funds also happening between the account. It is just a dummy book entry. So this is something where gold loans actually one needs to really verify. Things can be really not as good as or not as shining as they may look from the outside.
So one last question. In case of so the queries want to ask on the renewal of the document that if the documents are not renewed in time within what RBI limit is, and we are classifying or we are proposing as an auditor to classify that as account as an NPA, but he says that how do we calculate over there the days, because the information sometime come in piecemeal, sometime it has come, sometime it has not come, and the renewal has not happened for various reasons. So how do we calculate whatever number of days are there, and do we, make those account as NPA or we leave them?
So this issue was there, I can say, before the August circular, which was issued by the RBI, that, the short renewals or the frequent renewals, etc., should not be allowed. Now, in this particular account, if the limit has not been reviewed in absence of documents, not supported by the borrower, the day the expiry has happened of that particular account, that should be the date of NPA. And in some of the instances, we have taken that stand because that's what the day when the account was supposed to be either repaid or the account was supposed to be renewed, because that's the day when the 1 year term gets over. So if the account has not been reviewed on that particular day without giving the 90 days grace period, because somebody, when we were classifying that account as an NPA, the branch or the bank were of the view that, okay, you take it as an NPA, but you give us 90 days period. We said that there is no concept of 90 days period in case of short renewals. It is only in case of interest or principal amount, because that's the criteria when it falls. So in those cases, wherever the renewal is pending, the day of the limit expiry is the date of NPA.
For short renewal.
For short renewal.
For short renewal. If it is a regular bill, then 90 days will apply.
Yeah.
So one question on NRI, the funds received in NRI account, how do we verify the source of the foreign remittance? And are we responsible to see under Prevention of Money Laundering Act? The question is, in some NRI account, the funds have come from foreign. So as an auditor under the PMLI, Prevention of Money Laundering Act, am I supposed to see the source of the funds?
It's come from an authorized bank. AD. It's come from an authorized bank, and it's come through the normal banking channels. The point is, who is the customer and what is his economic profile which I have captured? Does that economic profile warrant this credit? Now, it's nothing that it's a foreign currency or an INR. If it was an INR account and I would have received money from somebody, it did not warrant that credit. So if it's a student profile, and there is a 10 lakh, 20 lakh credit coming in, I will classify it as STR. Same way, this person may be an NRI, but he may be no great professional or a nobody, and there are ample credits coming to his account. I would obviously classify that as suspicious transactions, because the credits in the transaction no way warrant based on his economic profile.
So 1 minute. Exactly, what the billing facilities are aware, these to be not be limited. Margin of the that is not to be limited to the ministry of single account, CC account. Nothing is all set proceeds are deposited in those CC account.
No, so I think the question was that whether you can create FD margin out of the CC limits.
So you are right. If the money, the proceeds have been credited and you have sufficient balances in the CCOD account, then you can create an FD out of that. Now, if you're creating a FD out of drawing your CCOD account and it is going beyond the drawing power, which is there, that is not allowed. After having a closure of the current accounts, this is the issue which is coming up. And obviously, if you don't have any current account, you will park all the funds into this particular account for creating the bank FD. But I think the question was, can I create it? You can create provided you have an adequate limit available with the CCOD.
So next day, same process will be credited, or some
So I think I would restrict my comment to say that as an auditor, I would not recommend that to happen, that you overdraw your CC limit and create a FD out of it. If you have a sufficient limit available in your particular CC account, you can create a FD to that extent. Now, next day, whenever you are getting the money, you can create a FD at that particular point of, you can create at that particular.
So this issue will have significance when you are sanctioned a CC limit and the condition is that you should have a FD of, let's say, X amount. In that case, if you are creating an FD out of your CC disbursement, then it will be having a problem, even though you have balance. But then it will be a problem because there is a precondition that you should have an FD. So first FD should be created. This question is linked with that. Otherwise, if in a regular account, if you have a balance, then definitely you can create it. Now, in respect of that NRI question which you asked, it is very important question which is there. See, the issue is that during the course of audit, our entire focus is on the advances part. यहाँ पर how many of you are there who are or who have been SBA? Just please raise hands. Quite almost everybody. So now just tell me कि आप लोग जब audit करते हैं तो उसमें से how many of you have focused on the deposit side? आप लोगों ने जितना आप एनालिसिस एडवांसेस का करते हो उतना डिपॉजिट का कौन करता है? Practically negligent person. So the question becomes very relevant in this case because if there is any, जैसे अभिजीत सर ने भी कहा कि भाई to that extent forget NRI, अगर forget the foreign remittance, even in case where the person is having a saving account and उसके पास अचानक 10 lakh 1 crore का balance आ जाता है, then there is a question which has to be raised in respect of money laundering कि how the money has come. Then it can create a problem for you at a later stage कि भाई you have done the audit, आपको ऐसा बोला नहीं गया कि भाई आपको खाली एडवांसेस की ऑडिट करनी, you have to do the entire audit. तो अगर वैसा कुछ आ जाएगा तो you will have a problem. So it's आपको हमेशा बैंक में एक एक्सेप्शन रिपोर्ट निकलता है, वो आपको लेना बहुत जरूरी है in case of deposits also, because ऐसे such cases में deposits में issue आएगा आपके. And the problem in respect of that NRI का जो बोलते हैं उसपे issue will come more in case when there are NRI deposits and it has to be renewed without the when the terms expire. उस टाइम पे जो the concept of auto renewal which is there in the normal FD, अगर NRI में अगर आप उसको auto renewal करते हो, जैसे FCNR deposits वगैरह है, उसमें अगर आप auto renewal करते हो तो उसमें there will be an issue because FCNR is allowed only for an NRI. So at the time of renewal, you will have to first satisfy yourself that that person is still an NRI at the time of renewal of deposits. So issue will come there. So there you will have to take proper precaution. If you are doing it, you will have to ask for the documentation regarding his status of that particular individual or the account where the renewal is to be done.
Just my last question on LFAR, that there is one question in LFAR about window dressing. So the question is, how do I search window dressing? I'm supposed to comment in LFAR on window dressing.
Window dressing, see, its best part is that you take the balance of the, आप general reconciliation कर सकते हैं, आप you take the balance of advances and deposit particularly in the last week of March and first week of April. आप ये 10 दिन का डेली का इनका डिपॉजिट और एडवांसेस का स्टेटस ले लो. काफी बार आपको पता चल जाएगा कि भाई डिपॉजिट इज इंक्रीज by 10 crores, advances are increased by 10 crores in last week or particularly last 2-3 days, and suddenly after March, within a period of 7 days, it is reduced. So that exceptional thing you can just verify, and then that will be sufficient evidence to say that it was a window dressing. That is something. Overall reconciliation आपको last week of March and first week of April का करना चाहिए. Any view?
So I already said that the branch manager is not allowing me to close the loan. So that is window dressing only. I have money. He's not allowing me to close the loan. At the second point of time, he's saying, you get me some deposits. I have a target to meet. So I place some deposits. Or at he's saying that please overdraw your CC. Yani I have a 100 rupee limit and my outstanding is only 20. By 50 rupees to withdraw karke 70 rupees to rakh. So what I said is it helps us because advances increase, and if the advances go over a threshold, mera fees badega, but that's not what I would like my fees to be increased in this manner. But this is window dressing which I can't catch straight. The only logical window dressing which I can, which Jayesh said, is I compare deposits or advances on 31st of March, what has happened in the last week, and suddenly I find a huge change in April. That's the only way I can comment. मेहनत करवा यार.
गुड इवनिंग. जयेश भाई ने एक बहुत अच्छी चीज बोली थी कि हम एडवांसेस साइड तो बहुत देखते हैं, डिपॉजिट साइड्स में हम नहीं देखते हैं. व्हाट देयर इज एन ऑब्जर्वेशन इवन ड्यूरिंग द ब्रांचेस, लाइक फॉर सीनियर सिटीजन्स का इंटरेस्ट रेट इज गिवन एज पर द रेगुलर इंटरेस्ट रेट, जबकि सीनियर सिटीजन्स को 0.5% ऊपर देना है, राइट? अगर वो 0.5% ऊपर नहीं दिया है, so and if you observe it, then there has to be an additional provision needs to be created. Similarly, FDs के अगर कुछ interest last 2-3 days के नहीं आए, so then there is a provision needs to be created. So just not the advances, deposit sides में जैसे ये है, along with the securities में है, accounts में whether the securities are proper or not, the valuation of securities, even in the NPA accounts, the security also needs to be checked on time. Maybe apportioned, there are multiple accounts, so whether it is properly apportioned to that particular account or it has been spread into multiple accounts, so that needs to be checked at the जब audit कर रहे हैं तो ये सब चीजें भी check करनी चाहिए, right? Thank you.
Thank you, sir.
I think last 1 hour was again a very, very fruitful discussion we had, and we tried our level best to resolve all the questions which were asked since morning in the chat box. On behalf of Western India Regional Council, let me place on record sincere thanks to all the learned speaker, Pankaj Bhai, Jayesh Bhai, Abhijit sir, and also the colleagues of Jayesh Bhai who all the way came from Indore, and they also shared their views. So, sir, we are thankful to all of you for sharing your valuable time and making this session very, very interactive. And on behalf of Western India Regional Council, let me thank all the participants. You have been, giving a very patient hearing since morning 10 o'clock, and it's already 6 o'clock. So on behalf of council, let me thank all the participants for having participated in the seminar of bank branch audit. Thank you so much. And with this, we close the seminar. Some question is asked about the PPT. So with the request to the speakers, if as and when these PPTs will be shared, definitely wherever you people have given your email ID, we will share on those email ID the PowerPoint presentation. If you have not given, you can give outside your email address. One question at the closing, somebody dropped about non-corporate borrower. The limit is 10 lakhs to the best of my knowledge. There is no, depend on the bank to bank. Okay, fair. So I stand corrected. So please check with your bank, whoever has posted just now that in the question box. So check with your bank what is the non-corporate audit limit, and based on that you can take the final call. So thank you very much to each one of you. Thank you so much.